claiming that indeed it was one of these big missiles, hypersonic missiles, that led to that risk premium. So there's a bit of an upwards bid in crude even this morning. Yesterday it was about 2% and even this morning about 0.5% on the higher side. Just now coming to the market here, yesterday the flow situation is exacerbated because of the Adani impact. The FPI number is well over 5,000 once again, and we haven't seen a plus 5,000 sell number in a while. Yesterday, obviously, it was because of the slam dunk on those shares. Domestic institutions were trying to offset a lot of that impact with the net purchases of 4,200. I'll just come to a couple of interesting stocks. While the market will, of course, hope that we respect the boundaries today, the bulls will hope for at least a little bit of a meaningful bounce. In terms of stock action, Protein governance is something that will be on my radar. The NSE holds about 20% stake in the entity, and it's selling this. Remember, it's diverse financial institutions that have ownership of this entity. They look at data collection, Aadhaar, and so on and so forth, and a lot of our tax-related data points. So 20%. There's an OFS that's coming. And Tata Power is very, very interesting, I thought, because at a time when the Adanis are struggling with their green energy initiatives or this whole talk of scandal and bribery and whatnot, Tata Power went ahead and did some large fundraising with the Asian Development Bank yesterday, about 4.25, and some of that is going to go towards their renewable projects. They just announced something in Bhutan as well. So that's another stock that's going to be in focus. But I guess, Nigel, the bulls will just hope that we protect the lows, have a little bit of a meaningful bounce, and it doesn't get sold into today.
Well, that's right. And in yesterday's trading session, the Nifty was down close to around 170 points. But things were not too bad. And I say that because, the India VIX, that didn't balloon up in yesterday's trading session. Yes, it moved up by close to around 2%. But given the fact we were down more than 170 points, or it wasn't too bad. Even the mid-cap index, periodically that index moved into the green, in fact, during the trading session. And a lot of stocks saw buying interest from the low point of the day. So that's why, though we ended lower yesterday, I'll say it wasn't too bad. But this morning, we're waking up to cues. And when I look at the global cues, the various indicators I look at, the 10-year yield, well, that's still holding at around 4.4%. Crude oil prices moved up a little bit, but they're still at very, very controllable levels of sub $75 per barrel. While the dollar index, that's the worry, that's still holding at around 107. So, taking all these cues into consideration, I think the street would like to go into, the election results, factoring in that the BJP government will do well in both the states. And that's why I believe some kind of optimism will play out in today's trading session. And maybe we see a buy on dips market that plays out, at least for today's trading session. Moving to what did the FIs do yesterday? Well, they added shorts yet again. They added close on 10,000. Short contracts, they continue to remain net short on the index. And as we've been saying in the last few trading sessions, the FIs, they're net long with net short with close on 2 lakh contracts on the short side. While the clients, well, they in fact are net long with close to around 2.8 lakh contracts on the long side itself. So both of them at opposite ends of the spectrum. Moving to the options data, well, we start the new contract, which expires in the next week itself. The 23,300 call and the 23,300 put. Now, the narrow range between this, if there's a strategy playing out, which is known as the short, a short straddle that's taking place. They're looking to pocket close to around 400 rupees and hoping that the Nifty, expires in this range. 400 points higher than 23,300, 400 points lower than the 23,300 odd mark, which gives you a broad range, 22,900 to around 23,700 odd. But if you're looking at a tighter range, the 200 DMA becomes important on the upside. The bulls will want to get past this. And the reference point on the downside comes in at around this 20,263. But the Nifty bank, that will have to fight back. And in yesterday's trading session, the reason that it didn't look so bad is because the Nifty bank went to the 200 DMA and bounced 400 points from those levels. So if you look at the chart, yesterday, in fact, we breached the 200 DMA. And from there, we did pop up as well. The Nifty bank needs to fight back, and that's been showing signs that it wants to do that in the last few trading sessions. Finally, the stock that I'm looking at is Protein. The reason I'm looking at it is because NSE is going to be selling a close to 20% stake that it has. I'll tell you what, it's good for both parties, because for Protein, well, that was the overhang that the market was looking forward to. And this OFS, once it's out of the way, it gets back to business as usual. So, the stock will open up lower, but it could be a good opportunity. That's one. And for NSE, maybe it moves towards the path of listing. That's the sense as well. So we'll keep an eye out on Protein, which is a listed one.
Oh, yeah, absolutely. I mean, that's going to be probably the stock of the day from the interest perspective. But guys, I just want to highlight the dollar once again. I was looking at the move in the last, I think, 10 odd minutes. It's crossed last week's high, 107.09. So the march on the dollar is something. Let's see, I mean, if that spoils the bulls' party, it was quite a dramatic move just in the last couple of minutes.
Party should be.
Sorry?
Poor bulls, they're waiting to party.
Hopefully trying to get it started on a Friday, but let's see if they succeed. 107.10 now.
Is the old one, right? Is it that I heard it when I first moved to Bombay. I said, but I think it was one of those bear phases that the only place you can find a bear is the Baikala Zoo. I don't even put the word. I don't think I need to go to the zoo to catch sight of a bull. But anyway, Anurag Singh is with us, managing partner at Ansett Capital is now with us. Anurag, good to have you with us here. Thank you for your time. I mean, of course, yesterday, I reckon would have been different had it not been for, of course, all the Adani news flow. So where are we now, in your opinion, Anurag? For those who are watching, not just for trading the Nifty or this stock or that stock, but broadly how to kind of look at the market and whether one should be looking to buy things or sit on the sidelines. Where are we at in terms of answering that question?
Prashant, morning. I think, Prashant, if you look at Indian markets, I think let's just look at this broader perspective. I mean, go to 2019, Nifty was somewhere around 2020, start of 2020, it was at 12,000. And I would say, assuming a 12% CAGR per year, I mean, you expect in 6 years, Nifty doubles. So I think even if Nifty absorbs the 2025 year, by end of 2025, it's at 25, 26,000. I think that's a reasonable return to expect. I think that's where I see Indian markets heading to, Prashant, especially in the context of, so much money trying to catch the rally within US and some of the other tactical rallies, say Argentina, say Japan, say somewhere else, maybe in Europe if the war ends, right? So broadly, this is where I think, and ultimately this is in line with the long-term trend of Nifty, Prashant. So I mean, I understand there is a bit of a panic right now. Small cap and mid cap is a very different story. I think investors better know what they're doing in that space. But I think broadly for the markets, I think it's a story which really ended up with taking a spike in 2021, 22, 23, and now settling down with a more moderate average 12% CAGR for the returns, which is in line with the broader economy, Prashant, I think. So that's where I stand. That's with respect to the Indian markets.
Anurag, hi. So you're unfazed. Good to know that. In which case, what would you like to buy in India? I mean, the market is off 10% off the peak now, and stocks, many of them are down between 30 to 40% off the peak.
So, Surbhi, I'm unfazed because I'm not, so let me explain you the context. We are 90% in US markets, 10%. So I think we are not typically, our fund is not a replica of how you should take positions in emerging markets, because we don't take more than 10 to 15% positions in any emerging markets at any point in time. So I'm unfazed because I'm here in US markets and you know what it is doing these days, right? So that's all good. But I think having said this, I think, Surbhi, our approach is very macro, very top down, and we don't really indulge into anything beyond Nifty top 100, right? So we stay within IT, discretionary, consumer, and banking within Indian markets, right? And that's a very macro view. Just to quote an example, Argentinian market is like 45% up in year-to-date terms, right? So we take such tactical positions. That's in no way is an indicator of how Indian markets should be doing or should be, where the potential lies. So yeah, currently I would say we are only positive on banks in Indian markets. Everything else is super expensive. It needs to take a time correction. And that's just a technical call. It's no way a judgment of how the growth should unfold in Indian markets.
All right. Got it. Hi, Anurag. Good morning. And good to see you in. We keep asking guests whether, how to view India, how to view China. Do you think post-Trump coming in as US president, you could rather see broadening of the US market rally rather than money moving to other emerging markets? Because I'm just looking at the last few days, the Russell 2000 on a day-to-day basis is outperforming, which wasn't the case a few months earlier.
Yeah. So, Nigel, look, Russell did not even touch even now, it's below its 2021 peak, right?
Yeah.
So it has still not touched the 2,500 levels, right? So I think that has been the challenge with this rally. Even, we understand US markets in a lot of ways, people say is expensive, but it is so concentrated in these 7 stocks. And it's only now for the last 4 or 5 months that the broadening has actually really begun to unfold, right? Even we see on a daily basis, there are stocks which are gaining 5, 6, 7%. So, and that's not a froth, because it's really catching up to the high multiple rich valuations and the safety trade of the technology, super big tech trade. Now, I think in terms of look, Nigel, we don't have to take it as a country-specific view. I think these are all tactical calls. India is the bright spot. China is just a trade. I don't think, and people I talk to, nobody's making the case as China is turned around for the long term and invest there and go to sleep and all that. People are just taking the tactical trade. These are all tactical positions. India is the only market where people say it's a consistent, bullish, 20-year decadal story. I agree with that. However, the fact is that you should not hesitate to take money off the table when you feel that there is a bit of froth in the market. And I think today we are at that point where some money should be taken off the table. Nigel.
All right, Anurag, we leave it there. Good conversation as always. Thank you very much for joining us and being here on the program today. So, I mean, that's the first opinion coming through, and we'll get you a lot more. Let's quickly tease out what's lined up here over the next 2.5 hours or so. So, 8:35, we'll be joined by the management of PG Electroplast. We talk about the company's foray into EV manufacturing. That's the big one. We've asked them, what is this new line of business? Last time also, remember, the company was on. We put that question to them, what we know now. 9 a.m., we have Rakesh Arora of GoIndiaStocks.com joining in to talk about the outlook on the cement sector. 9:20, Gautam Dugar of Motilal Oswal Financial Services, Market Master of the Day. 9:30, we have the management of Blue Star with us to discuss the company's business outlook. Nilesh Sathe, former IRDAI member, will be with us at 9:40. Life insurance stocks have been under pressure lately after Finance Minister comments on bank assurance. 9:50, you'll hear from IBA Chief Executive, and of course, the situation as far as the banking sector, the new guidelines from the RBI implications, and of course Indianomics with Lata. She'll be in conversation with Soral Verma of Nomura and Rupa Rege and we'll also have Pulapare Balkrishnan, professor at Center for Development Studies on the inflation interest rate dynamics. Those are conversations lined up. Stay with us.
For the time being, though, we'll slip into a short break. We'll focus on a lot of stock-specific action. For the time being, we run it through the list. We're looking at Tata Power, SJVN, Afcons, Man Industries, ACC. Well, they'll be reacting to positive news flow. Add to the list NLC, JSW Energy, and Emphasis. On the flip side, Protein E-Govern, as well as Apollo Microsystems, will be reacting to negative news flow. Slip into that break, come back, get into further detail on all of these names. By the Department of Justice in the United States, and that is despite a year had transpired since they received the notice by the FBI, the search warrant by the FBI, which had very clearly listed out all those allegations and concerns with respect to bribery, and that the US court concludes is in fact making false as well as misleading claims. And what is important is that there are detailed obligations listed out under the SEBI norms for listing, for disclosures under the SEBI Act itself. And the apprehension is, we've spoken to very many legal lawyers, what they tell us, the apprehension is that this could very well be a fit case for SEBI, the market regulator, to take action for these misleading claims.
A big day, a major setback to the Adani Group, because this is the US Department of Justice, a court in the United States which has opened an indictment against Gautam Adani and his nephew Sagar Adani and 7 others. Got the US Securities and Exchange Commission, which has also made charges against the Adani Group and members of the Azure Power Corporation. Essentially, they have said that both these companies got together, colluded to gain government contracts for the Solar Energy Corporation of India, because they were working with this company for solar energy, and in order to get contracts from different state governments, they tried to bribe Indian officials across the country, primarily in the state of Andhra Pradesh, and offered bribes to the tune of over 2,000 crore rupees. Now, why has this become important? Why did the US courts take cognizance of all of this? This is because the US courts believe, and the US Securities Exchange Commission believe, that they have raised capital from the US markets while bribing officials in India. So this is a major allegation. They have been charged under the Foreign Corrupt Practices Act and the Extortion Prevention Act of the US. Primarily 4 counts against them. conspiracy to violate the Foreign Corrupt Practices Act, securities fraud conspiracy, wire fraud conspiracy, securities fraud relating to 2021 bond offering, and conspiracy to obstruct justice as well, because both these forums in the United States believe, legal forums believe, that the accused have destroyed evidence as well.
You know, your 70-hour comment has gone viral and you're not going to be able to live it down anytime soon. And any change in thinking on that one, or do you believe that you were just grossly misunderstood?
No. First of all, I don't believe in work-life balance. The only way we can show our appreciation for all these wonderful things that are happening.
Welcome back. Well, the cues are all right. I mean, not too bad, you could say. The question is, what about stocks? And that's the implied open. Look at that. The bulls really want to charge ahead, make a comeback today. Let's see if they can manage to do that. Now, in terms of individual stocks, there's plenty to track this morning, and our team is standing by, as always, with the CNBC-TV18 list of top stocks to watch. Guys, morning and happy Friday to all of you. Vamakshi, let me open with you. What are the names on your radar?
Well, good morning, Surbi. Let me first start off with Protein eGov Technologies. The stock is expected to open lower today, and that is because NSE Investments is looking to sell up to 20.31% stake in the company via OFS, or that is offer for sale. OFS includes base issue of 10.16% equity and has a green shoe option of another 10.16%. The floor price for this issue has been determined at 1,550 rupees per share. It opens for non-retail investors today and for retail investors on November 25th. Since this is a clean out trade coming in from NSE Investments, going with the red for discounter. Apart from that, keep an eye out on Tata Power. The company has signed an MOU, that is a memorandum of understanding, with Asian Development Bank. They will be evaluating financing worth $4.25 billion for several of its key clean power projects. SJVN is the next counter that I'll be watching out for. They've signed an MOU with the Rajasthan government's Energy Department for development of renewable energy capacity in the state. Under the MOU, SJVN would develop nearly 5 gigawatts of pumped storage projects and 2 gigawatts of floating solar projects in the state of Rajasthan. And lastly, let's focus on Afcon's Infra. They have been declared as the lowest bidder for a project worth 1,274 crores from Uttarakhand Project Development and Construction Corp.
Okay, all right. Thanks a lot for that, Vamakshi. Well, let's hop across to Vinny. She's here with some more stocks in the news. Vinny.
Good morning, Nigel. So yes, we have some important news flows coming in for Apollo Microsystems, because we're seeing that the company has received a withdrawal consent from some of the allottees and subscribers for its convertible equity warrants. So we're expecting a red over here. The name of the allottees who have withdrawn their consent is Eminence Global Fund, PCC, North Star Opportunities, as well as AG Dynamic Funds. And the reason is mainly because of the delay in opening the preferential offer. Moving on, we have MAN Industries that's in focus. We're expecting a green here. Now, the company had spoken about divesting its non-core assets previously, and this one is Manerios Shelter Private Limited. MSPL is what the company is calling. They're looking to divest the stake, and this is going to happen in the next 3 months. The company MSPL, that is a wholly owned subsidiary of MAN Industries, had around a 200 crore revenue in FY24. So keep an eye out on this one. ACC, NLC, as well as JSW Energy, they are going to be in focus because they are among the 5 companies who have bagged 5 mines at the first day of the 10th round of the commercial mine allocation. So ACC has bagged the coal mine in Madhya Pradesh. NLC India and JSW Energy Utkal has bagged 1 block each in Odisha. So keep an eye on that one. Lastly, Emphasis also is in focus. We're expecting green here as the company has signed a partnership with MoneyGram has F1 team, and this is going to be revolutionizing the motorsport performance for that F1 team. So keep an eye out on that one.
Okay, got it. Thanks very much for that, Vinny. NLC India, remember, in a falling market yesterday, was up some 7-8%, and now the news is out, so you know the excitement. Let's quickly recap our list of top stocks to watch. The ones that have positive news flow around them are Tata Power, SJVN, Afcon's Infrastructure, MAN Industries, ACC, NLC, JSW Energy, and Memphasis. While stocks with negative news flow are Protean eGovernance Tech and Apollo Microsystems. Okay, so those are the stocks to watch today. What about the commodity cues that we're getting? We have Manisha with us for a quick roundup. Manisha, the countdown is on. 100,000 USD. Is it happening or not? Bitcoin.
As it happens when you're waiting for that very important psychological level, it tests your patience as well, and that's exactly what Bitcoin seems to be doing. So near yet so far is how we are trading with it, and it's trading exactly at 98,000 even as of now. So it looks like before this weekend ends, and by the way, there are no weekends for cryptos as well. Remember, they travel 24/7. So, well, we could be looking at that number. But the gains also have come back in many of the commodities. So when you look at the gold prices, we are trading at a one-week highs now. The prices have gained up by 4% in this week. There is safe haven buying, and intensifying Russia-Ukraine tensions clearly seem to be supportive. Same is the case with crude oil prices. These gained 2% overnight. There is an OPEC meeting scheduled for 1st of December. Would be interesting to see if OPEC yet again postpones increase in output production. Apart from that, there are various Fed official speeches as well slated for today, so the markets would get the next direction from that one.
All right, Manisha, thank you very much for that. So that is the picture coming through with the commodities space as well. We'll take a quick commercial break here. Siddharth Khemka is going to be joining in for some fundamental stock talk. We'll also, as promised, have the management of PG Electroplast join in on their new foray. Stay with us.
Our working God. Frankly, I was a little bit disappointed in 1986 or something when we moved from 6-day week to 5-day week. I mean, I was not very happy with that.
What is work-life balance for you?
No, to me, I think giving time for family, for health, and work, all three are very important. I think to be successful at work, one has to work hard. But I think you can offer an array of menu to employees.
So has the menu widened over the years? I mean, from when you took charge to where it is today, has the menu widened significantly?
I think the offering has completely changed. You're being much more purposeful as a company. You're being looking at all these other aspects that I described, in addition to just focusing on outperformance.
Sagar, let me ask you the same question as well. How are you dealing with this culturally? What has been the change on your menu to keep employees happy?
I feel like there is no right or wrong in these things.
Yeah.
It's not our place to enforce what we think is right or wrong on the people who work with us.
Yeah.
For me, for example, I don't think of work-life balance. I think more of work-life harmony, right? Because I'm always working when I'm not at office, and I'm always available for family when I'm at office as well. So I don't think of it as a clear line where
it's not siloed.
It's not siloed where post 6 p.m. you don't pick up work calls, or when at 2 p.m. you don't pick up family calls, right? Like it's that's how I think about it.
Yeah.
There's nothing right or wrong, but I always think of it as making sure that the people who I surround myself with, the people who work together with close colleagues, are all people who are extremely passionate about what they do.
Gina, let me ask you, how are you dealing with this, and what have you changed, if anything at all?
The new generation is very well informed. They're very, very clear in terms of what they want. I think their preferences are very different. They have a very unique view on the world. And I think companies will also have to adapt in terms of whether it's their employee policies or their way they target those customers. I think we'll all have to evolve, and at Torrent we are evolving. For instance,
so what's the big change that you've made?
So for instance, our employee policies have a great.
Welcome back. So let's get you a very interesting exclusive conversation now. This is about Zepto. Now, Zepto has raised $350 million in what is the largest 100% domestic fundraise for a private startup in Indian history. The quick commerce delivery platform's co-founder, Adit Palicha, spoke with Shireen about the rationale behind the company's fundraising and why he's chosen to go all Indian.
You know, when we spoke in August, you said you're not looking at raising any more money. What's changed?
So we raised over $300 million. It's the largest 100% Indian fundraise for a private startup in the history of this country, right? And we're proud of it. The reason why, when we started this financing, we had over $1 billion of net cash in bank, no debt, right? We're growing well. And the reason why we raised this capital, candidly, is because throughout the entire life cycle of Zepto, we've always wanted to bring on board domestic capital. Both, Keval and I are excited about the fact that we can build like an Indian company that people can be proud of. But there never really has been risk capital of that scale available to private startups. And so, we pushed, I remember from the Series A onwards, Series B, Series C, Series D, we tried to get domestic investors on board, but it wasn't the right time. We saw an opportunity here with Motilal Oswal and their team. And, we went into it not really with many high expectations, but we were able to pull it off, and we're quite excited about it. And the rationale behind, doing a domestic fundraise is fairly simple. We had over $1 billion of cash in bank. Now we've got over $1.3 billion of cash in bank.
Yeah.
But this domestic financing just helps us increase Indian ownership going into an IPO. We think that benefits the company long term. One, just public trust and shareholder trust going into a public company. It's better to be owned by high quality Indian names, right? And historically we've been limited to Silicon Valley VCs that are not very familiar, or that Indian institutional investors and Indian retail shareholders as well are not familiar with. And B, even just from a regulatory and government lens, we think being an Indian company is favorable. And lastly, it's the ambition that Keval and I have always had to build like an exciting Indian company.
But is that the real rationale, of being Indian owned, so that the FDI regulations, especially the FDI regulations to deal with retail and e-commerce, don't necessarily constrain you?
So, number one, I mean, even today, we are 100% compliant and respect FDI laws, right? We've, essentially maintained the same successful e-commerce models that have existed in this country for over a decade, right? And, we've built a lot of depth, not just in FDI compliance, whether it's, for a fairly young company, having a Big Four statutory auditor, right, with, and, pulling off a financial year closure with no qualifications, that's one example. Whether it's GST compliance, whether it's income tax compliance, whether it's even, our best efforts on FSSAI compliance, we've worked hard there. So we're not concerned by FDI compliance. We feel confident in the work that we've done, and we're compliant.
Not necessarily compliance. What I mean is that do you feel that the FDI regulations don't give you the flexibility to do the kinds of things that you may want to do? Because we're given to understand that this is what Zomato is looking at as well as it grows out Blinkit, and which is why they did this big fundraise as well.
Yeah, no, look, it's less about the FDI rules opening up more business avenues. It's more about, being an Indian-owned company and putting that debate to rest on, as we get to larger and larger scale, is an Indian company or a foreign company?
Well, and you can catch excerpts of this exclusive interview all through the day only on CNBC-TV18. Well, as promised, let's get chatting about PG Electroplast. The company's arm, PG Technoplast, has announced its foray into EV manufacturing and has signed a definitive agreement to manufacture Spyro EVs in India. To talk more about this development, we have with us Mr. Vikas Gupta, the MD Operations at PG Electroplast. Hi, Mr. Gupta. Good morning, and thanks a lot for joining in. Well, you had hinted last time around that there's something coming up, and that was bang on what you announced late last week. Tell us more about this. Does the company have a capacity for the EV segment, or do you have to put on fresh capex? If it's going to be fresh capex, what is the number we should be looking at?
Good morning, Nigel. So basically, this is exciting, and the company itself is very excited about this entry into the EV space. So basically, Spyro is Africa's largest two-wheeler EV company. It has been recognized as one of the most, like Times 100 most influential companies in 2024. So we'll be setting up a new capacity. So we do not have an existing capacity to get into EV manufacturing. So we plan to set up a new capacity to do EVs. The investment in this will be not very large. The investment will be around a couple of $1 million in that. And I think the overall, we are very excited on this.
Couple of million, could you quantify, sir? How many million? Couple could be anything, right?
So it can be around a range of around $3 to $4 million to
How
start
is that, Mr. Gupta? Hi, good morning. $3 to $4 million for a EV manufacturing, that seems quite low, frankly.
So please understand, Prashant. Yeah, Prashant, good morning. So basically, it will be purely a assembly line setup right now. The local value addition will be quite low. But as the business grows and we are able to scale up the volumes, we'll be going for a further capex and maybe going for the increase in the localization content. So
right now you're getting all the parts imported, you're assembling it here to be sold here in India. That is the arrangement.
Yes, so the local value add will be almost around 20% right now. But we aspire to take it to a level of around 40 to 45% in 2 to 3 years' time.
You know, last couple of times when I asked you what a new line of business, which you've kind of hinted at, you said it's an adjacent line of business. I mean, EVs are completely new. So I just wanted your thoughts. I mean, how come EVs? I mean, it's not a question to really ask. EVs are probably the future, but it's a different shift, right? It's a new direction for you in that sense.
So Prashant, please understand there are a lot of things which go into the manufacturing of EV are similar to the kind of product manufacturing that we are doing right now. It involves a lot of plastic molding. It involves a lot of PCBA, electronics. And so that way we feel some of the assets will be fungible and we will have opportunity to sweat some of the existing assets in a better way.
Mr. Gupta, okay, let's talk money. So you said that as of now, the investment is only about $3 million, but give us the whole game plan. I mean, you're saying that value addition will increase over the years. And I think the last conversation we had, your existing capex was around 380 crores and you were anyway looking to add some facilities to your existing line of business. So tell us, what is the capex for the existing business now? And FY25 is, virtually over. Let's start talking FY26. And as this EV business scales up, what is the realistic number that you will have to put to work over, say, the next 2 years?
So, Surabhi, please understand, for initially the capex I told you will be around $3 to $4 million. Yes, definitely, our existing capex of 370 to 380 crores is already in line. And we are hoping that we'll be able to complete that capex by the end of FY25. For FY26, we have still not firmed up our numbers. But we'll be releasing our guidance on FY26 going forward. Maybe in the last quarter of this year, financial year, we'll be making our guidance on the FY26. And we are just doing our number crunching on that. Specific to the EV business, we are hopeful that in next 2 to 3 years, we should be able to scale up this business to a revenue size of almost around 500 to 600 crores. So that is what we are looking at. Please mind it.
With what sort of an investment, sir?
Margins.
So revenue. Yeah, revenue is going to be 500 to 600 crores. And how much will be the investment over the next 2 years?
So the investment I told you initially will be around $3 to $4 million, but maybe going further, maybe it will be total to an extent of around $5 to $6 million cumulative over a period of 2 years. That's not a large investment. What will happen is because there is a high asset turn business, the overall margins might not be very attractive, but it will meet our guardrails regarding the return ratios of ROC and all that.
So margins would be how much? I think, at a company level, you're around 8%, give or take, if I remember the numbers correctly. What will the margin for this business be then?
So, Surabhi, as I told you, we are not looking at the margins specifically in this. So we are looking at the ROC and ROE because the asset turns will be very large in this. As I told you, when we are doing a capex of almost around $3 to $4 million and we're generating a revenue of around 500 crores. So we will be trying to maintain a ROC of around 20 to 25%. That is what we are targeting in this.
So the asset turn is going to be nearly 10 times, right? Because you're going to be putting around 50 crores down and getting revenues of close to around 500 crores. Is that correct?
Yes. Yes.
All right. And just one quick question, and if you could tell us, till FY24, if I look at it, the company, Spiro, they sold roughly around 12,000 e-bikes, I think, across Africa. So what would be the volume commitment by the African government to Spiro, and what would be the volume commitment from Spiro to PG?
So Nigel, we are still doing the final crunching of those volume numbers. Initially, we are looking at, but Spiro is setting up their own domestic sales and distribution network in India. And they are trying to tie up with the quick commerce companies in India. And I think there will be a kind of agreement that they'll get into. And we have some kind of firm numbers from them, but still that numbers is something that we are working on. Maybe we should be targeting a number of almost around 20 to 20,000 kind of EVs in the full year of operations.
Okay, we have a bunch more questions. But Mr. Gupta, we're completely out of time, so we'd request you to come back and take us through some more of the details. Interesting announcement, and of course, it's an area where there is a fair bit of excitement. So that's PG Electroplast. Stock, of course, after the announcement did very well. It ended about 1% higher yesterday. We'll take a quick commercial break. Okay, I think we have Siddharth Khemka now joining us. Siddharth, good morning. Good to have you with us here. You heard the management of PG Electroplast. Any thoughts at all?
Yeah, I think the plan sounds good, but as we see, the competition keeps heating up on the EV side. So really, we need to understand the volumes, the commitment that they get before we can jump to any conclusion. But on the prima facie, it looks like a good plan to get into the EV space.
Okay. Hi, Siddharth. Good morning. That's PG Electroplast, PG Technoplast now, the entity through which they're doing this. But since we're talking EVs, let's talk about, autos overall. Starting with Ola Electric, never a dull moment when it's Ola, right? Yesterday there was news. I mean, we were picking up source-based news. There are layoffs at the company. Then there is Mahindra and Mahindra making big strides in EV. So if you're looking to play the EV theme, what's your favorite stock?
Yeah, hi, Surbi. Good morning. So yes, I think the auto sector continues to be in buzz with a lot of developments. If you look at the latest monthly data, even for October and YTD numbers, the two-wheelers have continued to outperform the passenger vehicle segment. The two-wheelers ICE segment grew at 14.6% in the YTD FY25 compared to a muted 0.6% growth for passenger vehicles. And if you look at within the two-wheeler segment, the ICE scooter segment posted 18% growth. The motorcycle segment has seen around 13% growth. And Honda Motors is the only player to gain market share in the two-wheeler space. So you see, while the passenger vehicle segment kind of seems some stagnant growth, we believe that going forward with the wedding season picking up, I think two-wheelers would continue to outperform the overall market. And hence, within the ICE segment, what we like is a Hero MotoCorp. Valuations are comfortable, strong presence in the entry-level segment. We are seeing good recovery in the rural market. Urban is what is kind of showing some stagnancy. And hence, I would say with the ICE segment, the better is to play through the two-wheeler segment and where we like Hero MotoCorp.
Okay, I said good morning and good to see you in. What about protein e-governance? I am not sure whether you tracked that one, but the street has been waiting by. This large block was awaited. Now it's going to be done in the next couple of sessions. Not a block, the OFS, where NSE will scale down their stake, which will be good for NSE shareholders because hopefully that moves in that direction of listing. We'll have to see how that goes. But for the listed company, this was an overhang, goes out of the way, big runway for the company. Your view on it?
Yeah, good morning, Nigel. Yes, so unfortunately, we don't track protein e-governance to that extent. But what we see is that this entire digital space doing well, both in the government as well as in the overall digital payment space. So I think this is a segment which will continue to do well. Some of the companies that we do track, not closely linked, but to some extent are CDSL, CAMS, which are again in the digital space. So what I would say is that, yes, it's a big overhang which would go away. And from here, one should see positive reaction from the market for the stock.
Sid, I don't know if you heard, we played out, Zepto has done a large round of fundraising from local investors. and it values the company at $5 billion. Swiggy market cap is some $10-11 billion. This one, Zomato is double that, 2,30,000 crores. Just your thoughts. I mean, one way to look at it is more competition, right? Zepto is getting fully funded, etc. The other way is, what does it mean in your opinion for the other two listed players, Swiggy and Zomato, in your opinion? And do you like them?
Yes. Prashant, if you see, most of these players are kind of building that capital to kind of play the growth in the quick commerce space, the quick delivery, so which requires a lot of investments in the dark warehouses, in the delivery channels, in the inventory, and I think that is where the competition is heating up. So while Zomato itself is planning to raise funds through QIP, it has already started generating free cash flows. We saw Swiggy with the IPO raising almost 10,000 crores, and now Zepto raising funds. So the space is definitely getting more and more exciting. What we like within the three, obviously Zepto is not listed, Swiggy just got listed, and Zomato is something that we have been liking a lot for a couple of quarters since now. We have a buy rating on Zomato with a target price of 330. We also have released a report on Swiggy post the listing. What we believe is that while we like the quick commerce space, we believe that the profitability, part 2 profitability is still some time away, and hence there is a delayed gratification that we could see in Swiggy. So we have a neutral rating there, but the target price that we have set is about 475. So I think this space will keep getting excited. Within the listed space, we prefer Zomato with a target price of 330.
Okay, all right, Sid, request you to stay with us. For the time being, we'll slip into a short break. On the other side, we'll be joined by technical experts. Mitesh and Shrikant are waiting for us.
Work-life balance. We are one of the few entities in Gujarat that has a 5-day work week since a while. We also encourage work-from-home policies. We are moving towards situations where our female employees are given a lot more support to be able to continue to contribute meaningfully, but also to take care of their family affairs. Even on our leave policies are far more liberal than what they used to be.
For us, how do we make jobs more interesting and not just a job, but something people are passionate about, want to do? And I think that it's going to be a constant balance, I think, of priorities, where you talk about work-life balance. I think in my case as well, I think it's not so much work-life balance, it's more balancing priorities at a given point of time and giving the flexibility to people to do that. But I agree with Sagar that at the end of the day, you want people to be invested, you want people to be committed, but at the same time, you don't want to kind of be overbearing. It should come naturally. But absolutely. I think to do that it's not easy, and I think we will all have to change quite a lot. I don't think we've changed as much, but I think it's also a calibration.
The second thing is what I learned from Mahatma Gandhi, that is leadership by example. If you want austerity in your company, you, the leader, show austerity. If you want punctuality in your company by every employee, you come to the office first. Then you don't have to give big speeches. So I think I can go on and on the issue of leadership by example, but I think we in the corporate world must embrace leadership by example. The third thing that I would talk is, This is something that not just the corporate leaders, but leaders in every area in India, in corporate world, in politics, in NGOs, in bureaucracy, everywhere. And that is putting the interest of the community.
Welcome back. Well, as promised, we have Mitesh as well as Shrikant who join us on the show. Good morning, gentlemen. Thanks a lot for joining in. Well, yesterday it was a weak trading session, but not as bad by the time we wound up. Mitesh, you go first. What do you think about today? You know, on the index, yesterday you told us no big view because, too many moving parts. But do you have a view for today?
I do, Nigel. Good morning. So I think the index which I'll watch closely will be the Bank Nifty. A couple of reasons. One, the Bank Nifty bounced back from its 200-day average. Two, I think it was clearly the stronger index, obviously not enjoying any kind of, linkage with the Adani group, particularly though some PSU banks would be lenders and, you might want to argue about the effect over there. But broadly, I think it is the Bank Nifty which is looking good. And, as long as this bounce back from the 200-day average continues, the Bank Nifty could possibly head towards levels of around 50,900 to about 51,000. And beyond that, it could catch or it could gain more momentum. So I think I'll keep a watch on the Bank Nifty. Let's see where it opens and then we'll take a trade over there. But I have a couple of banking names in the recommendation. So the idea is that could lead slightly towards the financial names today.
No, got that. Gentlemen, good morning. Thanks very much for joining in. Shrikant, what about you? How would you look at things now?
Good morning, Prashant. Good morning, Nigel and everyone. I think, markets are correcting from the highs, but now we are down nearly exactly 3,000 points from the highs. The highest was around 26,270, 280, and yesterday's low was around 23,260, 270. So while looking at the setup of the market and based on retracements and averages, I think we are very close to the short-term important support levels from where we can see some recovery. But since last 7-8 days, if we see the trend of the market, then it is like failing to close above the highest of the previous day. We need today the market to close above at least the levels of 23,500, or if we see the market is crossing these levels, then we can see some further more bullishness in the market. Broadly, I am of the view that the markets are due for a very meaningful pullback in the near term. But I think we need some reversal formation also. So today, in case if we see the market is closing above 23,500, then yes, we can see very sizable pullback in the near term. For the Bank Nifty, there also, as Mitesh said, it recovered very well from the lows. Since last 3 days, it is not falling below the levels of 50,000 convincingly. So yes, we can see the levels of maybe 51,000, 51,500.
Okay, all right, got that. Mitesh, you go first. Tell us about your individual stocks.
Nigel, I have, as I said, a couple of banking names on the list today. So I have a buy on Kotak Bank with a stop at about 1720 for targets of 1770. Also a buy on Federal Bank, disclaimer that we have some positions here, some bullish biased call spreads. So Federal Bank for me is a buy with a stop at 206.75 for a target of 218. That apart, a buy on Divi's Lab with a stop at 5920 for targets of 6,100, and IEX makes the final buy call. It's at a very clear, important support level, very likely to bounce back. So keep a stop below 158, 157.5. Look for a target of around 168.
Okay, all right. Shrikant, what about you?
Yeah, I think banks are really placed at important support levels, and they are well placed to take some short-term trades. In that specifically, private banks are doing well, and ICICI Bank looks good, which is around some 1260, 1270 sort of levels. From here, the stock can move to the levels of at least 1300, 1325, and we can keep a stop loss around 1225 for the same. The other stock on which we are bullish is Mahindra and Mahindra, and whenever there is some rally or some recovery in the market, we see some specific buying interest in Mahindra and Mahindra. Currently, it is around 2390 or 2350, 2360. But from here, the stock can easily move to the levels of 3010 or 3050. So Mahindra and Mahindra is also at current levels buy recommendation with a stop loss at 2920.
All right. Thanks very much, both of you, for joining us, Shrikant and Mitesh. We'll touch base again soon with your 9-10 calls. I think we are heading towards the pre-open session, which is 3 minutes away. We'll take that quick commercial break here. Before that, we'll come back. We'll have a discussion planned on the cement space. Rakesh Arora will be with us to tell us and talk to us more about that space. Stay with us.
My personal interest. If I did that, my personal interest will be much larger in the years to come. That's exactly what we at Infosys followed. In the beginning, none of us had any cars. We all traveled by economy until we were $1 billion in revenue, and that was the time that I was there, and we were $288 million of after tax. Until such time, we all traveled economy, even on international flights. So the point I'm saying is, let everybody lead by example. Prime Minister Modi, who has done a brilliant job so far in terms of accelerating our economy, all of that, may want to look at whether we need more of managers in the government rather than administrators. And to do that, they perhaps may want to look at, rather than the current method of having some, whatever it is, some 3-4 subjects, examination, etc. for the IAS, he may want to look at selecting people from the various management institutes, bringing them into the government. I hope the opposition won't have much objection, like they have already raised. Bring them into the government, first get them trained at Mussoorie on decision-making under uncertainty, on facing the competition, on creating competitive advantages, on being open-minded to learn from people who have performed better than us, on strategic thinking, on simulation, on workflow management, on project management, and other management techniques. The second thing that we may want to do .
Okay, welcome back. We've got the pre-open session starting to come up, and we'll just take a look at what the rates are. The first rates are on your screen, 70 points lower. So that's about 1/3% down. 23,286 is where the Nifty first rates are coming through. So this is, if this stays like this, and the end of the pre-open by about 9:07, 9:08, we'll see, but it's going to be pretty different from what the GIFT Nifty was indicating earlier on. The rupee market has also opened, the currency market. I think we've got, and I think there is some additional weakness after yesterday's weakness as well. Just quickly take a look at the Adani Group stocks. Just run through those names if we can, because, we'll just look at what happened, because yesterday, of course, everything was down sharply. Enterprises, ports, green. We should put up Adani Energy Solutions, Adani Total, and others as well, power, etc. So yeah, there is added additional pressure coming through after what we saw yesterday. The cement names are up on your screen as well. Cements and Ambuja Cement and ACC, which are down. But this is the very initial first rates which are coming through. We'll have more as we go along. Sneha Sheth is with us, derivatives analyst, research analyst at Angel One. Sneha, good to have you with us here. Good morning. Thanks for your time. Just your setup as far as indices go and your specific trades.
Very good morning, Prashant. If you look at market, yes, we have been seeing continuous selling pressure. Apart from that, if you see market any time, whenever we are seeing a bounce back, it is not getting sustained. So that is certainly not giving us a comfort to go long at this point in time. So in case of any strong recovery, only and above 23,800, 24,000, then only we would recommend adding any long position. At this point in time, we would suggest stay out of index. And in case IBs, which is around 16 now, if it goes up above 17, that would not be a good indication. So at present, avoid index, trade into individual counters. We are seeing decent, trade setups there. So my first counter would be around power grid. If you look at this counter, we have seen decent up move yesterday. It was up nearly 3% yesterday from the a good base formation is now done around 310, 305 zone. So I would recommend buying this counter for the target of 350, and the stop loss can be maintained around 310. Apart from this, Grasim looks good. Though we have seen a decent selling in other cement counters, here we are seeing decent base formation around 4,700, 2,470, 480 odd zone. And looking at the overall chart structure, I believe we may see some short covering bounce here. So for the target of 2,620, it's a buy, and the stop loss can be maintained around yesterday's low, that is around 2,480.
All right, thanks a lot for that, Sneha. Well, talking about Grasim has something to do with the cement space. So let's focus on the cement theme itself. Yesterday, we saw Adani Group cement stocks. They were under pressure. Deep cuts is what we saw. ACC and Ambuja, by the way, have corrected close to 30% from the 52-week high. So do these Adani cement assets provide an opportunity after the fall? Valuation-wise, well, they could appear fairly palatable. But let's find out from Rakesh Arora, the founder at goindiastocks.com, who joins us. Hi, Rakesh. Good morning. And thanks a lot for joining in. Well, these stocks have fallen off the cliff. There are a couple of those tangible assets that the group has, the Adani group has. Do you think that they're providing an entry opportunity? I ask you this because a few months ago, we did see that these stocks fell off the cliff. And from there, we had a big rally. Your take.
So, Nigel, Ambuja Cement, etc., do look cheap, and they have fallen quite a lot as compared to their peers. And in the recent past, they have done really good acquisitions. So, 2 years back, when Adani took over Ambuja, since then they've added 43% in terms of capacity. So that's a massive, increase. Plus, the cost reductions have also been quite impressive as compared to the other players in the industry. So I think fundamental wise, there's nothing much to worry. It's a good, asset to own. Having said that, it's difficult to call what's going to happen on the case which came out on Adani yesterday. But one thing, which stands out that among all their assets, I think probably this is the one which is the least impacted. It's quite well funded, and historically we've seen cement companies don't really need too much of external capital. They can grow. They don't really have too much of regulatory issues to deal with. So I think if one has to take a bet on the whole group, maybe this is one of the safer assets to look at.
Okay, all right. So would you be a buyer though at current levels, Rakesh? And what would the pick be? Ambuja Cements is trading at a discount in comparison to what it normally trades at, while ACC is trading below replacement cost. But it's for a reason, because profitability is lower out there. How would you approach them?
So clearly, meaning market perceives that there could be short-term volatility, and if there's some adverse decision making at the court case that we are seeing, probably some of the FIs might be forced to sell. That can, give stock a little bit more supply to deal with. So if one is not worried too much about the volatility, valuation-wise, it looks decent.
All right. What is the pecking order though? The big boy UltraTech Cement. I remember when Adani's made the foray into the cement industry, people were saying UltraTech is going to be in trouble. Well, actually, it's gone from strength to strength. It's done organic growth. It's done inorganic growth as well. And it's nearer to its highs that we've seen. Instead of playing ACC Ambuja, would you rather play UltraTech as well as Shree Cement?
So, see, UltraTech is working like a well-oiled machinery. They have gone from strength to strength. and they've delivered, and that's why the valuation and so if somebody wants a steady, 12, 13% kind of CAGR return, Ultratech is the stock to go to. If you need more excitement in your life, I think Ambuja has some more to offer on that.
Yeah, but the street wants a lot of excitement, right? They want to play some of these mid-cap companies that could potentially get acquired. We have seen the Adani group gone into some trouble even in the past, but that inorganic growth trend did continue. They went and picked up a couple of assets and decent side assets as well. Do you think that consolidation theme takes a bit of a backseat? And anything you like from the mid-cap universe, mid-small cap universe?
So I don't think, acquisition will slow down materially. Meaning we have seen that acquisitions have happened at regular interval. Every few months, they've been able to acquire some decent asset. So it started with Sanghi, then Penna, and now Orient, which was, an excellent acquisition. I think now there are only 2 or 3 large ones which are left, Heidelberg and probably some assets of JP are still there, which are of decent size between more than 10 million ton. Others are very small assets, so it doesn't really matter that much. So consolidation, I think, will continue. Maybe there might be a lull of a few months here and there, but what we need to keep in mind that most of the acquisitions are happening between $80 to $100. So if the assets are good, maybe $100, and if assets are a little bit weaker on the side than $80. So investors can take a cue from this range and decide accordingly.
Yeah, got that. I remember the management of Shree Cement talking about this. They were with us on the channel just a couple of days back, saying that, they'd rather not pay too much above that amount that you just mentioned, the reference rate in the market. But Rakesh, hi, morning, Surabhi here. So, the consolidation aside, what about the actual, demand and supply situation? Because things have not improved. It's been so many quarters, right? Offtake has been weak. There's no sign of any kind of a price hike. And first it was the monsoon, and then the narrative was that the government is not spending. Now second half is supposed to be better. We're already in second half. So what's going on? In terms of just the business on ground, and what do you expect over the next couple of months?
So fortunately, after the weak first half, we are seeing green shoots in terms of demand. So October was probably, I think, 5-6% demand growth. November is going to be a much bigger, maybe 15% plus demand growth, given that it was a low base effect last year. And overall for the quarter, I'm expecting around 8 to 9% pretty easily in terms of demand. So demand looks sorted. Prices have not been sticking because most of the companies, both the large companies, have been very aggressive in pushing their product in the market. So there's a little bit of market share gain, or rather market share war going on, which is hindering prices from going up. But there will be benefit from this, volume growth which is coming in. So margins sequentially will improve by, say, 100 odd to 150 rupees per ton. Going into Q4, I think, price increases will also come through because government ordering is now going to pick up, and probably Q4, a lot of people will rush to complete their budgets. So at that time, I'm expecting that margin should also recover. So this is a seasonal cyclical play, we all know. And buying in Q2 or Q3 and selling in Q4 or Q1 of next year is a seasonal trade that most investors should do.
All right, Rakesh, we'll leave it there. Good speaking with you, and we don't need more excitement, as you said. There is enough and more to set the pulse racing. Thank you. Well, let's get the 9-10 calls out of the way. Mitesh is here with that. Mitesh, what do you have?
I'll go with the buy on Kotak Bank for targets of 1770.
Okay. All right. Kotak Bank is the 9-10 call coming in from Mitesh. Well, the city gas company should be in focus today. MGL, the Mumbai-based company, is announced, I think, a 2 rupee price increase. The question is it enough after all the cut in allocation? Sonal is here. to tell us. Sonal, morning.
Good morning, Prashant. Well, yes, it's a price hike which was anticipated, but it's just a 2 rupee price hike that has come by. It takes the total price to 77 rupees a kg. This is applicable from today. And the last time we saw a price hike was back in July, around 1.5 rupees per kg. As we know, this price hike has come on the back of this big cut in APM gas allocation. But as you asked, is it enough? Well, they have taken a 2.5% price hike now, but calculations suggest all these city gas distribution companies have to take a price hike anywhere between 8 to 10% in order to pass on the entire cost to the customers. So it's not enough, but though of course it'll take care of some of the margins, and still there is more price hike which is required, but that could impact volume. So it's again a gamble that the company will have to take, but the stock is higher. IGL will also be in focus, because if they follow suit, that would also mean that they'll also go ahead and hike prices.
Sonal, thanks very much for that. So not enough for now, but maybe the first of many required price increases. Keep an eye on those names. Reliance Industries is the other one we want to focus on. Sudarshan is here to tell us why. So good morning.
Morning, Prashant. So two notes have come for Reliance Industries. The first one is JP Morgan. It has an overweight call and target is 1468 per share. It says one of the two drivers of the recent underperformance is weak refining margin, which JP Morgan believes that it has now started reversing. Also, it says poor retail top-line growth is difficult to anticipate, but expectations have compressed, and post the stock correction, estimated implied valuations for retail business are 25 times FY26 EBITDA, and valuations for retail business are now below historical levels and peer retailers. Another note is from Morgan Stanley. It has also overweight call and target is 1662 per share. Again, it also says that refining margin is starting to recover after two tough quarters, and permanent refining capacity shutdowns have also risen. It says FCF engine should pick up pace as nearly 0.6 million barrel per day of refining capacity shuts in 2025 globally. So overall, both Morgan Stanley and JP Morgan remain positive on Reliance Industries.
Yeah, and that pickup in refining margins, that's something that the market would be really willing to take with both hands. By the way, just want to say in the pre-open, while the Nifties are actually up about 60 odd points, that's not too bad. The Adani group stocks, there's still some red on them. Not as much as yesterday, but down between sort of 5 and 7-8%, depending on which one you're looking at.
Absolutely. Let's actually look at ports, right? Ports yesterday made a low of about 995, and then it recovered very sharply to almost $1,100 and then sold off towards end. So 1,072, down about 4%. That, of course, is the, in that sense, the cash cow, the most widely held institutional name, and of course, I mean, the best assets out there in the group as well. So we got the market open coming up in just a couple of seconds from now, and we'll get on with it in terms of indices, stocks, news flow, everything. So what do we have? First rates, it's higher by, I think, about 50-60 points, 23,400 plus, but dithering in the first couple of seconds, actually. The Nifty Bank is up 0.4%, 50,588 on the Nifty Bank. The Sensex is about 0.25% higher right now. What do we have? I mean, did we see some red? Or was that fleeting? I think we just refreshed that. I saw some sharp changes, but 0.1, 0.15 odd percent on the Nifty and the Sensex basically is what you're starting with. The Nifty Bank is more clear in that sense with a 0.5% odd pop. Mid caps are flat, small cap index is also absolutely flat. On the Nifty, the heat map is up on your screen, and I think you've got about 14-15 names in the green, with the rest which are starting down. And of course, you can see enterprises and ports, the two Adani Group stocks are amongst those in the red right now. Surbhi.
Yeah, well, 50 points up on the Nifty. So it's a bit tentative, but I think it's holding at least for now. Gainers include the likes of ONGC. There are some banking names right on top. Actually, the Bank Nifty is doing better than the Nifty. It's leading from the front. So ICICI Bank, 1%. There's SBI up about 0.7% as well. Let's do a check on HDFC Bank and what that's doing. Yeah, also 0.5% higher. So your big banks are really participating today, which is good news for the index. Reliance, we just discussed some of those brokerage notes, sounding quite optimistic on the refining business pickup. 0.5% up on RIL as well. There is, apart from this, there's Wipro, NTPC, Tata Consumer, Infosys, HUL. These are the early movers on the upside, and plenty of them are the large cap heavyweight big boys. So that's good news for the index. The index, by the way, is now notching up a gain of about 66 points. So the bulls are trying to build. On the downside, on the index, there's, of course, Adani Ports. Then there is Titan. A couple of steel counters actually a little weak. JSW Steel and Tata Steel are on the lower side. On the Adani Group, just to complete the picture, Most of them are down between 4 to 5%. Enterprise is down about 3%. Power down about 3%. Adani Green is still down about 8.5%. So those are some of the early trends. Mid-cap index, though, already in the red.
Well, that's right, Surbhi. And a few stocks actually are deserving special mention. You have Turks as well as Zagel. Both those two stocks, 5% circuit, both of them higher. The Adani Group stocks, Green, Energy Solutions, Power, Total Gas, Ports, all of them are lower. Info Edge, that's the stock actually of the morning because there's been an upgrade note coming from Goldman Sachs. They've upgraded the stock to buy from sell. The target price as well has moved up from around 5,700 to around 8,600. They believe the demand environment for India IT is incrementally improving, and they expect this to drive an acceleration in the company's recruitment segment revenues to around 16% CAGR in the next few years. So that explains why that stock, well, just take a look at it. Big move is what we're seeing out there. Cross, the recently listed company, that one as well is up close to around 4% as we speak. Sobha is another stock that's doing well. I think there's a note that's coming from Investec. The stock is up close to around 4% or thereabouts. I think they've initiated coverage on that one with a good target price. So that one, Sobha, after correcting, I think, from around 2,000 rupees to around 1,500 rupees, one of the reasons why the stock is doing well is because of this note. The other one is Genesis. That stock as well is up close to around 4%. Not too bad on the headline index. We're up close to around 60 points. We're still holding on to those gains. The bulls will want to build on from here. So let's see how that goes.
Protein's really interesting. I went back to check the price at which NSE is selling, and that price is fairly lower compared to the current market price. NSE is selling its 20% chunk at about 1,550. Price on the screen after this 8% decline is also 1,700. So these days, when you have large blocks in the market, usually people love it, and that too for companies where they seem to understand a growth runway. But here, I think this pricing is a little disappointing.
It's an OFS, so that's a base price. That $1,550 is the base price, and then they'll be bidding on top of that. So that's why, in fact, that's the base price that they have put out there. So I guess that's what's playing out.
All right, so basically you got about 50 odd points on the Nifty, 23,400 around there at this stage. And by the way, look at individual names, and the number one volume-led gainer. It's not the top gainer percentage-wise, but it's got volumes, and the largest volumes is Nalco. Nalco is up 1.25%, and stocks at about 251 or so right now. There is, I think, Info Edge, Nigel just mentioned. SJVN is up about 4.5%. It's got large volumes, third largest volumes. Afcons is up 2%. Afcons is a recent listing. Didn't do very much post the first couple of days after listing. KRN Heat Exchangers is up about 4%, 791 on KRN. There is Godrej Properties, which is up about 2.75%. Kernix Microsystems is up 4%. NLC India is up 2.5%. Sobha is up 4%. Sobha is 1580 now coming through. Oil India is coming up with about a 3% gain. There is Zagel, which is up 5%. Zagel did well, I think, yesterday as well. 486 or so on Zagel. NIIT Limited, 4%. Look at this Jush Engineering. Now, he's done phenomenally well. I think the stock was $20 in 2018-19. Stock's at 600 plus now. And they from what I remember, they essentially make these metal closures. I mean, it's up big time. I think there was a roadshow recently for JASH, JASH. I rarely mentioned the name, but it's got volumes, and that's why I'm talking about it. IMFA is another one which Nigel has been talking about last few days. Did well yesterday. It's up another 2%, 814 on IMFA coming through. Now, overall market breadth is also shifting a little bit. And you've got 1450 stocks which are higher and 660 stocks which are lower. So decisively swinging towards more up than down. It was pretty close when we began the session a few minutes ago.
Well, just want to point out three stocks in the Adani Group. One is ACC Ambuja that we just discussed, with Rakesh. So because of the valuations, because of the potential of these assets and their tangible assets. So, both these two, they've recovered from the low point of the day. And the other one I'm looking at is Adani Ports. It's down close to around 2%, but in the first tick, it was down more than 5-6%. So a bit of bottom fishing, I think, is what we're seeing on all these three names. Keep an eye out on the three of them. Though the group still, there are plenty of queries, plenty of question marks as well. Investors will be a little bit nervous, but I think these three names, from the lows, they've seen a bit of a bounce.
Absolutely. And I think the high and low yesterday was 1160. And on the lower side, it was 995. It was the opening level. I mean, it barely lasted. It bounced and closed at 1114. We're at about 1088 at this point in time. But I think let's get on with our first management post report.
Absolutely. And the company in question is Blue Star. We're looking at trends in the second half of the year now. The second quarter was a fairly stable one for the company. The management has been quite optimistic about growth in the current financial year. And we have Mr. B. Thiagarajan, MD at Blue Star, with us. Thank you so much for joining in. Always a pleasure to listen to you and to have you on our shows. And it's probably the right time to ask you this. You know, I'll get to the numbers and the second half projections in just a bit. But the second quarter threw up this big question mark on the health of the Indian consumer, on spending trends and whether there is some down trading, especially in the urban markets. Now you tell us all the festive season is behind us and now we're getting into the winter months, which are typically have been not the greatest for your business. But where do you stand with respect to demand on ground? How are the festive season sales for you? And what is the forecast ahead?
Good morning, Shurbi. Thank you for having me in your show. This is a doubt that I keep, asking myself that many sectors have slowed down. Why room air conditioners market segment is doing extremely well. The festive season was extremely good. Coming after a great summer season, I thought that the festival season may not be good, but again, it was close to 30% growth during the festival season. And going forward, of course, it is off season, but I'm comparing with the previous year. Now, it continues to be good. This category is doing well, and I'm sure we will end the year. The industry will end the year on a high note, and Blue Star also will end the year on a high note. We had gained market share in Q2. I think we will continue to do so in Q3 and Q4 as well. The reasons, according to me, are as follows. I'm stating that with a caveat. Still, our industry also can slow down. It's not in my hands. But going by the sentiments in the market and the consumer behavior, I think we will continue to grow. The reasons are as follows. Our category, the penetration levels are still in the order of around 8%. That's point number one. Point number two, a huge manufacturing capacity has come up, so the prices are stable. If one will have to earn the PLI, you have to show incremental growth over the base year, which is financial year 22. And then the prices are kept stable by the industry. Third is consumer finance is available in plenty. Close to 50% of our sales, even during festival season, was through consumer finance. No longer power bills are a concern thanks to the energy labeling scheme. The air conditioners are very efficient, and if someone is using for 8 or 7 hours a day, I don't think the power bill they incur is substantial. It's lower than even a mobile
Mr.
app
Thiagarajan,
put together pay.
So just kind of putting it together so we know the factors that you're driving at. You're saying, A, there's been no slowdown in the room AC segment. You've actually seen market share growth. And it's because of the fact that pricing is stable. There's easy financing available. So therefore, there's no concern for you. Now, since you're fairly optimistic, just tell us how much was the market share improvement that you saw? And for the full year as a whole, given the strength that you just spoke of, what will be your full year top line growth estimates?
See, I'm going by the market data that is available. In Q1, though we grew more than 57% in room air conditioners, we lost out on market share because we didn't have material. We could manage only up to that kind of growth. In Q2, I think we have gained some 100 basis points, Q2 standalone. But Q3, Q4, it's an intense competition exists there. And I think on the whole this year, if we gain 50 basis points market share, I would be very happy. From 13.75 to 14 to 14.25, if we move up, it is fine. You remember that FY25, our goal was to reach a market share of 15%. It has not happened. Because you have to ensure that your margins are managed as well while you are chasing the market share.
Mr. Thiagarajan, good morning. Stable pricing and healthy sales seem like a bit of a I would have imagined lower pricing and healthy sales. But you're saying there's no need for lower pricing. Or has that happened? There's 30% growth in festive sales. Was there a lot of discounting?
No. It was stable pricing, even though the commodity prices had gone up. The last price increase was on 1st of July. And the price was stable. You had seen in the margin figures as well.
And you're saying that you expect trends to continue. As you see it, there should not be any, although you did throw in that caveat that it's possible that the slowdown could hit this AC segment as well, but for now it's looking good.
Prashant, my assessment is that it will be good. But I've also always maintained this is like a T20 cricket. All that it requires is some 4 weeks. It can dramatically change.
But for the time being, it appears you're in top form, in this T20 game. You've got it under control.
Of course, and we only pray that our brand ambassador Virat Kohli comes back to form.
Absolutely. On that note, we're all with you, and hopefully King Kohli has one great innings left, and particularly in Australia, I'm hoping I'm backing him. But
lost 2 wickets just now. I just heard from our, our people outside. That's separate. That's on cricket in Australia, but back to the question.
Yeah, since we're talking about overseas, tell us about the export opportunity. You'll have been hinting at that, there is an opportunity out there. So as a percentage of your total mix, how much is exports? Where do you see this number scaling up to? And any kind of slowdown out there?
It has not taken off. On the contrary, we have been a marginal player in the exports market. Our footprint was only Middle East and North Africa, and we decided to enter the Americas as well as Europe. And this is through the OEM route. We were not willing to launch our brand out there. We were to make decarbonization and high energy efficiency products for Europe as well as US. The testing and validation of products for a couple of customers are over. And I'm happy to report that in US, we have a customer. In Europe, we have a customer. But unfortunately, Europe market has slowed down. You'll be reading the reports that it is yet to take off, and I think it is going to be 4 to 5 quarters before European market takes off. US, as everyone is waiting, the new administration, how these programs will be fast forwarded. But we are not in a hurry. We are trying to replace Chinese vendors, which means we have to get the product right in terms of quality, and we have to get the costs right. And if we are entering those markets, it should be providing high returns and high margins. It is good that the market is not exploding now. It is giving us time to perfect our offerings. In 2 or 3 product categories, we are fully ready. We will keep adding new OEM customers now.
Okay. So just to wrap it up, I mean, clearly the room air conditioner segment, that's really firing up for you. You spoke about some of the other segments as well, particularly on commercial refrigeration, which is the part of the business where there was sluggishness, the margins were under pressure. For the full year, what can you guide? I mean, when does that part of the business come on stream? And if you could just leave us with a sense on, will the business grow at, overall business, will it grow at 20% this year, more, less?
I will talk about all segments. The electromechanical project segment, where we are not chasing market share, but the free cash flows and the margins, it is doing extremely well. Driven by data center and manufacturing sectors. I think overall that business should grow around 15% on a full year basis. Commercial air conditioning business, which is shop, showroom, boutiques, to large spaces where we sell equipment, commercial air conditioning, that should grow over 20%. There is absolutely no doubt about that. We are sitting on huge order book. And commercial refrigeration had a setback in Q1, and Q2 it has just stabilized. I think overall the revenue growth will be only 10%. It has got nothing to do with the market, but the regulatory changes and our getting back to producing products such as newly designed water coolers. Room air conditioner, my full year outlook is at least 25%. It will be, in fact, it can be even 30% growth for the full year.
Okay. It's always a pleasure, Mr. Tyagarajan, not just to hear about Blue Star, but also about the industry, which you put so well. Thank you so much for being here on the program today. That's the management of Blue Star with us. Well, the market's up 180 points. It's instructive to note that the Adani Group stocks have also recovered quite a bit. Adani Ports is barely down. Enterprises is barely down. Power is barely down. Adani Total is actually in the green as we speak at about 603. And the recovery in the market has also kind of matched the recovery from the lows here for some of these names as well. So, I mean, a lot of it, of course, is sentiment related as well. Gautam Dugar is with us, Head of Research, Institutional Equities at Motilal Oswal Financial Services. Gautam, great to have you with us here. Thanks for your time. I'm going to get to, your earnings estimates and how it's moved because Q2 was bad. A lot depends on the H2. But I want to start with, the investment from Motilal Oswal into Zepto. So Zepto has raised $300 million, $5 billion valuation. Ramdevji himself is putting money in. He's already an investor. But I think the company is also putting money in. I know you have coverage on Swiggy and Zomato as well. So just talk us through how this fundraise changes the game and what are your projections here? Are these still good plays for retail investors? Go on.
Good morning, Prashant. Thanks for having me here. The investment that you're referring to in Zepto has been done by our asset management firm, so I won't be able to comment on that. But as regards the broader point on quick commerce, we are very hot on that space. Been holding Zomato since 50 rupees in our model portfolio, and we still like this space. We've recently put out a coverage on Swiggy, which is very detailed, granular analysis of all the three different businesses of Swiggy. The fact remains that this is a very rare segment within the overall consumption space because as we all know now, overall broader consumption space has slowed down. But within that, there are pockets of, sub-consumption segment as one may refer to, which are growing at a very breakneck speed. And the kind of scale that some of these companies have achieved in the last 2.5 years, or maybe 3 years post-COVID, is phenomenal. So, and we have seen it in the case of Zomato over the last 3 years. When they listed, they were loss-making, and within no time, now we are projecting a profit of almost 3,000 crores. So it's a big company with big market cap and very high growth. The fact remains that the segment is still evolving. So while we've already seen 3-4 years of good growth in the spaces, if you look at the next 5 or 10 years, I think it's quite probable that at an industry level itself, we might clock a growth rate CAGR of 20% over 10 years. Of course, today 20% for this segment may look less because they're growing at 40-50%. But if you stretch that out over a 10-year period, at a top-line basis for the industry as a whole put together, 20% is a very good number. And as of now, there are only 2 or 3 players with size. So definitely there are going to be a lot of winners in the spaces. Difficult to say who will be the biggest winner. So it makes sense, in our view at least, to put a bet on 2-3 names. As far as our own model portfolio is concerned, we've been holding Zomato and continue to stay positive on it.
Hi, Gautam. Good morning and good to see you. Before we get to the earnings and the way the government is spending, and that's going to help us in the second half of the year. Any of these Adani Group stocks have come to levels that you like it? You'll have an official call, I think, on ACC and Ambuja as well. They have corrected 30% from the peak. Your view?
Hi, Nigel. I was referring to your comment on Kohli. Kohli is out, by the way.
Yeah, I know. Kohli is out. Yeah, that was unfortunate. 40 for 3. Hopefully, we can put in a bit of a fight. I had a dream of going and watching the game Boxing Day, but I've postponed it for the next year, I think. So, or the next time we go down there. Difficult times, but I'm sure our boys will bounce back.
Hope so. To referring to your question on cement, no, we don't like cement as a space. We don't have any exposure to cement stocks in the model portfolio. The numbers are very bad, actually. And I think the numbers are going to look weak over the next 2 quarters, too. This was incidentally the 5th consecutive quarter of a double-digit profit decline in cement. If I look at my coverage universe itself, I think we have seen somewhere close to 45% profit decline for our coverage universe put together. As we move forward, March typically is the best quarter for the cement sector. We will see how things pan out by then. definitely not at the moment. We don't have any exposure to cement stock. We are actually playing industrials theme through capital goods. We are playing industrials theme through real estate and all, where some prices have corrected. And in fact, while the overall earnings season was very muted with a very flattish performance at an aggregate level, but if you look at the sectors, then capital goods stands out because they were able to beat expectations. We have seen close to 17% earnings growth in capital goods versus our expectation of somewhere close to 10, 11%. And even at a top line level, they beat expectations with a very strong 20% top line and EBITDA growth. So very few sectors have managed to beat the top line expectations. Capital goods is one of them, right? So we are positive on L&T, we're positive on Cummins, capital goods, basically ABB also now that stock is down 20-25% from the recent highs because there was a blip in the quarter. So capital goods is the way we are playing the industrials theme rather than cement.
Got it.
Capital goods, okay. And that ties in with the theme as well. Hi, Gautam. Morning. Great to have you on. Ties in with the expectations, right? Everyone's expecting government spending to start picking up and in general, the sense to start, improving for the capex part of the economy. So that ties right in. But what else? If I were to ask you about areas of the market which will give the best second half earnings growth, apart from capital goods, what would it be?
So Surbhi, yes, you're right. Capital goods should do well. Apart from that, the spaces that we have liked, and in fact, we've recently, 6 months back, we moved IT from underweight to overweight. And we've doubled our weight in IT between the last 6 months, from 8% to 15%. And if you look at the performance, IT sector stood out in the last 3-4 months in the current phase of market downturn. Earnings has also been decent. We're expecting pick up there. Our preference within IT lies in mid-cap. Not really mid-cap nowadays because both Persistent and Coforge have reasonably big market caps. Within the mega cap in IT, we like HCL Tech. So as regards your specific questions on sectors which are expected to do well, we do expect the second half to be slightly better than first half because the first half, our coverage universe has 0 growth and Nifty at 4%. Now in the second half, we're expecting our coverage to move from 0% to 9% and for Nifty to move from 4% to 7%. So that's how we get a full year 5% earnings growth for Nifty. But there are a lot of nuances in this. If you look at the numbers excluding commodities, which I usually do, the next commodities, Nifty, the first half growth was 12% and second half growth is also about 10 to 12%. And similarly for our broader coverage, first half was 13%, second half was 13%. So whatever variations you are seeing between the two halves of the FY25 earnings is largely or completely coming because of commodity related fluctuations. As regards sectors where we are still expecting good growth and are positive on it. So I mentioned IT, second is BFSI. And within BFSI, we like the non-lending financial space more. And we've also moved private banks recently in October preview to overweight out from underweight after a long 2.5 years, period. And also we like healthcare, select bits of consumer discretionary, telecom. So those are 5-6 spaces, and of course real estate where we are overweight. We are expecting the growth to continue to remain strong. Right?
Okay,
but the year is going to be quite soft on aggregate earnings basis.
And I guess a lot of that is in the price, right? That explains the fact that we're down 10% from the peak. Somewhere when the reality catches up, the question is, what do you start playing from here on? And you've given plenty of ideas. Very quickly, Gautam, before we let you go, we were just looking at some notes that came in from a bunch of foreign brokers this morning on Reliance. They were talking about how, in general, refining, the cycle will start picking up and it should be good for Reliance and I'm sure other refiners as well, global refiners. Just want to get your view here because like you pointed out, commodities have been the culprit in pulling down Q2 numbers, some of the commodity facing sectors. What would your sense be? Because if Reliance starts moving higher, we know it takes the market along with it.
Yeah, I absolutely agree with you on the first point. We've had a 8% earnings downgrade since April and the Nifty is also down about 10-11%. In fact, if you look at the broader markets, the 3-year CAGR is very, very ordinary now. We've seen just 10% earnings, basically the Nifty return CAGR. On Reliance, we are still underweight, Surbhi, because we think that not just the refining and the O2C business, but even the retail business has slowed down a bit because of the overall demand slowdown that we are witnessing in the modern trade part of the consumption basket. So I think while valuations have corrected, stock has corrected, in the near term, we don't see much of a trigger out there. So And because it's such a big weight, it's very difficult to go overweight there as it is, even when the earnings are doing well. But at the moment, we are underweight, and we are using that weight to, basically allocate more towards sectors where the earnings visibility is far better right now.
Okay. Your 25 Nifty EPS and 26 EPS estimate now, Gautam?
Yeah, Prashant. So we are at 1,057 for FY25 now, which is a downgrade of about 1.5% from the preview to review. And for FY26, we are close to 1240, which is an earnings growth of close to 17%. So now, if you look at FY22 to FY25, our earnings CAGR would be somewhere close to 12-13%. Sorry, on a 3-year basis, it is still 20%. The FY25 year is going to look very, very soft at about 5%. But then FY26 obviously evens out that base. So net on a 5-year CAGR, Prashant, we've seen close to 20% earnings growth now for Nifty. And this is the first year of single-digit earnings growth after 4 consecutive years of very strong double-digit performance.
Got it. Thank you very much, Gautam, for joining us. Appreciate your time here on CNBC-TV18. Have a good weekend. We'll catch up again. Nilesh Sathe is our next guest. He's former IRDAI member. He joins us to discuss the outlook for the life insurance space. The finance minister raised question marks about banks selling insurance products. So we'll take that break. We're going to come back in just a bit.
A big day, a major setback to the Adani group, because this is the US Department of Justice, a court in the United States which has opened an indictment against Gautam Adani and his nephew Sagar Adani and 7 others. Got the US Securities and Exchange Commission, which has also made charges against the Adani group and members of the Azure Power Corporation. Essentially, they've said that both these companies got together, colluded to gain government contracts for the Solar Energy Corporation of India, because they were working with this company for solar energy, and in order to get contracts from different state governments, they tried to bribe Indian officials across the country, primarily in the state of Andhra Pradesh, and offered bribes to the tune of over 2,000 crore rupees. Now, why has this become important? Why did the US courts take cognizance of all of this? This is because the US courts believe, and the US team.
Welcome back. Now, the finance minister raised concerns about insurance mis-selling, emphasizing its contribution to higher borrowing costs for consumers. She urged banks to focus on affordable lending rates and not burden customers with needless insurance products. Listen.
Trust should be built by the way you offer your portfolios, by the way you offer your service, and by the way you look at each customer's requirement without clubbing them into one class. Particularly in the context where banks facilitate the distribution of insurance products. I wish to say this for due consideration of the bank's boards. While this model has significantly contributed to improving insurance penetration across the country, it has also raised concerns about instances of misselling, and I would say contributed in indirect ways of increased cost of borrowing for the customers. So banks will have to look at it with a lot more emphasis on their core banking activities and not burden customers with insurances which they don't require.
You know, insurance stocks after those comments have come off between 5 and 7%, depending on which name you really look at. We have Nilesh Sathe, former IRDAI member, who is joining in, someone who really looks at the space pretty closely. Mr. Sathe, good morning. It's always a pleasure having you here with us. Now, there is absolutely, the finance minister is absolutely correct. I mean, insurance products should not be missold, and customers should not be saddled with bad products, and absolutely correct. Why is the market worried? Because there was also a hint that maybe banks should focus on their core activities, right? Not so much on allied activities like selling insurance products. Now, banks are the largest channel for sale of insurance products across the board. How do you look at this entire thing? It's not a directive. I mean, it's the FM urging, but your sense, sir?
No, good that FM has raised this issue. Misselling has to be curbed, stopped altogether. One correction, banks are not the biggest channel. It is the second biggest channel. The individual agents still dominate the market. Second biggest channel definitely is bank assurance, which is called banca channel. And the third is brokers and all that. So any channel for that matter who is misselling, strict action needs to be taken. Now, why misselling may be happening in case of banks? One is probably there may be a directive from the top that your fee-based income must go up and they must have some targets. There is no reason to give targets for this because if somebody is borrowing, then to the extent of his credit, which he is taking, he needs to be insured because in case of his death, how the recovery of loan will be made. But while doing so also, you should not force the customer to buy a product which the bank wants him to buy. And that is why IRDA initially, when it found that especially the banks which have got insurance companies, they are marketing products only of their insurance companies. IRDA said you should tie up with three that is two more insurance companies and give option to the customers to buy. This was one. So many banks which are selling insurance products have now tied up with three insurance companies, and now IRDA has allowed them to tie up with nine life, 9 general, and 9 health. But then the fact remains that there are many cases of mis-selling in case of banks, and good that the chairman IRDA as well as Honorable Finance Minister, they have got this into their radar, and something should happen. But then why it is happening? Probably the reason is IRDA is also responsible for this because initially there used to be commission regulations in which the highest rate of commission that can be paid was prescribed by IRDA, and any violation in that would be seen very seriously. Unfortunately, it has now been removed and merged with the expense of management regulation. Means overall, if you are within the total expenses of management, then whatever rate of commission you want to pay or whatever benefits you want to pay, you can pay to the distributors. That is something which, in my opinion, is not correct. There needs to be a ceiling on commission. This is one part.
Specifically on commissions. Yeah.
Ceiling on commission, yes.
Yeah. Not merged with the expense of management. Mr. Sathe, yeah, absolutely. For our viewers and investors, is the banca channel under threat, in your opinion?
I don't think it is under threat. Actually, banca channel really has spread the insurance to the nooks and corners of the country because individual agents cannot reach there where the bank branches are there. So obviously, it has definitely helped the insurance sector to perform better, to increase their spread and penetration. But at the same time, what happens, the bank manager is so powerful that if he says that you buy this policy because I am giving you loan, the fellow even doesn't apply his mind and think whether this is really required for me or it is useful to me.
You are very well connected in the industry, and you speak with has a directive gone down about sort of asking banks right from the top to stop offering incentives, commissions, targets, basically, as you said, for insurance sales? Has that happened? And because of all of this, will insurance sales go down, in your opinion, through the banca channel? Will the end result be that?
Prashant, I don't think it will go down, but it needs to be streamlined in the sense there has to be some methodology in selling, You should not keep on, somebody comes for a fixed deposit and you are giving him a single premium policy. That is not correct. But at the same time, even the customers also should look at the policy when he receives, that if it is really useful for me, is it the one which I want? And if not, IRDA has now prescribed that within 30 days you can return the policy and say that I'm not interested in this. That can be done. But then not many are aware of it. Again, there may be some pressure from the branch manager. So the question is, that is insurance education is required, no doubt about it. People should be more careful while buying insurance and should not blindly follow what maybe the branch manager or somebody is saying. Not just branch manager, even the agents are also mis-selling. I'm not saying they are not. But then because FM has raised about banks, probably it has come to the limelight. But misselling needs to be curbed.
Absolutely, sir. And as someone who has tracked personal finance on this channel for many, many years and who feels strongly about the issue, I totally take your point that as customers, we need to be far more aware and ask questions beyond, isme kitna milega? We are too fixated on returns, and that's where the missellers have a field day, right? So yes, it is joint responsibility. But having said that, it's also fair. I mean, while in a letter, it's easy to return a policy in 30 days, like you're saying. In spirit, it's not. I mean, you ask people when it comes to giving back their policies or stopping policies, is still not very easy. So coming back to the central question.
No. I differ with you. It is very easy. And a lot of people, they do make use of this free look cancellation.
Yeah.
And the entire amount of money which is paid by them is returned. And if they do not return it within the prescribed time, interest is to be paid on that.
Absolutely. So that's what I'm saying. The framework is there. Now, coming back to the central question, however, now that this has been raised at the highest level by the finance minister herself, do you expect a change in functioning at least at PSU banks? And do you expect the influence of the banker channel to go down? Will, at least in PSU banks, will we see lesser push? So will policy sales go down?
See, number one, as it is, the share of PSU banks in the total banker channel is not significant. Significant is of the private sector banks. But yes, targets are given. Now, probably proper monitoring will be done, at least in case of public sector banks. And if at all misselling cases are brought to the notice of top management, how many free look cancellations have been made, if that is noted, then probably proper action will be taken against the branch managers who are forcefully selling the policies as misselling. No doubt about it. But good that this has percolated down, and the chairman of the CMDs of the public sector banks as well as private sector banks, I'm sure will take the advice of Honorable Finance Minister very seriously, and they must take. So there is no justification for misselling or forced selling, I will say.
But again, to my question, whether policy sales will come off, you think no, right? Should not.
No, I'm not of
because
that
of
view.
this.
It will not impact much. It will not impact much. Because see, out of the total policies sold by banks, the policies so-called missold is a very small, meager percentage, but it is still there. Now, nothing wrong in curbing it. It will not impact the overall sale, because it is not everybody is selling policy wrongly to the customers. It is not so. There are a few elements which, in order to maybe for getting promotion, how much target you have achieved out of so on and so forth. There are many things. A couple of bad elements in the banks probably are doing it the way they should not do it. And if that is stopped, I'm 100% sure that it will not impact the overall sale of bank assurance channel.
Okay. Mr. Sathe, we'll leave it there. Thank you very much for joining us. It's always a pleasure and great clarity. And thank you for explaining that entire issue to us and our viewers as well. Appreciate it. I think we got the market sold off, by the way, very sharply. We were up about 160, 170 points. And there was about a 100-point drop from the day's high. We were up only 60 points 2 minutes back. And then in the last 5 minutes, markets picked up a little bit again. You can see that. We're up 100 points once again, but still 60-odd points off the day's high. And you look at the Adani Group stocks, which they've fallen a little bit more. They've all come back into being in the flat zone to actually even in the green, some of them. But look at some of them, they're all down a little bit more again. So there is that selling pressure, 3.5%, 4.5% cuts coming through here. Adani Energy Solutions is down about 7.5% at this point in time. But there is a bit, so the overall market is not feeling the heat. We are still trying to come back up. Standalone refiners have started to come up. Look at MRPL. It was not there in the mix in the morning when we started. Actually, both MRPL and Chennai Petro we should have up on our screens. So 155 on MRPL and Chennai Petro is the other one, which will also be up on your screen. Look at something like a Wockhardt Pharma, which is also zooming as we speak, 4.5%. At least I didn't see it in the morning when we began at 9:15.
Just one more. The reaction on Mahanagar gas, it's self-explanatory. There is this price hike that's come in, about 2 odd rupees, but it's not even a drop in the ocean, I guess, considering the kind of, escalation in cost that's happened with the cut in the APM gas allocation. So the stock started with a pop, and it's completely fizzled off now. It's, yeah, there we go. It's turning red already, so no excitement there on that price hike. Okay, so that's the stock screen for now. Let's go across to Mitesh and get some trades in. Mitesh, great to have you back. So it's wobbly, it's choppy, but it's still positive. What are the trades now?
I think, bounce backs tend to be choppy. I think that's pretty okay, actually. That's good. And you will see these ups and downs happening. But we're still trading with long buys. Early in the day, I was talking about financials. Right now, I've added a few more names over here. IPCA Labs, looks like slightly turning positive. So keep a stop at about 1565. Look for a target of roughly around 1640 here. And the other one, which could possibly do well, and is looking slightly stronger in the last few hours, is Infosys, which I would recommend buying with a stop at about 1830 for targets of 1880.
Sorry, what are those trades? I missed the individual names. Mitesh, what are those?
Prashant, IPCA and Infosys both on the long side.
IPCA and Infosys on the long side. Okay, just a few other names, if you will, if allow me to ask you. One is Walkhard, zooming 5% now on the name, and real estate is coming up. Lodha is up 3, Godrej Properties is up 3.5. I saw Sobha in the morning. I think it is still up some 4-5%. Anything there?
So real estate, Prashant, I'm not sure. The one which I like is is Godrej Properties, but it's after being up 3.7% today, it's nearly it's hitting those supply levels of around 2840, 2850. We're not very far away from that. So maybe around those levels you will see some profit booking coming. But if it starts getting past those levels, I think Godrej Properties could possibly see continuation by about another 100, 120 points on the upside. So that's the best in the short term. And the other one was Walkhard. Sorry, I'll just complete on that. Walkhard is a very good pattern. I think the first resistance for the stock is around 1265 odd level. So that's one. And beyond that, I think the stock chart is showing potential of heading towards 1300 levels.
No, Mitesh, I actually wanted to ask you about Protean because the company is going through some corporate developments. There's some news there. But otherwise, it's been a stock that's performed really well. In fact, we've got Vamakshi. So let's talk about this news at hand. The fact that NSE, which has been one of the largest stakeholders in Protean e-governance, is finally selling its 20-odd% stake. Stock's under a bit of pressure. Vamakshi, fill us in on the details.
Well, absolutely. So, be Protean e-governance under pressure today, and that is because NSE Investments is looking to sell up to nearly 20.31% stake in Protean eGov Technologies via OFS, that is offer for sale. Now, the offer for sale includes a base issue of 10.16% equity and also has a green shoe option of another 10.16% equity. The floor price for this issue has been determined at 1,550 rupees per share. Now, the OFS has opened for non-retail investors today and will open for retail investors on November 25th. But this is a clean out trade that is coming in from NSE Investments, and therefore the stock is seeing a bit of a pressure today.
Yeah, absolutely. It's a large chunk of equity that's coming into the market. Vamakshi, just hang on because we want to talk to you about InfoEdge as well. Before that, Mitesh, just to complete our stock check for the morning, Protean, like I said, and this is not today's call that we're asking about, but in terms of a medium-term chart, how does the stock look?
So, apologies. I think I've not been tracking the stock because I think it's only listed on BSE.
Okay. All right, Mitesh. Thanks very much. We'll let you go on that note. But back to Vamakshi. Vamakshi, what's up with InfoEdge?
There's a brokerage note that has come in from Goldman Sachs. They've gone ahead and upgraded their rating on this counter from sell to buy. They've also raised their target price from 5,700 to 8,600 rupees per share. So massive upgrade coming in from Goldman Sachs, and resultantly the stock is soaring in trade. Now what they say is that they believe the demand environment for India IT is now incrementally improving. In fact, they're expecting the company's recruitment segment revenues to grow at a much faster pace of almost 16% CAGR from FY25 to 28. As compared to 8% that we saw in the from FY23 to 25. As far as the other segments are concerned, they're expecting 20% plus revenue growth outlook for 99 acres. They believe that scale as well as stable competitive intensity should help the company achieve break-even in calendar year 25. They're quite bullish on Zomato as well, which accounts for nearly 33% of the company's market cap, and they see both upside risks to the estimates as well as multiples for the company. So overall, it's a very bullish note coming in from Goldman Sachs. Thumbs up for Info Edge, and resultantly, the stock is soaring higher.
All right, Amakshi, thank you very much for that. Just want to address the listing, the new listing today, that is Zinka, which I think will come up on your screens, and we'll have the rates up coming up on your screen in just a bit from now. There you go. It's starting. It's a flattish kind of start, 1.25% higher, 276 or so is where it's making its debut this morning. We'll take a quick commercial break here. Manisha is going to be here to focus on the commodity space, and a lot to track there as well. Stay tuned.
Exchange Commission believe that they have raised capital from the US markets while bribing officials in India. So this is a major allegation. They have been charged under the Foreign Corrupt Practices Act and the Extortion Prevention Act of the US. Primarily 4 counts against them: conspiracy to violate the Foreign Corrupt Practices Act, securities fraud conspiracy, wire fraud conspiracy, securities fraud relating to 2021 bond offering, and conspiracy to obstruct justice as well, because both these forums in the United States believe, legal forums believe, that the accused have destroyed evidence as well.
Did Gautam Adani, did Sagar Adani mislead the Bombay Stock Exchange, the National Stock Exchange? And if yes, what are the consequences? Well, we'll try to answer this question by using excerpts from the US District Court indictment order against the Adanis, and we'll refer to 4 specific paragraphs which spell out the details, the chronological list of events as to whether or not there was any misleading claims made. First up, paragraph number 103. This paragraph very clearly spells out that the FBI reached out to Sagar Adani on March 17th, 2023. And once that happened, once the FBI had reached out, there were 3 specific things that happened on that day, on March 17th of 2023. Number 1, all his electronic devices of Sagar Adani were seized by the FBI. Number 2, a search warrant was served on Sagar Adani, which very clearly listed out all the offences and the allegations for bribery under the FCPA. All of them were listed out for the benefit of Sagar Adani. And finally, a grand jury subpoena was also served on Sagar Adani, which again contained all these details. What's important is that the same paragraph also points out that this information then became available to Gautam Adani on the very next day, that's March 18th of 2023. All of this information was available. Gautam Adani was in the know of this investigation, was in receipt of that subpoena, of that search warrant. These are the important facts. These are the important dates. Keep that in mind. We now go to paragraph number 105. This paragraph very clearly spells out, the US court spells out, that Gautam Adani as well as Sagar Adani caused other people to make misleading statements on their behalf. Essentially, other people misleading on behalf of Gautam Adani and Sagar Adani, saying that they were simply not aware of this US investigation. Next, we move to paragraph number 117. This paragraph again reiterates that claim that there were misleading comments being made on their behalf of Gautam Adani and Sagar Adani, and that these misleading claims were made to the media, to the stock exchanges, as well as to financial institutions. And then we travel to paragraph number 120, and this is where the beans are sort of spilt. This is where the court in fact spells out in great detail that exactly a year after, on March 19th of 2024 of this year,
welcome back. So the equity markets have chosen their color for the morning, and it is definitely green. Let's figure out what's the latest in the commodity universe. We have Manisha with us now. Manisha, so what's catching your attention today?
Well, the green is spilling over definitely in case of commodities as well. I can say very clearly that 8 out of 10 commodities are trading in the positive. But I have chosen energy because while it continues to consolidate within that range, but overnight gains have been on the stronger side. 2% up for the crude oil prices. And with that, it's headed for the best week in last 2 months. Well, the support comes in from escalation of tensions between Russia and Ukraine. Let's not forget that Russia is the second largest producer of crude oil and exporter as well after after Saudi Arabia. So there are those concerns and premiums coming back into the market. Apart from that, the street will watch out for the OPEC and allies meeting that is scheduled for 1st of December. And yet again, the expectation is that this could be a third time over that you could see output productions being postponed by yet another month or even quarter for that matter. The third important point comes in from China, which late last night announced boosted trade by announcing policy measures there. So that clearly has been supportive. Also, there is support for energy product imports as well. When you look at the month of November, the numbers really stack up quite well there. The China crude imports for the month of November are estimated at the highest in 3 months at around 11.4 million barrels per day. So China has been a big concern when it comes to crude oil prices. And if at these lower crude oils, China is importing crude, then that could support prices going forward. But it's not just about the crude prices. Everything within the energy basket seems to be doing quite well. The natural gas prices are trading at one-year highs. We've seen 7% of gains in the overnight market. And it was day before yesterday that we saw natural gas prices gain up by 6% as well. So it clearly has been a 15% of a jump up in matter of 2 days itself. Well, prices have seen support because of forecast of colder weather in most of the Western world. And that is lifting the heating oil demand there. Apart from that, when you look at the markets in sense of numbers, EIA suggests that the gas storage has declined by 3 billion cubic feet per day in the previous week. This is versus an estimate that you could see a build-up in case of storages there. Also, when you look at the European Union, well, the gas storage there also is below 90% of capacity, which is less than 5-year average of 91%, also supporting the prices there. And as of now, the Russia pipeline that flows via Ukraine is not hampered with, but with the way the escalation of war is going on, well, markets are taking that premium in prices also. I want to take you through on what we've done in sense of prices on a week-on-week basis. So while the crude prices are up by 5%, and that's exactly how we have seen gains for heating oil and gasoline as well. But natural gas, clearly an outperformer, 23% of gains in last 1 week is what we are trading with.
All right. Look at the market. Manisha, thank you very much for that. We are ripping higher, 240 points on the Nifty. And look at, the point is the reason, and it's a very sharp surge. So already, we started, we opened today at about 23,400, surged to 23,550. That was a 150 point odd move in the green. Then we sold off to about 23,400. Sharp sort of fall from the day's high. And then from there, which at about 953 is when we made the low, we come up how? The reason, of course, is that positioning is extremely light. I mean, FIIs are short, and you're essentially getting to levels from where there have been rebounds in the past as well. And I think that is the reason why, you're seeing a very swift and without very much selling on the higher side, market coming through very, very quickly. The biggest contributor to gains is ICICI Bank. If you can have the ICICI Bank stock up, 45 index points from ICICI. And the stock should come up. Reliance is at number 2 with a 25-point index push. There you go. ICICI, 1280. Reliance with a 16 rupee gain is adding 25 index points. So that's, about 70 index points between ICICI and Reliance. And then you throw in an Infi, SBI, TCS. That is another 40, 50 odd points. So that is the bulk of what is actually contributing to gains at this stage. So it's a pretty good day, all told. But this is still very much the first hour that we're talking about. I just want to take a look at the Adani Group stocks as well. Here there is still some pressure. Of course, not as much as yesterday, but by and large, between 2, 3, 4% kind of cuts coming through on the that particular pack. The market performing even though you've got this issue at the margin. So it's turning out to be a decent Friday, a pretty good Friday after the spate of selling that we've seen so far. We're going to take a quick commercial break here. That's, of course, the market update for now. But programming will, of course, continue with our special segment. That's Indianomics. My colleague Lata will be in conversation. And they'll talk about inflation, interest rate dynamics. So that's a panel you'll see on the other side in conversation with Lata. Stay with us.
The FBI had reached out to Sagar Adani, served those search warrants. We find that there was a letter that was written by Adani Green to the Bombay Stock Exchange, to the National Stock Exchange, claiming that they had no knowledge of any ongoing investigation by the Department of Justice in the United States. And that is despite a year had transpired since they received the notice by the FBI, the search warrant by the FBI, which had very clearly listed out all those allegations and concerns with respect to bribery. And that, the US court concludes, is in fact making false as well as misleading claims. And what is important is that there are detailed obligations listed out under the SEBI norms for listing, for disclosures under the SEBI Act itself. And the apprehension is, we've spoken to very many legal lawyers, what they tell us, the apprehension is that this could very well be a fit case for SEBI, the market regulator, to take action for these misleading claims.
Welcome to Indianomics. Should food be included in the Reserve Bank's inflation targeting framework, or should Reserve Bank only target non-food or core inflation? This debate was seemingly settled in 2016 when the Reserve Bank decided to target the headline inflation, including food. But the debate has resurfaced again this month, with Commerce Minister Piyush Goyal asking for a rate cut from the Reserve Bank despite inflation jumping to a high of 6.2% in September entirely because of food. Goyal demanded that policymakers and Reserve Bank sit and discuss if food inflation needs to be part of Reserve Bank's target. Now, the Finance Minister also seemed to agree with this demand when she told CNBC-TV18 that we need to have more conversation on inflation interest rate dynamics. Just hear them out and we'll continue the conversation.
Global markets don't go by your demand and supply ups and downs. They want a consistent flow of pulses to come into India. So complex issues, but very much affecting the common man. So inflation gets actually very, very volatile because of the supply-demand constraints. The cost of borrowing is really very stressful. And at a time when we want industries to ramp up and move building capacities, bank interest rates will have to be far more affordable.
I certainly believe they should cut interest rates. Growth needs a further impetus. We are the fastest growing economy in the world. We can do even better. And frankly, the largest component of inflation is food inflation. I think it's an absolutely flawed theory that food inflation should be considered while deciding on the interest rate structure. Food inflation has nothing whatsoever to do with managing inflation. That's a demand-supply situation.
Well, more conversation needs to happen on this issue, are what both ministers are saying, and we are going to do just that today. Joining me are Professor Pulapre Balakrishnan of the Center for Development Studies, Thiruvananthapuram, Sonal Verma, Chief Asia Economist at Nomura, and Rupa Rege Nitsure, the economist who was part of the Urjit Patel Committee, which authored the Flexible Inflation Targeting Framework back in 2015. Ladies and Dr. Balakrishnan, thank you very much indeed for your time. Well, Sonal, let me start with you. In the first place, is this demand got anything to do with the academic debate on whether food should be included in the target? This appears to be that the government is worried. The second quarter was bad. We had poor, IIP numbers, core sector numbers, and even nifty results. Earnings growth was just in single digits. And so they're just passing the buck to the Reserve Bank. Is that what we are witnessing now?
It's possible, Lata, that the current trade-offs are so stark that we are having this debate. But it's good to have this debate because, we could face shocks on both the sides. There could be a scenario where food inflation is actually very low, but core inflation is much high. And then the debate actually would be, do interest rates need to be cut at all, or should we be hiking rates? So I think we do need a fundamental debate about what is the right metric to target. I would also say that, I stand on the side that we cannot just exclude, 40+% of the CPI basket at all. I mean, we know that food impacts, expectations, etc. But I think we also need to have a debate on, food is a very broad, comprehensive basket. Within food, have certain items which are very volatile and other items that are more persistent.
1 minute. Sonal, I will come to the theoretical. I'll come to the theoretical part in just a minute. Okay, let me get first thoughts on what is the immediate issue, because markets are trading and they want to have an idea of what's the immediate impact. That's why. Dr. Balakrishnan, your thoughts. Do you think that we can look through, or the MPC must look through the current food increase? Core inflation has ranged between 3 and 3.7% in the last, in this entire calendar 2024. And it's only food that has taken the headline CPI above 6%. Can the Reserve Bank and the MPC, or should the Reserve Bank and the MPC look through this food inflation?
I would say that you should start, or we should start with an idea of what our inflation index should be, what it should contain, what goods. And from that point of view, there's no question of keeping food out of it, right? The question doesn't arise. And I'd like to make a small point, Lata. You said that in 2016 or whenever the Reserve Bank decided to target headline inflation, i.e. an index with food, I just want to say it was not just the RBI, but RBI in agreement with the government of India. Now, strangely enough, the government of India seems to want food out of it, which is, which I think is not quite correct, since inflation targeting with the existing index of inflation has been renewed in 2021 after 5 years of the first round. And the final thing I want to say now, whether food inflation is the target or not, or food prices are in the inflation index or not, food inflation will impact growth. There's no question about it. And that's clearly something which the government is worried about, I would think. Just want to conclude by saying something which has not got very much attention is that the industrial growth or manufacturing growth in the last year was down to 5% from about 8 or 9%. And there's every reason to believe that that's due to high food price inflation, which leaves less with households to spend on non-food items. I'll stop here and come back if necessary.
Sure. No, I take your point, sir. In fact, FMCG company after FMCG company said the same thing, that it's taken away so much of the purchasing power that it is directly related to the lower aggregate demand. Rupa, I would know which side you are, since you were one of the authors of the Urjit Patel report. But let me twist the question a little differently, therefore. Has the Reserve Bank used the word flexible very well? It did look through the high food inflation during COVID years. So, where it is entirely supply-driven, they are looking through it. And therefore, right now, do you think there is any need to change the system?
No, I fully agree with you that it is flexible inflation targeting, and plus minus 2% gives enough margin or scope for Reserve Bank of India to adjust for stressful episodes. But, Lata, when we are talking about headline inflation, headline CPI inflation as the nominal anchor of monetary policy, almost 43-44% weight comes from food inflation, food articles. And that is very much the part of cost of living. These are linked to wages, labor market costs, and eventually it impacts inflationary expectations through that generalized inflation. So there is no question of removing food inflation from the overall inflation index, which is being used as a nominal anchor for monetary policy.
All right. Now, Sonal Verma, a question which will be very pertinent to you is that there is a slowdown, right? You were the one who were calling the slowdown probably earlier than the others. And now, we've seen that softness in the second quarter. If there is a gentleman's agreement between the government and Reserve Bank, that we will be in charge of food, if the government were to say, we will ensure that the supplies are monitored or made available. You worry about the rest of the economy, and therefore you cut rates. Because after all, there is a problem. There is a softness in industrial growth. Core inflation is down to under 4%, which is the RBI's mandate. Would that be a fair argument? We'll take charge of food, you take charge of the rest.
So I think the arguments that are being made right now by the government are actually fair, in my view. So if you look at 95% of the CPI basket, which is ex-vegetables, it is running below 4%, and it's been below 4% actually for most of 2024. So this is not a broad-based increase. In fact, if you look at the roughly 300 odd items in the CPI basket, about 70% of the items have an inflation rate that is less than or equal to 4%. So one, it's not broad-based. Second, the entire argument about, it's leading to second round effects, whether you look at rural wages, urban wage growth, inflation expectations, households, inflation expectations from businesses, none of that actually suggests there's been any spillover. In fact, the trim mean measures of inflation have been, again, below 4% for quite a long time. And third, I think the growth sacrifice is on the rise. Monetary policy needs to be forward-looking. What we've seen so far in the first half of FY25, which is clearly an undershoot on growth, I think the current assumption we are making is that this is transitory and government spending picks up, agriculture is great and second half is going to somehow see a recovery. We need to realize that we are keeping monetary policy tight when the broader inflation is under control, and simultaneously tightening macroprudential policies. So when you have the combination of the tight monetary and credit policy in this inflation backdrop, I think the growth sacrifice is much higher than is being acknowledged right now. So it is, at the end of the day, flexible inflation targeting. Are we being flexible?
Okay. No, well, Dr. Balakrishnan, would you have a different point of view? There is a sizable body of economists who believe that growth has slowed precisely because of these other reasons that Sonal mentions. Extraordinary heat, monsoons being very high in some places, government not spending enough. That is a big reason. And Reserve Bank's earlier liquidity tightening for another reason altogether. Last year, the withdrawal of notes, etc. There is a very clear expectation that now as the fisc spends and the Reserve Bank has already made liquidity almost surplus in the interbank system, growth will pick up. And therefore, you should not tinker with rates when the mandate given to you is 4% headline inflation. Your thoughts, Dr. Balakrishnan?
Yeah, I would say once again, it is not in the fitness of things that once a mandate has been given to the Reserve Bank. And let me tell you, I say this as somebody who's quite skeptical about the Reserve Bank's ability to control inflation. And I've done quite a bit of work on this. But I believe that once the mandate has been given, that you should allow them to get on with the job. Having said that, I would say that I don't particularly look at the economy quarter to quarter, but I'd just like to say in the last year, the provisional GDP estimate is 8.2%, which is extraordinarily high by historic standards. Government should be more concerned with inflation control now rather than be particularly concerned about growth. And that inflation control will require control of food prices. RBI has a very little role in this. And I just want to say a final thing. When much is said about let the RBI control core inflation, my work basically shows, and this is published, my work shows that RBI's attempt to control even core inflation is not very successful. Okay. And there's a very simple explanation of that. Okay. When you raise interest rates, firms with market power will pass it on as higher costs. Okay. And the impact of interest rates, therefore, on even core inflation is not very high.
Okay. Okay, well, this will become a little academic and I will pursue this line of argument. Give me a monosyllabic answer, three of you, before I take my first break. Sonal Verma, you are for a rate cut in December, right?
I was in favor in October, Lata.
Yeah. Rupa, for a rate cut or no in December?
No.
Dr. Balakrishnan?
I just want to say that I don't think rate cuts really have much of an impact.
No, sir. So, monosyllabic, sir. Monosyllabic. December, rate cut, yes or no? What do you want?
No.
No. Okay, so we have 2 nays to 1 yes for the rate cut. I have to take a break. I'll continue my conversation with our experts. But for Bazaar viewers, after the break, it'll be Chartbusters. You can hear the entire conversation after market hours.
In America, that Mr. Adani has broken both American law and Indian law. He's been indicted in the United States, and I'm wondering why Mr. Adani is still running around a free man in this country. Chief ministers have been arrested. Jharkhand Chief Minister was arrested. Many people have been arrested. And Mr. Adani has done apparently 2,000 crore scam, multiple others probably, but he's scot-free. He's running around. There's no problem. There's no investigation. Adani ji को एकदम अरेस्ट किया जाए. और हम जानते हैं और हम देश को दिखाना चाहते हैं कि अदानी जी की अरेस्ट नहीं होगी, और इसलिए नहीं होगी क्योंकि हिंदुस्तान के प्रधानमंत्री अदानी जी के पीछे खड़े हुए हैं और उनके प्रोटेक्टर हैं. आप लोग हिंदुस्तान के युवा, आप लोगों को रोजगार नहीं मिलता, महंगाई बढ़ती जाती है, छोटा सा कोई क्राइम करता है जेल चला जाता है. एंड इट्स ए टेस्टमेंट टू द वर्क बीइंग डन दैट the United States has done what it's doing. This is not, don't think that nothing is happening. This is flawed. We have completely obliterated Mr. Narendra Modi's image. और हिंदुस्तान का हर रिटेल इन्वेस्टर जानता है कि माधवी बुच is corrupt and Madhavi Butch is protecting Mr. Adani. But शुरुआत तो वहीं होगी ना, अदानी से शुरुआत होगी. तो अदानी को पकड़िए, अंदर डालिए, इंटेरोगेशन शुरू कीजिए और इन्वेस्टिगेशन शुरू कीजिए. और ये जो माधवी बुच जी हैं, जो इनके स्टॉक प्राइस को प्रोटेक्ट करती हैं, इनको वहां से हटाइए और क्रेडिबल व्यक्ति को वहां डालिए, क्योंकि अगर आप नहीं करेंगे तो हिंदुस्तान के जो रिटेल इन्वेस्टर्स हैं उनका जबरदस्त नुकसान होने वाला है. तो अदानी जी का अरेस्ट होना चाहिए और जो भी इस मामले में इन्वॉल्व है उस पर कार्रवाई होनी चाहिए, चाहे वो कहीं का भी हो, कोई भी हो. जहां भी करप्शन है वहां पे इन्वेस्टिगेशन होनी चाहिए, मगर इन्वेस्टिगेशन अदानी जी से शुरू होगी. और जब तक अदानी जी अरेस्ट नहीं होंगे तब तक क्रेडिबल बात नहीं बनेगी. तो शुरुआत वहां से है. अदानी जी को अरेस्ट कीजिए, उनका इंटेरोगेशन कीजिए.
राष्ट्रपति बटन आप इस पुरस्कार को देने.
Adani Group stocks see a sharp recovery after opening with deep cuts for the second session following the indictment of billionaire Gautam Adani and 7 others in the United States. All stocks sitting with cuts of anywhere between 2 to 5%.
Protein e-Gov is down nearly around 7% after the National Stock Exchange is set to sell its 20% stake in the company via the OFS route.
Sobha is up in today's trading session, up nearly 2%. HSBC gives a buy call with a target price of 2150 rupees. Brokerage says the company is poised for strong growth after its recent rights issue and improved cash flows.
Info shares surged nearly 5% after Goldman Sachs upgrades the stock to buy from sell. They raised the target price to 8,600 from around 5,700 earlier. Hello and welcome to Chartbusters. I'm Nigel. With me is Mangalam. Well, and the bulls seem to be parting on this Friday morning at least. The Nifty is up close to 200 points. The Nifty Bank that went ahead yesterday and defended the 200 DMA. That looks like the one that's ready to fight for the bulls. And also the IT index. Keep an eye out on that one. That's up close to around 1% as we speak. So big up moves is what we're seeing. Well, Mangalam, it's a good morning. And, getting to this weekend, I think the street is anticipating that the BJP has done fairly well in the state elections. And there could be some pre-positioning as well that plays out.
We'll watch out for how that plays out in the second half of trade. The first half definitely has gone to the bulls, especially after the drubbing that we've seen over the last few trading sessions. A lot of these high beta names are doing well. You spoke about banking and IT, but keep an eye out on a couple of these real estate stocks. So from the broader markets, we have DLF, which is up around, 3.5% odd. Godrej Properties itself has recovered a fair bit from lows, currently at the high point of trade. Sobha, we've been talking about that bullish note coming in from the likes of HSBC. So a bunch of these real estate stocks are doing well. And alongside that, PFC and REC have both bounced back as well. We'll keep an eye out on how these stocks pan out. And the other one that I'm looking at is Havells. That too has recovered from the lows at the high point of trade. So we'll keep an eye out on all these, individual names. The broader market's looking a lot better, even though at an index level, the mid-cap index is up just about 1/3% as against the other indices, which are up 1%. If you look at the crisscross lines, which are not crissing or crossing, we have way more stocks advancing for the number of stocks which are declining. Almost 1,700 stocks in the green for about 700 in the red itself. Let's talk about the new kid on the block. Truck operating platform Zinka Logistics saw a decent debut, listed at about a 3% premium to its issue price, but thereafter saw a bit of a sell-off, currently sitting at a 3% discount to its issue price as well. To discuss the company's post-listing plans, we have Rajesh Yabaji, the CMD and CEO of the company, joining in. Rajesh, congratulations. A momentous day for your company to be listed on the bourses, irrespective of today's moves. It is definitely a moment that you will remember with all your teammates as well. But let's talk business. Let's, tell us a little about your current revenue mix across load management, payments, vehicle financing, and what are the kind of take rates / margins that you make across all these verticals?
So thank you so much for having me on the show.
Yeah, go ahead.
Thank you so much for having me on the show. Right. Sorry. Yeah. So, as a company, as, you're aware, we are a company which is, which dreams about like trying to build a new world of trucking. And, to get there, we as a company are trying to solve the problems for the fleet operators in the country using a platform approach, helping them, get digital, helping them simplify their operations, and get more earnings by using the technology platform which BlackBuck has built. And as a company, I think, our core offerings of payments and telematics, which were basically the first launched offerings initially, form a large part of the revenue as even mentioned in our prospectus, right? And because of the nature of businesses we are in and the nature of revenues, what we make is largely technology kind of revenues, platform kind of revenues. Most of these come at a very high contribution margin of like 90 to 93%. And because of the nature of these revenues, which have high level visibility, because you acquire a customer, you know that the customer is going to be there on the platform for a very long tenure of like 5, 7, 10 years. And then there's a high visibility of revenue. And these revenues are generally recurring in nature, so you don't need to really invest in substantial amount of sales and marketing. Every time you generate revenues, we only put sales and marketing to generate newer customers to the platform. The older customers continue to compound the revenue because of the nature of the business, the technology based revenues. Our contribution margins in any business sort of range between 75-80% to as high as 99%, with a blended contribution margin profile of 90 to 93%.
Right, Rajesh, but the stock market likes cash flows, the stock market likes EBITDA, the stock markets like net profits. Despite the high contribution margin that you're talking about and large market share, you're still EBITDA loss making, operating cash flow negative, and your first quarter net profit too has come in from exceptional gains. So you want to understand about that, while you are acquiring customers, that too at a high contribution margin, there is operating leverage playing out with visibility, etc. That's not showing in your numbers in terms of at least the operational profits or the net profits, or even the operational cash flows. So could you give us a sense of when you intend to be positive on all these fronts?
Yeah. So, number one is we as a company are PAT profitable in the first quarter, even without the exceptional item. That's point number one, including all costs, ESOP costs, everything, number one. Number two, operational profitability, which we measure through adjusted EBITDA, which is also the indication of cash flows. We have been fully profitable for the last financial year, and we made close to about 18, 19 crores in, adjusted EBITDA in the first quarter. And our cash flows, like last financial year, with an adjusted EBITDA of, about 13.5 crores, we made a free cash flow of 45 crores. So because of the nature of revenues we have, our adjusted EBITDA is what mimics the, free cash flows. So as a company, we've been consistently throwing, money in cash flows, over the last, 4 to 6 quarters, and we'll continue to do that. And because of the nature of revenues, and the operating leverage, because if you can see, last financial year first quarter and this financial year first quarter, the growth in contribution profit flew down into the, EBITDA margins, like with an efficiency of like 75%. So that, kind of a play is going to happen as we keep building the company, and that will drive consistent profitability, of the company as we step into the future.
Rajesh, good morning and welcome to the show. This is Nigel on this side. You've given us a fair insight into business, take rates, contribution as well. Give us two numbers. The sustainable growth rate that you're looking at, that's on the revenue front. And according to your calculation, what should the margin look like?
Yeah. So, can't comment obviously on the future numbers. If you look at...
Why? You can give us an aspiration, Rajesh. Now you're listed, you can give us an aspiration.
Sure.
Nothing wrong with that. Regulators are going to be okay.
Of course. As a company, we've grown in the first quarter close to about 60%. Last year, we grew like 70%. So we continue to compound on growth. Customers keep, we acquiring customers at a, better pace, similar paces as previous years. And so hence, so growth is the mantra. We, as you guys know, we operate like multiple different service offerings. And today the revenue largely comes from only like 2 core offerings. The remaining offerings are scaling at a very fast pace. So you can definitely expect the revenue to, keep compounding, on the similar lines. And if you put a math on operational leverage there, because the company really is not investing in factories or does not have like assets, because the ROE of the company is going to be very high because there is no deployed assets in the company as we keep moving forward. So using the operating leverage methodology, you will be able to understand where we will be in the steady state margin profile.
Got that. Take that point, Rajesh. Thank you so much for joining in. What we'll do is we'll probably invite you once again for a longer conversation to try and explain to us what your business is, more importantly, how the operating leverage plays out as well. But for now, Street, we'll just look at 50-60% growth. All right.
Absolutely. All right. Thanks, Rajesh, for joining in and filling us in with all of those details. I'll tell you what, we'll slip in a short break. On the other side, we'll be joined by Manish Jain, who's the Managing Director of Envido Infra Engineers. He'll discuss the company's IPO plans. Stay with us.
A big day, a major setback to the Adani Group, because this is the US Department of Justice, a court in the United States which has opened an indictment against Gautam Adani and his nephew Sagar Adani and 7 others. Got the US Securities and Exchange Commission, which has also made charges against the Adani Group and members of the Azure Power Corporation. Essentially, they have said that both these companies got together, colluded to gain government contracts for the Solar Energy Corporation of India, because they were working with this company for solar energy, and in order to get contracts from different state governments, they tried to bribe Indian officials across the country, primarily in the state of Andhra Pradesh, and offered bribes to the tune of over 2,000 crore rupees. Now, why has this become important? Why did the US courts take cognizance of all of this? This is because the US courts believe, and the US Securities Exchange Commission believe, that they have raised capital from the US markets while bribing officials in India. So this is a major allegation. They have been charged under the Foreign Corrupt Practices Act and the Extortion Prevention Act of the US. Primarily 4 counts against them: conspiracy to violate the Foreign Corrupt Practices Act, securities fraud conspiracy, wire fraud conspiracy, securities fraud relating to 2021 bond offering, and conspiracy to obstruct justice as well, because both these forums in the United States believe, legal forums believe, that the accused have destroyed evidence as well.
Did Gautam Adani, did Sagar Adani mislead the Bombay Stock Exchange, the National Stock Exchange? And if yes, what are the consequences? Well, we'll try to answer this question by using excerpts from the US District Court indictment order against the Adanis. And we'll refer to 4 specific paragraphs which spell out the details, the chronological list of events as to whether or not there was any misleading claims made. First up, paragraph number 103. This paragraph very clearly spells out that the FBI reached out to Sagar Adani on March 17th, 2023. And once that happened, once the FBI had reached out, there were 3 specific things that happened on that day, on March 17th of 2023. Number 1, all his electronic devices of Sagar Adani were seized by the FBI. Number 2, a search warrant was served on Sagar Adani, which very clearly listed out all the offences and the allegations for bribery under the FCPA. All of them were listed out for the benefit of Sagar Adani. And finally, a grand jury subpoena was also served on Sagar Adani, which again contained all these details. What's important is that the same paragraph also points out that this information then became available to Gautam Adani on the very next day, that's March 18th of 2023. All of this information was available. Gautam Adani was in the know of this investigation, was in receipt of that subpoena, of that search warrant. These are the important facts. These are the important dates. Keep that in mind. We now go to paragraph number 105. This paragraph very clearly spells out, the US court spells out, that Gautam Adani as well as Sagar Adani caused other people.
Welcome back. You're watching us here on Chartbusters on CNBC-TV18. From an issue that just listed to an issue that has just opened. The primary market action, Envido Infra Engineers IPO opens today, will close for subscription on the 26th of November. The company is actually, planned to raise about 650 crore rupees, between 140 to 148 rupees as a price band, and at the higher end of the issue price, seeking a market cap of close to around 2,600 odd crore rupees. Manish Jain, who's the managing director of the company, joins us now. Thanks a lot, Manish, for joining in. Just a couple of questions first up. One of the objects of your issue is to actually repay debt on the books of the company. So if you could tell us, how much is the debt on the books as of now, and what will it be once you repay the debt? And secondly, what is your current order book?
Good morning. Good morning for having me on the show. The total debt of the company as on 30th of June is 300 crores. So we are doing projects under EPC as well as HAM.
I think we've lost the connection out there. We just repatch that connection. So the company obviously is into wastewater and sewage treatment. Last year they did revenues of close to around 700 crores with profits of a little over 100 crores. And we will get to know a little more about their order book and the objects of the issue as well. They are looking to, repay some of the debt that they have on their books with regards to this. The management has said that it'll be about 200 to 300 odd crores as of June. What we'll do is take a short break, come back, and on the other side, we continue our conversation with the management of Envido Infra.
Misleading statements on their behalf, essentially other people misleading on behalf of Gautam Adani and Sagar Adani, saying that they were simply not aware of this US investigation. Next, we move to paragraph number 117. This paragraph again reiterates that claim that there were misleading comments being made on their behalf of Gautam Adani and Sagar Adani, and that these misleading claims were made to the media, to the stock exchanges, as well as to financial institutions. And then we travel to paragraph number 120, and this is where the beans are sort of spilt. This is where the court, in fact, spells out in great detail that exactly a year after, on March 19th of 2024 of this year, a year after the FBI had reached out to Sagar Adani, served those search warrants, we find that there was a letter that was written by Adani Green to the Bombay Stock Exchange, to the National Stock Exchange, claiming that they had no knowledge of any ongoing investigation by the Department of Justice in the United States. And that is despite a year had transpired since they received the notice by the FBI, the search warrant by the FBI, which had very clearly listed out all those allegations and concerns with respect to bribery. And that, the US court concludes, is in fact making false as well as misleading claims. And what is important is that there are detailed obligations listed out under the SEBI norms for listing, for disclosures under the SEBI Act itself. And the apprehension is, we've spoken to very many legal lawyers, what they tell us, the apprehension is that this could very well be a fit case for SEBI, the market regulator, to take action for these misleading claims.
Welcome back, Paul. Let's get chatting with the management of Envido Infra Engineers. We have with us Mr. Manish Jain. Hi, Mr. Jain. You were telling us the total debt in your books is around 300 crores. Out of this issue, 120 crores will be paid back. So post the payback, the net debt will be in the vicinity of around 180 crores. Could you confirm that? And on this 120 crores, what will the interest saving be?
Basically, on a standalone basis, the overall debt in the books is 210 crores. So we intend to repay a term loan of 120 crores. So standalone basis, the turnover, the term loan in the books that shall remain will be somewhere around 90 crores. Further 98 crores that comes from the term loan from our HEM projects. So that HEM project term loan that will continue because these are in SPV books. So that is a subsidiary of the Envido Infra Engineers. So those term loans in itself will continue. Going forward, this is one of the HEM projects which the company has already executed. There is one more HEM project for which the company shall be taking up that project in future. It is a Mathura HEM project for which we have earmarked the equity contribution of 30 crore from our from the IPO itself, and then there is a working capital requirement of 181 crore which is proposed from this IPO.
All right.
What is the interest savings on the 120 crores? You were borrowing at 10%, 11%. What was it? So effectively, you'll save 12 to 13 crores is what we understand.
Yeah, the main purpose is not that interest saving, rather than it's a cash flow cycle where we are more concentrating on. So the cash flow cycle requires that because we are doing government projects, so we are required to furnish bid bond guarantees, performance guarantees, and retention securities, for which we are having working capital limits from our bankers. So the ultimate purpose, because all these working capital limits are backed by FDRs. So in future, we would like that the margins which we are required to put into our banks, going forward, our credit rating, which is currently A-, gets further improved so that the FDR margins and the collaterals that get reduced. So that DC came to reduce it and then bid on a strong balance sheet for further HEM project we can bid forward. Thank you.
You speak about your cash flow and working capital as well. You know, working capital days have been very stretched in the last couple of years. Cash flow from operations was negative in FY24. Could you tell us what is your working capital cycle right now and where do you intend to take this with this infusion that you're doing in your books?
The net working capital gap for FY24 is 40 days. So the total cash conversion cycle, which includes inventory days, unbilled revenue days, and then debtor cycle is 160 days. And the creditor repayment days are 120. So the net working capital gap is 40 days. We understand that we are making the payments to our MSME vendors within 45 days time, and non-MSME vendors within 60 days time. So we expect that the working capital cycle going forward, it will get reduced to from 160 days, the cash conversion cycle, which is presently 160 days, it should come down to somewhere around 140 days time.
Got it. Can you tell us a little bit more on business? The WWTPS and the WSSP, both those two are the verticals that you have as of now. How do you see the mix changing going ahead?
Basically, there are three types of treatment plants. One is sewage treatment plant, where is the domestic waste which is being treated. The other one is the industrial one, wherein the wastewater emanating from various industries in an industrial cluster, it is treated. So that is a common effluent treatment plant. And third one is the potable water which is coming to our houses. So the water after being drawn from rivers is taken to a plant, treated, and then supplied to our homes for drinking purposes. So basically there are these three types of plants. Along with its schemes. Scheme says that the pipelines and pumping stations which are required to be constructed. So this constitutes the entire scheme then. So this is the area, and company exists in all the three segments. Company is driving the growth backed by its strength in its designing capabilities along with the execution capabilities. We are having a team of 180 plus engineers. Myself, my elder brother, and the chairman of the company, Shri Sanjay Jain, we both are chemical engineers. So process engineering and designing has always remained our USP. And we are being backed by a team of professionals in our company. So we are doing the entire designing in-house. Along with this, the execution of the projects is done in-house. So we are able to execute the projects well in time, remain ahead, and the EBITDA margins and PAT margins that are being maintained for the past 3 years consistently.
All right, we take that point. We'll discuss more on your order book, your revenue generation and your execution over the next few days when we converse with you, when you list. But up until now, thank you so much for joining in. Wish you good luck for the issue, Mr. Jain. With that, we're out of time on this edition of Chartbusters. You stay tuned to CNBC TV18. Trading Hour comes up next.
In America, that Mr. Adani has broken both American law and Indian law. He's been indicted in the United States, and I'm wondering why Mr. Adani is still running around a free man in this country. Chief ministers have been arrested. Jharkhand Chief Minister was arrested. Many people have been arrested. And Mr. Adani has done apparently one 2,000 crore scam, multiple others probably, but he's scot-free. He's running around. There's no problem. There's no investigation. Adani ji को एकदम अरेस्ट किया जाए. और हम जानते हैं और हम देश को दिखाना चाहते हैं कि अदानी जी की अरेस्ट नहीं होगी, और इसलिए नहीं होगी क्योंकि हिंदुस्तान के प्रधानमंत्री अदानी जी के पीछे खड़े हुए हैं और उनके प्रोटेक्टर हैं. आप लोग हिंदुस्तान के युवा, आप लोगों को रोजगार नहीं मिलता, महंगाई बढ़ती जाती है, छोटा सा कोई क्राइम करता है जेल चला जाता है. एंड इट्स ए टेस्टमेंट टू द वर्क बीइंग डन दैट the United States has done what it's doing. This is not, don't think that nothing is happening. This is flawed. We have completely obliterated Mr. Narendra Modi's image. और हिंदुस्तान का हर रिटेल इन्वेस्टर जानता है कि माधवी बुच is corrupt and माधवी बुच is protecting Mr. Adani. But शुरुआत तो वहीं होगी ना, अदानी से शुरुआत होगी. तो अदानी को पकड़िए, अंदर डालिए, इंटेरोगेशन शुरू कीजिए और इन्वेस्टिगेशन शुरू कीजिए. और ये जो माधवी बुच ही हैं, जो इनके स्टॉक प्राइस को प्रोटेक्ट करती हैं, इनको वहां से हटाइए और क्रेडिबल व्यक्ति को वहां डालिए, क्योंकि अगर आप नहीं करेंगे तो हिंदुस्तान के जो रिटेल इन्वेस्टर्स हैं उनका जबरदस्त नुकसान होने वाला है. अदानी जी का अरेस्ट होना चाहिए और जो भी इस मामले में इन्वॉल्व है उस पर कार्रवाई होनी चाहिए, चाहे वो कहीं का भी हो, कोई भी हो. जहां भी करप्शन है वहां पे इन्वेस्टिगेशन होनी चाहिए, मगर इन्वेस्टिगेशन अदानी जी
Hello and welcome to Trading Hour. I'm Sonal Putra. With me is Vinny Motiwala. It's a Friday morning and bulls are in the Friday mood today after a long time, I have to say. So after the cuts that we saw yesterday, today there's a gap up opening that we saw and actually we built onto that. So it's a 183 point gain on the Nifty that we're seeing. Yes, it has come off from the highs. It was up more than 200 points at a point in time. For now, it's holding above the 23,500 mark, crucial levels that we are watching out for. And you know what? It's the Bank Nifty which is supporting the gains on the Nifty that we are seeing right now. Mid caps are underperforming today. It's just a 0.3% of a gain that we are seeing on the mid cap index. But other than that, across segments, we are seeing some green coming up on the screen. Except for Nifty Media, all the sectoral indices are in the green. And we've been talking about Adani stocks. They were under severe pressure yesterday, but most of them have seen a recovery from the lows around 6 to 11%. Adani Ports, for instance, from the Nifty pack, it's up in the green at the day's high. And we do have other names as well. They are in the red, but they have recovered sharply from the low. So watch out for that one. But we do have a power pack show, but definitely a lot of stocks in focus.
Absolutely, a lot of stocks in focus. And you know what's interesting, Sonal? Yesterday we had seen PSU banks. They were under pressure. Today we're seeing a different story here as well. They have recovered as well. Bank of Baroda 3% uptick, PNB, SBI, all of them are seeing good gains coming in. IT and Realty, that manages to sustain those gains that we had seen coming in. Even Nifty Realty is holding on to gains of 2%. Nifty IT today is also holding on to gains of almost 1.5%. So that, you know, the gains that we've seen for Nifty Realty and IT, that seems to be continuing as of now. But like Sonal was saying, we have a whole host of stocks that are in focus today as well. And let's start with one of them, Reliance. That is in focus. And why? Because we have a positive note that is coming from JP Morgan and Morgan Stanley. What is the note actually highlighting? What is making them positive on Reliance Industries? Sudarshan is joining in with us with more details on that. Good morning, Sudarshan.
Morning, Vinny. So we have two positive brokerage notes on Reliance Industries. Notes are from JP Morgan and Morgan Stanley. Both the brokerage houses have overweight call on the stock, and JP Morgan has a target price of rupees 1468 and Morgan Stanley has a target price of rupees 1662 per share, implying an upside up to 34% from current levels. So what does JP Morgan say? It says one of the two drivers of the recent underperformance is weak refining margin, and JP Morgan says that has now started reversing, which is positive. Second, poor retail top-line growth is difficult to anticipate, but expectations after the recent underperformance have compressed. And post-stock correction, implied valuations for retail business are 25 times FY26 estimated EBITDA, and valuations for retail business are now below historical levels, and it's below peer retailers as well. Morgan Stanley says refining margins are starting to recover after two tough quarters, and free cash flow engine should pick up pace as 0.6 million barrel per day of refining capacity shuts in 2025 globally. Also, net capacity addition should be half of the demand growth, and new energy is seeing demand improved outlook. So considering all these factors, both JP Morgan and Morgan Stanley have a positive outlook on Reliance Industries.
Okay, so the O2C business specifically on the refining side set to improve. Thank you so much, Sudarshan, on that. In fact, MRPL and Chennai Petro, both these stocks, standalone refiners, they are also higher on the back of this commentary because refining margins improving is a big positive for them as well. But the other big move that we're seeing is on Praj Industries. The shares are higher by almost 10%. Company has released its growth plans. Vamakshi is here to tell us what are they expecting by 2030. Vamakshi.
Well, Sonal, huge uptick coming in from Praj on the back of positive commentary as well as positive outlook that came in from the management. They're eyeing several opportunities which include sustainable aviation fuel, biopolymers as well as energy transition and climate actions. Overall, they have said that they're expecting energy majors to invest 25 lakh crores in the clean energy sector by 2030. Traditional oil and gas market also is expected to invest 21 lakh crores in the next 10 years. Now, what does this mean for Praj in terms of an opportunity? They see significant demand for modularization solutions for setting up plants. And in order to cater to this demand, they're setting up a dedicated advanced manufacturing facility in Karnataka. They've made an investment of around 400 crores, and they believe that the plant can deliver revenues of anywhere between 2,000 to 2,500 crores annually at the optimum level. Additionally, they have also highlighted that India has set the target of blending 1% by 2027 and 2% by 2028. This is for sustainable aviation fuel. And EU and USA have kept the SAF blending target of 6% and 10% respectively. So therefore, sustainable aviation fuel has also opened up a new door of opportunity for Praj Industries. Now, overall, given how the demand is expected to pan out, the company expects to triple its revenue by 2030. They have a revenue run rate of 3,400 crores as of now, and this is expected to rise to 10,000 crores. And in fact, their share of exports is also expected to rise from 29% currently to over 50%. So overall, a very strong commentary coming in from the management. Resultantly, the stock is soaring in trade.
Okay, surely keeping an eye out on Praj, trading at the day's highest point as of now. But on that note, we are going to slip into a very short break. Don't go anywhere. After the break, we will discuss what's buzzing in at the commodity space with Manisha Gupta.
और जब तक अदानी जी अरेस्ट नहीं होंगे तब तक क्रेडिबल बात नहीं बनेगी। तो शुरुआत वहां से है, अदानी जी को अरेस्ट कीजिए, उनका इंटेरोगेशन कीजिए।
राष्ट्रपति बटन, आप इस पुरस्कार को देने के लिए स्वयं गयाना आई है। स्पेशल जस्टिस के लिए मैं आपको बहुत बहुत धन्यवाद देता हूं। फ्रेंड्स, भारत और डोमिनिका दो डेमोक्रेसीज हैं। साथ साथ हम दोनों पूरे विश्व के लिए महिला सशक्तिकरण के भी रोल मॉडल है। दोनों ही देशों में महिला राष्ट्रपति हैं। भारतीय राष्ट्रपति माननीय मुर्मू जी जनजातीय समाज से आने वाली पहली राष्ट्रपति हैं। उसी तरह राष्ट्रपति बटन भी डोमिनिका की पहली इंडिजीनियस राष्ट्रपति है। आप दोनों विश्व की सभी महिलाओं के लिए प्रेरणा का स्रोत है। फ्रेंड्स, भारत और डोमिनिका के बीच सदियों पुराने ऐतिहासिक और सांस्कृतिक संबंध है। 19वीं सदी में कई भारतीयों ने डोमिनिका को अपना घर बनाया। उनके द्वारा रखी गई आधारशिला हमारे संबंधों को मजबूत नींव प्रदान करती है। उसी से प्रेरित होकर हम डोमिनिका के विकास कार्यों और कैपेसिटी बिल्डिंग में सक्रिय योगदान दे रहे हैं। भारत के लिए यह गहरे संतोष का विषय रहा है कि हम कोविड जैसी आपदा के समय डोमिनिका के लोगों की सहायता कर सके। कैरिकोम क्षेत्र में डोमिनिका हमारा बहुमूल्य पार्टनर है। आने वाले समय में हम हमारे संबंधों को नई ऊंचाइयों पर ले जाने के लिए प्रतिबद्ध हैं। आज दिए गए सम्मान से हमारी यह जिम्मेदारी और बढ़ जाती है।
Welcome back. You're watching Trading Hour on CNBC-TV18. Let's move on and talk about the commodity sector, what is happening there. And we're going to be focusing on gold today. We have Manisha joining with us to give us all those updates. Good morning, Manisha.
Morning, and thank you for that, Vinny. Well, today is the fifth straight day that we have seen gains continue in case of gold prices, and with that, it's trading at a one-week highs. When you look at this week itself, the prices have gained up by nearly 5%, and for this year until now, the gold prices are up by nearly 30% as well. Well, even as the dollar index is holding around that 107, which is a one-year highs, but even with that, safe haven buying continues to come in case of gold prices. There is intensifying escalation in war between Russia and Ukraine. That has been adding premium to prices, and then there are many Fed official speeches as well happening today in the New York session. So before we do see this weekend, you could be looking at volatility in case of gold and dollar prices in the evening today. Also, there's a likelihood that the US Fed may not cut interest rates in the month of December. From a probability of that happening from 82.5% in the previous week, right now is as low as around 55 to 56%. So that in turn should have weighed onto the gold prices, but we haven't seen that happen. So after hitting a low of around 25.80 in the previous week, we're trading at around 26.80 on your screens right now. So good amount of gains coming back for this one.
Okay, all right. That's what's happening on the gold side. Thank you so much, Manisha, for telling us what's happening in the commodity space. We'll slip into a short break. When we return, we'll discuss market technicals with Mitesh Thakkar, also discuss the top trading bets. Stay tuned.
एक्सेलेंसी, एक बार फिर इस सम्मान के लिए मैं आपका बहुत बहुत धन्यवाद करता हूं।
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com. CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown, and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming
Welcome back. You're still tuned into Trading Hour. Well, let's talk about the Adani stocks because there's been a sharp recovery from the lows. Remember, there was a sharp fall yesterday, almost on lower circuits, most of them. But today, Adani Enterprises, it is at the day's high, almost a 5%, 6% recovery from the lows. We have Adani Green as well, which is trading in the green right now. It's up 1%. There's Adani Ports and Adani Power as well. These 4 names have recovered from the lows, but we do have Adani Energy Solutions, which is still in the red. So that is the stock that we should watch out for. Adani Power, of course, is up around 1.5%, but Adani Energy Solutions, that's the stock which should also come up for you on the screen. That one is down around 4% as we speak. So yes, a sizable recovery across the board, barring 1-2 names in the entire universe, but just watch out for that one because there is a definite recovery which is underway. But let's talk about the other name, which is Mahanagar Gas, because the company has finally gone ahead and increased prices in the CNG segment. Now, remember, this is something which was expected, and the company has gone ahead, taken that first phase of price hike. It's a 2 rupee price hike in the Mumbai metropolitan region, takes the total price to 77 rupees a kg. And the company, the last time had increased prices was back in July. And this time around, this price hike has come in because of the cut in domestic gas allocation that we've been talking about. It was a sharp cut, and the expectation was that the companies will go ahead and take a price hike. Now, is this enough is the big question, right? Because this time around, the company has taken a price hike of 2.5%. But considering that there has been a 40% cut in allocation, these companies are required to take a 8 to 10% price hike in order to ensure that they are at least neutral at the margin level. But that is not something that has happened. But despite that, the street is happy about the fact that they've at least gone ahead and done something to maintain their margins. But if they do a larger price hike as well, so that would mean a hit on their volume. So it's a gamble that the companies are taking. But yes, the stock is higher on the back of this. IGL, Gujarat Gas will also be in focus, whether they go ahead and take price hikes. But more important for IGL and MGL, because they have a bigger volume chunk coming in from the CNG segment. But for now, these stocks on our radar.
Okay, surely keeping an eye out on them. But on that note, we're going to slip into a very short break. And after the break, we'll talk to Sheshadri Sen from MK Global, who's joining in with us to discuss the growth slowdown concerns. What is the second half going to be looking like for India? Politics, policies, everything on that front.
in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
A big day, a major setback to the Adani Group because this is the US Department of Justice, a court in the United States which has opened an indictment against Gautam Adani and his nephew Sagar Adani and 7 others. Got the US Securities and Exchange Commission which has also made charges against the Adani Group and members of the Azure Power Corporation. Essentially, they've said that both these companies got together, colluded to gain government contracts for the Solar Energy Corporation of India because they were working with this company for solar energy. And in order to get contracts from different state governments, they tried to bribe Indian officials across the country, primarily in the state of Andhra Pradesh, and offered bribes to the tune of over 2,000 crore rupees. Now, why has this become important? Why did the US courts take cognizance of all of this? This is because the US courts believe, and the US Securities Exchange Commission believe, that they have raised capital from the US markets while bribing officials in India. So this is a major allegation. They have been charged under the Foreign Corrupt Practices Act and the Extortion Prevention Act of the US. Primarily 4 counts against them: conspiracy to violate the Foreign Corrupt Practices Act, securities fraud conspiracy, wire fraud conspiracy, securities fraud relating to 2021 bond offering, and conspiracy to obstruct justice as well, because both these forums in the United States believe, legal forums believe, that the accused have destroyed evidence as well.
Did Gautam Adani, did Sagar Adani mislead the Bombay Stock Exchange, the National Stock Exchange? And if yes, what are the consequences? Well, we'll try to answer this question by using excerpts from the US District Court indictment order against the Adanis. And we'll refer to 4 specific paragraphs which spell out the details, the chronological list of events as to whether or not there was any misleading claims made. First up, paragraph number 103. This paragraph very clearly spells out that the FPI reached out to Sagar Adani on March 17th, 2023. And once that happened, once the FPI had reached out, there were 3 specific things that happened on that day, on March 17th of 2023. Number 1, all his electronic devices of Sagar Adani were seized by the FBI. Number 2, a search warrant was served on Sagar Adani, which very clearly listed out all the offences and the allegations for bribery under the FCPA. All of them were listed out for the benefit of Sagar Adani. And finally, a grand jury subpoena was also served on Sagar Adani, which again contained all the
Welcome back. You're watching Trading Hour on CNBC-TV18. Let's bring on board Mitesh Thakkar now, who's joining us to give us a quick take in terms of technicals and the market. Mitesh, good morning. And markets, good recovery from yesterday, right? What are we expecting now for the next week? What are we looking out for in terms of the market? Any levels that we should be watching out for specifically?
Good morning. So I think, one, we were extremely oversold, and 2, I think the good thing was, which happened yesterday, was that the Bank Nifty was the first to bounce back. It hit the 200 average yesterday and then bounced back. And I think that bounce back is still showing signs of continuation. The first level for the Bank Nifty was 50,900. And we got a high of around 59.80 today, but then hourly close didn't happen above 5,900. But my sense is that, as the day progresses, and even on Monday maybe, we will retest those levels. We'll try to get past those levels again and hit towards 50,900. Once that is crossed, then a good chance that the Bank Nifty could, head towards 51,400, 500 zone. So overall, I think that will also propel the Nifty on the upside. So overall, I think the indices would be buy on declines for me. The Bank Nifty, I think, around 50,600 spots, so about 80 points lower, can be bought with a 150 point stop loss for the first target of 5,900 and then eventually 51,400.
Okay, so now any fall would be a buying opportunity according to you, Mitesh. Any stocks that you think could be a good bet, maybe on the downside or the upside?
See, since today morning, I have suggested that, let's lean a bit towards the financial names. So I think the Bank Nifty has done well, but I think the Nifty IT is also, showing signs of momentum on the upside. So my picks over there would be HCL Tech. Buy here with a stop at about 1850. Look for targets of 1900 plus over here. And the other one which I like is Tech Mahindra. I would want to see the stock stabilize above 1735. So it's about 8-9 points lower from there. But above that, buy with a stop at about 1710 for targets of 1780.
Okay. And Mitesh, any picks in the mid-cap space that you would be looking at as of now, or maybe with your more skewed towards large cap?
I'm clearly skewed towards large cap. The idea is that the indices have fallen a lot. So when the bounce back in the indices happen, I think it will be led by large cap. So in the short term, extreme short term, which is about 2 to 5 days, I think my bias is clearly towards the financials and the IT names.
Okay, all right, financials in the IT space. Thank you so much, Mitesh, for joining in as always and taking us through your technical picks. With that, let's move on and get in Seshadri Sen, the head of research and strategist at MK Global. They made a trip to Delhi. So there have been a lot of takeaways and what's happening on the policy front as well. So let's get that conversation going. Seshadri, good morning. Thank you so much for joining in. Well, tell us more about this trip of yours. What was the on-ground situation? We've been talking about this consumption decline. There have been conversations in the circles. We are looking forward to an RBI policy as well. Do you think we will see some action on the back of the slowdown in consumption that we've been seeing?
Yeah, so our takeaways were in three sections. The first is that the first worry is that capex has slowed down significantly in the first half. The general feeling in Delhi is that that was more idiosyncratic, based out on the elections and a very heavy monsoon, which has delayed the pickup in government capex. And we should see a slight acceleration in the second half now that things are settling down. The second one wrinkle there, though, is that given the hard limits on state borrowing, the recent pickup in welfare spending from the states will probably slow down state capex. So central government capex should pick up in the second half. The MK view is that it will probably miss the annual budget targets by a small bit. But second half should be much better than the first half in general. But on the state side, we should expect a slightly slower capex trajectory because of the pickup in welfare spending that we've seen over the last 2 years. On consumption, the corporate results has raised some worries, but there is no alarm in Delhi at the moment. The overall macro data is at worst mixed. Yes, there is a feeling that the RBI tightening has played a role, but given the complex geopolitical situation, the DXY rally, etc., I think the RBI will have to decide at its own pace when it is a good time to unwind its overall tight monetary policy stance. And they've already made a first step there, I may point out, by moving their liquidity stance to neutral. So those were the two broad takeaways as far as the domestic economy is concerned.
Absolutely. Those are the important takeaways on the domestic economy front. So one of the points first I want to pick out on is in terms of consumption. Q2 wasn't that exciting in terms of a trend there, but what are we expecting in terms of the second half? And is there something specifically that can be done to improve this consumption trend from the government front or the policy fronts that are coming in?
Not everything can be solved by government at short notice, right? So meaning consumption has slowed down. There is a base effect there. We all know that at the state government level, there is a considerable amount of welfare spending, which is a consumption stimulus by itself. Is there alarm in Delhi at the slowdown in this consumption? No. At the moment, the feeling is that it's probably a cyclical slowdown. It may not be as bad as the corporate results suggest. In due course, if the RBI starts to ease up a little bit, some of this will get solved by itself. That was the broad feeling that we came away with, but they're continuously watching it. Yes, if it does continue to slow down, then I think, there may be some intervention needed sometime in calendar year 25. Having said that, our view is that this will be a slightly prolonged consumption slowdown. There are multiple factors. There's a base effect. There is the impact of what was a very poor white-collar job market in the second half of FY24. That's having a delayed impact. Longer term, we are not worried at all about consumption. This is MK's view. As India moves up the per capita income charts, there will be a continued exponential growth in many categories in consumption. But yeah, we may have to live with a quarter or two of a slowdown and wait for us to see how that evolves. the white-collar job market itself, especially if the IT sector recovers, is showing signs of improvement. So that will solve part of the problem as well.
Okay. So the white collar job part of things are improving, or at least the consumption story will continue, according to you, Seshadri. There's a lot happening in the geopolitical arena as well. We have a new president coming in the US. How do you see that thing changing things for India? Do you think still the focal point will continue to be India for global investors, for consumption patterns as well?
Yeah, so that was also part of our discussions. We spoke to 2 or 3 geopolitical experts while there. At a first order level, India is not worried at all. The India-US strategic relationship has survived multiple precedents, and Trump, if anything, has been a good partner for India in the past. So there are no immediate worries. A tariff would, of course, hurt India, but it would hurt all of India's competitors equally. India is not being singled out. So that is not incrementally that much of bad news as far as India is concerned. There is, however, a short-term second-order problem that India may have to deal with. If US and China do enter into a tariff or a trade war, right? US imposes tariffs, China depreciates the currency. Then that instability, especially with global dollar strength, could have an impact on India's flows and India's external account. And that is something India has to deal with. Our view is that if it happens, it will be strictly short term. It will be a 2 to at worst 3-quarter phenomenon. And we are in a period where India's current account deficit and forex reserves are at all-time, strong positions. So it's not something that's going to majorly destabilize India or even the Indian markets for an extended period. But that would be the key second-order geopolitical risk that a US-China trade war could bring in.
Sure. And Mr. Sen, just the last word in terms of the political scenario in India, right? General elections is over. Tomorrow we have Maharashtra's election results. And next year we're watching out for UP Assembly elections. So that state elections, those keep continuing. Anything that we have to worry on that front or anything that one should be watching out for over there?
At the moment, no. I think the big event is over, which was the Lok Sabha elections. There was a bit of a setback for the NDA, and they seem to have taken it in their stride at the moment. But the key factor we are watching out for is that does that mean that the government pivots from capex-led federal spending to a little more bias towards revenue expenditure and welfare? The final budget of FY25 did not seem to reflect that, and we don't think that that is the case. Yes, at the state level, and we've written on this, there is a pivot towards welfare spending that started actually before the Lok Sabha elections of 2024, and that is continuing, and that we saw in a slightly exaggerated manner in Maharashtra. So our take is that whatever one had to, whatever the impact of politics and political developments have already been absorbed. FY20, we have Bihar and UP coming up over the next 2 years. But, no signs at all, at least from what we see and from our conversations with some experts in Delhi, that there is a pivot away from the overall economic thinking or the economic policy of the government, which is based on, higher capex, focus on macro-financial stability, and a sharp focus on inflation. None of these seem to be changing at the moment. So we don't think that politics is a major worry over the next 12 to 15 months.
Okay. All right, take that point, Seshadri. So consumption, that was the big worry, but it seems that is not something that the government is worried about. So we'll have to watch out for the outlook on that one. Thank you so much for joining today with your insights and the takeaways from this policy trip. Time for a short break now. Saurabh Agrawal from EVA India and Sabyasachi Majumdar from Care Ratings will join in on the other side to discuss the impact of China slashing export duty rebate on many key components, including solar panels, solar modules, etc.
What's important is that the same paragraph also points out that this information then became available to Gautam Adani on the very next day, that's March 18th of 2023. All of this information was available. Gautam Adani was in the know of this investigation, was in receipt of that subpoena, of that search warrant. These are the important facts. These are the important dates. Keep that in mind. We now go to paragraph number 105. This paragraph very clearly spells out, the US court spells out, that Gautam Adani as well as Sagar Adani caused other people to make misleading statements on their behalf. Essentially, other people misleading on behalf of Gautam Adani and Sagar Adani, saying that they were simply not aware of this US investigation. Next, we move to paragraph number 117. This paragraph again reiterates that claim that there were misleading comments being made on their behalf of Gautam Adani and Sagar Adani, and that these misleading claims were made to the media, to the stock exchanges, as well as to financial institutions. And then we travel to paragraph number 120, and this is where the beans are sort of spilt. This is where the court in fact spells out in great detail that exactly a year after, on March 19th of 2024 of this year, a year after the FBI had reached out to Sagar Adani, served those search warrants, we find that there was a letter that was written by Adani Green to the Bombay Stock Exchange, to the National Stock Exchange, claiming that they had no knowledge of any ongoing investigation by the Department of Justice in the United States. And that is despite a year had transpired since they received the notice by the FBI, the search warrant by the FBI, which had very clearly listed out all those allegations and concerns with respect to bribery. And that, the US court concludes, is in fact making false as well as misleading claims. And what is important is that there are detailed obligations listed out under the SEBI norms for listing, for disclosures under the SEBI Act itself. And the apprehension is, we've spoken to very many legal lawyers, what they tell us, the apprehension is that this could very well be a fit case for SEBI, the market regulator, to take action for these misleading claims.
Welcome back. You're still tuned into Trading Hour. Well, China has slashed rebates on key components including solar panels, solar modules, and the export rebate cut has been from 13% to 9%, which will be applicable from December 1. What does it mean for Indian solar companies? Will they have to pay more for such items? Will it increase costs for them and the related components as well? To discuss the impact of this, we are now joined by Saurabh Agrawal, tax partner at EVA India, and Sabyasachi Majumdar, senior director at Care Ratings, joining us now. Gentlemen, good morning. Thank you so much for joining in. Mr. Agrawal, let me start with you first up. Can you give us a sense of what has led to the sharp cut in export rebate? And is there a possibility more cuts would happen? And what is the impact that we're seeing on the industry?
look at over a period of time, all these export rebates have to go away, because end of the day, the industry has to survive without these export rebates being into the picture. What I think China has done is that they have reduced the export rebate from 13 to 9% on cell, module, glass. And if you look at some of the other components, which is say some of the aluminum components and copper wire components, they have reduced the rebate from 13% to 0%. This in turn entails that the price for all these components and cell and module will likely increase. Even for the existing contracts, it will increase. Effectively, what China is doing is that they are going into stabilizing the things now by way of ensuring that they are not passing on too much of the rebate into the market and ensuring that the market is determining the right prices. This is good for the industry in India as well, because when we look from a competition standpoint, from a China perspective, now that the price will increase, the Indian manufacturers in turn will also be able to have a competitive advantage in this particular case.
Okay, sure. Mr. Majumdar, let me bring in your point of view as well on this one. So what are you expecting in terms of specific products or entire value chain? What is the impact that we're watching out for right now? Like Mr. Agarwal said, obviously these rebates at one point of time have to go away. But currently, what is the impact that we're watching out for here?
So basically, right now, we have this ALMM regime in the country where, the modules largely have to be domestically manufactured for a large part of the total, output is covered under ALMM. Eventually, the government's plan is to move to ALCM also, where not only modules, but cells will also have to be manufactured largely in-house. Now, if you look at the current impact, this, change in rebate from 13 to 9%, that would result in a increase in price at the module level of about 2 to 4 cents per watt peak. In terms of tariffs, it means for every 1 cent increase in module prices, there's roughly about 6 to 7 paisa increase in tariff. So it would result in a increase in tariff from anywhere between 12 to maybe 28 paisa. That is the ballpark range we are talking about. Now, since we are now going to be mainly, at least till the time our own domestic cell capacities stabilize over by FY 2027, we'll be largely be producing most of our modules in-house, and but they will be impacted because of the increase in the cell costs. But obviously, it will not be to the extent of 2 to 4 cents, because a part of the value addition also happens in the domestic market. But nonetheless, there will be some increase in price of the modules because there will be an increase in the cell cost.
And Mr. Majumdar, what is the dependence that we have on China when it comes to modules and cells? I believe there's a big dependence that we have, right?
Yes. Now, going forward, majority of the modules will be able to do in-house. But till the time the new cell capacity is stabilized, we'll be dependent to the extent about 80% for maybe a year or so.
Right. Okay. So 80% or for a year or so is what we're looking out for there in terms of a number. But
with these new cell capacities, I think that dependence will also be coming down. But having said that, even after that, we'll continue to be dependent on them for wafers. Eventually, our plan is to go down to wafers and maybe at some stage polysilicon itself, as and when the market becomes big enough. But still, we'll be dependent on Chinese for wafers and cells. And apart from the main, components which go into this, there are also a lot of, these small chemicals, glass. Obviously, the plan is for us, India also to get into, ancillaries like glass and other things which go into manufacture. But for many of those ancillaries also, apart from the main cell component, there will be some dependence on China.
Sure. Some dependence will be there. That will continue. Mr. Agarwal, I want to know, are there any other taxes that these Indian manufacturers on import of solar panels specifically and cells that they're paying currently? And, anything that is there on that front in terms of import duty or anything that we should be watching out for?
You see, the way India has decided in, I think, April 22 itself, they've increased the rate of customs duty on module to 40% and on cells to 25%, which in turn, I think the focus of the government was to ensure that the cells and modules are manufactured domestically. And that's why, if you see, ALMM anyways is in picture today, and ALCM is planned in 2026. I don't foresee that there will be a significant rate increase as far as the module and cell is concerned. But of course, over a period of time, as the government pushes the agenda for manufacturing of wafer ingots and polysilicon into the country, you can likely foresee some increase in duties in this particular area, which is wafer, cell, and polysilicon.
Okay, so take that point. Mr. Majumdar, come in on this. So what is the key takeaway? Is it negative in the short term and it is something that we are preparing for the long term for the industry overall? Because still China continues to be the biggest producer of modules, chips, wafers, cells, you name it. And they have taken control of the entire value chain, right? So do you think this is a short term negative, and over a longer period of time, the Indian segment, or in the Indian sector at least, will tend to benefit from this?
Yeah, I think you are right. In the short term, there's a negative, but in the long run, anyway, we would want to be, the government's intent is to make us, fully self-sufficient in the entire solar equipment chain. To that extent, these Chinese, the measures that the Chinese have taken will make Chinese exports more expensive, and to that extent, indirectly make Indian manufacturing more competitive. So in a way, it, gels well with, what India is planning to do anyway.
Okay, all right. So it's this short-term setback that we are seeing, but overall it's a positive. Mr. Agrawal, last question before we let go of this discussion. You said it is applicable for existing projects as well, right? So anybody who has entered into a contract and looking at a supply from China will have to pay at a higher cost. What does it do to the contracts now?
So typically, if you see, and I'll just give an example, someone has placed an order for 2 gigawatt of modules, and say 1 gigawatt has come before December 1. For them, the rebate of duty applicable is 13%, whereas for the future ones, which is coming after December 1, say 1 gigawatt is coming after December 1, there the rebate has reduced to 9% from 13%, which in turn means that the Chinese manufacturer will pass on that particular burden to the Indian IPP, which in turn increases the cost of generation of electricity. The only point before I leave, I think the point which I want to specifically highlight is that the step taken by China is towards the Atmanirbhar Bharat policy of the government as well. It will surely help the overall Indian solar manufacturers in the long run. Maybe in the short run, there's some impact on the costs.
Okay, so a step taken by China is helping India. So good going for the solar industry, at least, of course, going forward. Thank you so much, gentlemen, Mr. Agrawal, Mr. Majumdar, for joining in with your insights and making sense of this move that has come by. It was scaring the street a little, but looks like it's a short-term negative, but in the longer term, it serves the purpose of the industry as well. With that, we'll do one thing. We'll slip into a short break. Up next, we'll get you exclusive excerpts from our conversation with the CEO and co-founder of Zepto as the company raises $350 million domestically in the largest ever for an Indian startup.
In America, that Mr. Adani has broken both American law and Indian law. He's been indicted in the United States, and I'm wondering why Mr. Adani is still running around a free man in this country. Chief ministers have been arrested. Jharkhand Chief Minister was arrested. Many people have been arrested. And Mr. Adani has done apparently 2,000 crore scam, multiple others probably, but he's scot-free. He's running around. There's no problem. There's no investigation. Adani ji को एकदम अरेस्ट किया जाए. और हम जानते हैं और हम देश को दिखाना चाहते हैं कि अदानी जी की अरेस्ट नहीं होगी. और इसलिए नहीं होगी क्योंकि हिंदुस्तान के प्रधानमंत्री अदानी जी के पीछे खड़े हुए हैं और उनके प्रोटेक्टर हैं. आप लोग हिंदुस्तान के युवा, आप लोगों को रोजगार नहीं मिलता, महंगाई बढ़ती जाती है, छोटा सा कोई क्राइम करता है, जेल चला जाता है. एंड इट्स ए टेस्टमेंट टू द वर्क बीइंग डन दैट द यूनाइटेड स्टेट्स हैज डन व्हाट इट्स डूइंग. This is not, don't think that nothing is happening. This is flawed. We have completely obliterated Mr. Narendra Modi's image. और हिंदुस्तान का हर रिटेल इन्वेस्टर जानता है कि माधवी बुच is corrupt and माधवी बुच is protecting Mr. Adani. But शुरुआत तो वहीं होगी ना, अदानी से शुरुआत होगी. तो अदानी को पकड़िए, अंदर डालिए, इंटेरोगेशन शुरू कीजिए और इन्वेस्टिगेशन शुरू कीजिए. और ये जो माधवी बुच ही हैं, जो इनके स्टॉक प्राइस को प्रोटेक्ट करती हैं, इनको वहां से हटाइए और क्रेडिबल व्यक्ति को वहां डालिए, क्योंकि अगर आप नहीं करेंगे तो हिंदुस्तान के जो रिटेल इन्वेस्टर्स हैं उनका जबरदस्त नुकसान होने वाला है. अदानी जी का अरेस्ट होना चाहिए और जो भी इस मामले में इन्वॉल्व है उस पर कार्रवाई होनी चाहिए, चाहे वो कहीं का भी हो, कोई भी हो. जहां भी करप्शन है वहां पे इन्वेस्टिगेशन होनी चाहिए, मगर इन्वेस्टिगेशन अदानी जी से शुरू होगी. और जब तक अदानी जी अरेस्ट नहीं होंगे तब तक क्रेडिबल बात नहीं बनेगी. तो शुरुआत वहां से है. अदानी जी को अरेस्ट कीजिए, उनका इंटेरोगेशन कीजिए.
Welcome back. You're tuned into Trading Hour on CNBC-TV18. As of now, the Nifty is trading almost near the day's highest point, up 0.9% in trade. 23,500 levels is what the Nifty 50 is holding on to. Stocks that are supporting the up move today, we have ICICI Bank, SBI, Reliance, Infosys, TCS among the top pullers for the market and top up moves for the market that we're seeing coming in for the Nifty 50. Let's look at what the Nifty mid and small cap is doing. That was a bit of an underperformance versus the benchmark indices, but still managing to hold on to some bit of a green is the Nifty mid cap as well as the small cap, both holding on to gains of almost 5/10 to 0.7% in trade. But as we wrap up this edition of Trading Hour, we're going to leave you with an exclusive conversation that we had with Zepto that has raised $350 million in what is the largest 100% domestic fundraise for a private startup in Indian history. The quick commerce delivery platform's co-founder Adit Palicha also spoke to Shriman on this fundraise and the business of the company. Listen in.
Let's address the narratives with facts, and I want you to put the numbers down on 100%. The table, because Kate, which is the Traders Association, has basically told the government as well as the general public that quick commerce is bad. Quick commerce is going to kill the Kirana stores. That quick commerce is taking away jobs at this point in time. I want you to first there is price gouging, there's discounting, there's a whole plethora of charges that have been made against quick commerce in general, including each one of you. Now, I want you to address each one of those aspects. Let's start with the discounting issue, because that is something that the government also is concerned about.
100%, and let's go through them one by one. Would love to do it, and we're data-driven guys, right? So we'll make it happen. But the first one is comparative pricing. I'll give you an exact data point. So that allegation is false unequivocally by data. If you look at the exact number of units sold on the Zepto platform in FY24 that was below COGS, it was 0.2%. Only 0.2% of our units were sold below cost price of the manufacturer. 99.8% we were making margin on it. 99.8%, right? Even in the stores that we
and who's verified this?
This is EY verified. I'm happy to, I'm happy to go, publicly and say anyone that wants to diligence this, please come into our office. Let's look at the books, right? Because we've got data and facts, and there are anecdotes and hyperbole, right? And we're on the side of data and facts. So 0.2% of our units were sold below cost price in FY24. We don't expect the number to change in FY25 much, but we've got book closure numbers for the full year FY24. That's one, right? even if you look at the stores that we were profitable in, which we turned hundreds of stores profitable, and it's a well-regarded fact, even the market, the investors that came in here, investors like Ramdeo from Motilal Oswal, or all the Ranjan Pai from Manilal Group, that diligence was done in our stores. Even in the markets that we were profitable in, we were meaningfully lower than MRP. So are we predatory pricing? The answer is no. If you look at it, we've created structural deflationary value. We've cut out all the inefficient middlemen that exist in the value chain for grocery, the distributor, the wholesaler. We go straight to the manufacturer. We're procuring, millions of products at scale, getting it at a better price. That goes into the platform at a better price for the consumer than MRP, cutting out all the inefficient middlemen that have been sucking out value, and the consumer has had to pay at MRP. So we've structurally reduced the price. We've been able to turn our stores profitable, and that means we're not predatory pricing. We're actually deflationary, right, for tens of millions of consumers. So that's a headline. With zero predatory pricing, quick commerce is deflationary. We can prove it in the profitability that we have in our store P&Ls. We can prove it with the number of units that were sold below margin, right? We've got all the data. Obviously today, we're expanding on a base of, billions of dollars of scale. We're investing in CapEx. The biggest singular line item today in our P&L is CapEx, directly or indirectly. Right? Not all of it shows up in fixed assets. Some of it is in an OpEx model to go into the technicalities. But if you look at the capital being deployed, the biggest part is CapEx and working capital. The second biggest part is operational setup. The first question you mentioned, are we predatory pricing? Answer is no. Happy to go into the data, happy to go into our books in detail. 0.2% of products below margin. Okay. And stores profitable, still below MRP, because we're deflationary. We've created value in the supply chain. That's one. Second piece on jobs, created over 4.5 lakh jobs. We've estimated, and from the surveys that we've done at scale, statistically significant, that even the people that were employed were making 10 to 15,000 rupees per month, and now they're making 23,000 rupees per month, right? So we are a net job creator. We're net wage additive, and we're not predatory pricing.
राष्ट्रपति बटन आप इस पुरस्कार को देने के लिए स्वयं गयाना आई है। इस स्पेशल जेस्चर्स के लिए मैं आपको बहुत बहुत धन्यवाद देता हूं। फ्रेंड्स, भारत और डोमिनिका दो डेमोक्रेसीज हैं। साथ साथ हम दोनों पूरे विश्व के लिए महिला सशक्तिकरण के भी रोल मॉडल है। दोनों ही देशों में महिला राष्ट्रपति हैं। भारतीय राष्ट्रपति माननीय मुर्मू जी जनजातीय समाज से आने वाली पहली राष्ट्रपति हैं। उसी तरह राष्ट्रपति बटन भी डोमिनिका की पहली इंडिजीनियस राष्ट्रपति है। आप दोनों विश्व की सभी महिलाओं के लिए प्रेरणा का स्रोत है। फ्रेंड्स, भारत और डोमिनिका के बीच सदियों पुराने ऐतिहासिक और सांस्कृतिक संबंध है। 19वीं सदी में कई भारतीयों ने डोमिनिका को अपना घर बनाया। उनके द्वारा रखी गई आधारशिला हमारे संबंधों को मजबूत नींव प्रदान करती है। उसी से प्रेरित होकर हम डोमिनिका के विकास कार्यों और कैपेसिटी बिल्डिंग में सक्रिय योगदान दे रहे हैं। भारत के लिए यह गहरे संतोष का विषय रहा है कि हम कोविड जैसी आपदा के समय डोमिनिका के लोगों की सहायता कर सके। कैरिकोम क्षेत्र में डोमिनिका हमारा बहुमूल्य पार्टनर है। आने वाले समय में हम हमारे संबंधों को नई ऊंचाइयों पर ले जाने के लिए प्रतिबद्ध हैं। आज दिए गए सम्मान से हमारी यह जिम्मेदारी और बढ़ जाती है। एक्सेलेंसी, एक बार फिर इस सम्मान के लिए मैं आपका बहुत बहुत धन्यवाद करता हूं।
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards?
Stocks trade in the green after a down day on Thursday, with Adani Group stocks finding their feet. Realty and IT are the outperformers, while auto and consumer durables are the laggards.
Mahanagar Gas increases the price of CNG by 2 rupees per kg following the recent cut in domestic gas allocation to the company. The stock gains even as the hike is far lower than required to offset the impact.
NTPC Green Energy's 10,000 crore rupee IPO gets fully subscribed early on the final day of the offer, with retail portion seeing strong oversubscription.
Bitcoin tops 98,000. It's within striking distance of the $100,000 mark following reports saying the Trump's Crypto Advisory Committee could recommend creating a US crypto reserve.
Good afternoon. You're watching Halftime Report here on CNBC TV18 on what is the final trading day of the week. I'm Hormas Fatakia. With me is Mangalam Malu. Some recovery on the indices, looking to end the week on a high are the benchmark indices, and of course it is the Adani Group stocks that are the talk of the afternoon.
Absolutely, they were the talk on the downside yesterday, and they are on the talk. They are the talk on the upside today. What's interesting though is after this up move of nearly 230 points that we've seen on the Nifty, we're very close to the 200-day moving average. So crossing and staying above that consistently is something that we will keep an eye out on. These are some of the Adani Group stocks which have recovered from lows, but a couple of them which are doing extremely well. Case in point, something like Ambuja Cement and ACC, both of them up around 4.5% as well. But the stock of this afternoon definitely has to be Praj Industries. Ever since the management joined us this morning and spoke about the company's growth plans going forward, where it expects to triple its revenues by 2030, the street has taken note of that, and the stock has seen a big surge itself. Vamakshi joins into the details of the company's plans going forward all the way up until 2030. Remember, just a couple of days ago, we had Indian hotels give their 2030 plan, and that stock too moved to a record high. Vamakshi.
Well, absolutely, Mangalam. Praj Industries is soaring in trade on the back of the commentary that came through from the management in its press release. The company said that it is eyeing opportunities in sectors which include sustainable aviation fuel, biopolymers, as well as energy transition and climate actions. Overall, they highlight they're expecting the energy majors to invest 25 lakh crores in the clean energy sector by 2030, while traditional oil and gas market is also expected to invest an additional 21 lakh crores by 2030. What does this mean for Praj? Well, they see significant demand for modularization solutions for setting up plants, and in order to cater to this demand, they're setting up a dedicated advanced manufacturing facility in Mangalore, Karnataka. They're investing somewhere around 400 crores. And from this facility itself, they expect to generate revenue ranging between 2 to 2,500 crores per annum at the optimum level. Apart from that, India also has set the target of blending 1% by 2027 and 2% by 2028. This is for sustainable aviation fuel. EU and USA, respectively, have kept the SAF blending target of 6% and 10% respectively. And therefore, this is again a new opportunity, a new door that has opened up for Praj. Now, given this development, they're expecting very strong growth going ahead. Right now, their revenues are somewhere around 3,400 crores. They expect to triple this to 10,000 crores crores. Significant jump up out there is what they're expecting over the next couple of years. And also the share of exports is expected to rise from 29% now to 50% by 2030. So again, in terms of margins, this does bode well for the company. So overall, it's a very strong commentary coming in from the company, and resultantly, the stock is surging higher.
Aiming for the skies is Praj Industries is showing up on the stock price as well. Is Vamakshi, thanks a lot for that. Now, the other stock in focus is Sobha. Remember, real estate was an outperformer yesterday. It's an outperformer today as well. Now, that Sobha is in focus on the back of fresh brokerage commentary that is coming from HSBC, and Sonal is here with more details on that.
Thank you for that. Well, HSBC is sounding bullish on the stock. They've rolled over their target price as well. They say that after many years, the company has gone ahead. They've now disclosed a lot more details about their land bank, and that is what makes them very positive because it will give them more comfort. The company has another 26 million square feet, which is ready for launch right now, other than the 19 million square feet, which is in the pipeline. In terms of bank, land bank as well, they have around 1,878 acres, which can be converted into different projects. This has improved the visibility on launches going into FY26, and the company is aggressively looking at entering newer markets, be it Mumbai, be it Noida as well. But what they don't like is that the margin pressure continues. That is something that happened in Q2, and the management expects it to continue for 2 more quarters, and that is something the HSBC is not comfortable with. They think that Sobha has successfully resolved their debt-related issues. They have been continuously seeing improvement in their operating cash flows as well, and that's what makes them positive. They retain a buy. They tweak the target price to 2,150 from 2,000. This is on the back of a roll forward and tweaking valuation of the land bank, so that's something we should keep on our radar, that it's just not on the back of improvement in fundamentals, but a rolling forward that's happening here. But yes, the street is taking note of that. The stock is up by 7%.
Absolutely, we take that point. You know, you were talking about Praj aiming for the skies. Sobha seems like aiming for the skies as well through its skyscrapers. But a bunch of real estate stocks actually doing well. So, you know, Sobha is getting that additional push from the HSBC note. But pull up something like, you know, Godrej Properties, DLF, or even some of the local players. We have, you know, a big move coming in on names like Ajmera Realty, etc. All these stocks doing well, and a couple of these high beta names doing extremely well in today's trading session as well. Case in point, something like a Paytm, which is up 5%. We're seeing some traction on Kansai Nerolac as well. Remember, the paints sector was down in the dumps in the second quarter post the results. Kansai Nerolac actually stood out because of its exposure to the industrial paint side, and that's moved higher. Alongside that, we're seeing some recovery in names like V-Mart Retail and Raymond too, for instance. Raymond is up around 7.5%. So a bunch of broader market stocks doing extremely well, even though at an index level, the mid-cap index is just up around 0.2%, which is half the gains that we're seeing on the frontline index. The broader markets are actually seeing a bit of an up move. What we'll do is take a short break, come back on the other side, feel a little hungry, right? So get a snack in with John Shitze, who's the CEO of Subway Global. Joins in to discuss the company's outlook going ahead and, more importantly, the trends in the QSR space.
A big day, a major setback to the Adani Group because this is the US Department of Justice, a court in the United States which has opened an indictment against Gautam Adani and his nephew Sagar Adani and 7 others. Got the US Securities and Exchange Commission, which has also made charges against the Adani Group and members of the Azure Power Corporation. Essentially, they have said that both these companies got together, colluded to gain government contracts for the Solar Energy Corporation of India, because they were working with this company for solar energy, and in order to get contracts from different state governments, they tried to bribe Indian officials across the country, primarily in the state of Andhra Pradesh, and offered bribes to the tune of over 2,000 crore rupees. Now, why has this become important? Why did the US courts take cognizance of all of this? This is because the US courts believe, and the US Securities Exchange Commission believe, that they have raised capital from the US markets while bribing officials in India. So this is a major allegation. They have been charged under the Foreign Corrupt Practices Act and the Extortion Prevention Act of the US. Primarily 4 counts against them: conspiracy to violate the Foreign Corrupt Practices Act, securities fraud conspiracy, wire fraud conspiracy, securities fraud relating to 2021 bond offering, and conspiracy to obstruct justice as well, because both these forums in the United States believe, legal forums believe, that the accused have destroyed evidence as well.
Did Sagar Adani mislead the Bombay Stock Exchange, the national stock exchange? And if yes, what are the consequences? Well, we'll try to answer this question by using excerpts from the US District Court indictment order against the Adanis, and we'll refer to 4 specific paragraphs which spell out the details, the chronological list of events as to whether or not there was any misleading claims made. First up, paragraph number 103. This paragraph very clearly spells out that the FPI reached out to Sagar Adani on March 17th, 2023. And once that happened, once the FPI had reached out, there were 3 specific things that happened on that day, on March 17th of 2023. Number 1, all his electronic devices of Sagar Adani were seized by the FBI. Number 2, a search warrant was served on Sagar Adani, which very clearly listed out all the offences and the allegations for bribery under the FCPA. All of them were listed out for the benefit of Sagar Adani. And finally, a grand jury subpoena was also served on Sagar Adani, which again contained all these details. What's important is that the same paragraph also points out that this information then became available to Gautam Adani on the very next day, that's March 18th of 2023. All of this information was available. Gautam Adani was in the know of this investigation, was in receipt of that subpoena, of that search warrant. These are the important facts. These are the important dates. Keep that in mind. We now go to paragraph number 105. This paragraph very clearly spells out, the US court spells out, that Gautam Adani as well as Sagar Adani caused other people to make misleading statements on their behalf. Essentially, other people misleading on behalf of Gautam Adani and Sagar Adani, saying that they were simply not aware of this US investigation. Next, we move to paragraph number 117. This paragraph again reiterates that claim that there were misleading comments being made on their behalf of Gautam Adani and Sagar Adani, and that these misleading claims were made to the media, to the stock exchanges, as well as to financial institutions. And then we travel to paragraph number 120, and this is where the beans are sort of spilt. This is where the court in fact spells out in great detail that exactly a year after, on March 19th of 2020.
Well, the market seems to have, caught another wind once again, close to 300 points for the Nifty right now, crossed the 200-day moving average, and as a result of which the last few points saw a vertical swift up move. What is it that is leading the Nifty higher? We have the Nifty Bank, which is doing well. The Nifty IT index comes up for you. That too is supporting the frontline index, which is currently around the higher end of today's trading range so far. But the last couple of points have been led by Reliance. So the intraday chart of Reliance should come up for you. That heavyweight is supporting the cause of the Nifty. Alongside that, we have an up move coming in on L&T as well, which is a fair weight on the index. So Reliance, there were a couple of brokerage notes in the morning citing positivity on that stock. Reliance and L&T, both of them taking the Nifty higher, comfortably above that 23,600 mark, comfortably above the 200-day moving average as well. So we'll keep an eye out on how this pans out. The mark that we need to keep an eye out on the Nifty is 23,781, which was the high that we saw on Tuesday before we went for a break on the election break on Wednesday. And the level from where we saw a bit of a decline in the last hour on Tuesday as well. So 23,781 is one of the marks that we will keep an eye out on. But speaking about keeping an eye out on things, it is afternoon time, it's a Friday. Important to get in a comment coming in on the QSR space from Subway Global. Remember, Subway has opened its 850th store in India. The management says it aims to more than double its new restaurant openings in 2024 itself. John Shitze, who is the CEO of Subway Global, joins in now. Let's get the basic hygiene numbers out of the way. What is it that Subway does in India with its 850 restaurants in terms of revenue? How are they comparable with the peers in the industry?
India is one of our top probably 2 or 3 growth markets that Subway has in the world. We're in about 100 countries today. But when I look at the growth rate that we're experiencing now and really what the potential is, it's really quite amazing. I think we'll absolutely be able to double our restaurant count in the next 5 to 6 years. I don't have to tell you, you've got a very young population that continues to get wealthier, population that as they move up the economic chain become more focused on health and freshness. And so I think Subway really fits in quite nicely with the growth story of India, if you will. As you know, we just signed a new master franchisee, which is not how Subway had traditionally gone to market with the Everstone Group. And so, we're very excited to see how much growth they've already injected into this market. And as the brand, expands its footprint, obviously its revenues continue to rise and its same-store sales continue to rise. Just couldn't be more excited about what the opportunity is.
But John, when you look at the consumer preference of India, when you look at these experiences that Indians are seeking, how are they different from the world, and what are the underlying trends for the QSR restaurants in India?
I think there are a few differences here. As you know, obviously the taste profile in India is different than it is in a lot of other countries. You guys like spicy foods in lots of the country, and you like lots of hot products. And so, what I think about what's great about global QSR chains, when you think about the McDonald's and the Burger Kings and the Subways of the world is, yes, you can find the core menu the same in a lot of parts of the world. But then we all allow people to customize. So, generally speaking, about a third to 40% of a menu will be different depending on where you are in the world. And I think in India, we've done a great job of customizing our menu to appeal to local taste. Obviously, given the size of your population that likes vegetarian options, Subway plays very nicely into that as well. So, I think given the custom, and we customize, as you can build our products literally how you want it. You can obviously also get a chef-curated sandwich where, we've already decided what you might like on that, but you can do it either way. So, again, I think between customization, the fact that we're heavy on vegetables and freshness plays incredibly well. And again, it's a customized menu, I think, that really ideally fits the taste profile that you find in India.
Right, but when we speak about the quick service restaurants itself, John, there is an underlying macro trend among people who do not eat out of places which they believe are chains. They're looking for more boutique experiences, for a healthy experience, less processed foods. How are you targeting that crowd? And do you think this trend may, topple the apple cart here?
Well, again, I think Subway is ideally suited for that world, and India certainly fits in, with other parts of the world, as I said, as you continue to get wealthier and move up the economic food chain, so to speak. People are more concerned about freshness and health. And if you think about the fact that we bake bread daily in a restaurant multiple times a day, you think the fact that we chop our vegetables that are fresh every single day, you can obviously get hot, well-cooked, really craveable products within Subway. So I think Subway's DNA really is ideal or plays nicely into where the Indian consumer is going, or actually where they are today and what they're really looking for. So that freshness has been part of our DNA for decades.
Now, there's so much competition in this space, right? John, what do you say about that? And when you speak about market share, you have competition from foreign QSRs as well as the local ones. Now, what would be the right to win in the Indian market?
No, it's a great point. You have lots of local brands here that do a phenomenal job. As you noted, there are, our normal global competitors that we see, in the other 50 to 100 countries where we all compete. And again, I think given the size of the Indian population, how young it is, how it's becoming more affluent, again, I think there's tremendous growth opportunity, not just for, Western QSR concepts, but just for restaurants in general, because as you noted, the out-of-home eating percentage continues to increase. And I think that will continue to do so as you have more women enter the workforce, as people are time-starved. The advantages that QSR brings in terms of speed, availability, meaning, they're ubiquitous, they're easy to find. And then again, our customization and freshness. I just think this is a market that, as I said, I think we're going to double it in the next 5 to 7 years. But when I look, 10, 20 years down the road, I could imagine us being 4 or 5 times the size we are. And still, I think there's lots of growth for the locals and other global players out there. So I really think this is a wonderful market for the restaurant industry.
4 to 5 times your current size in the next 10 to 20 years. That's a headline that you've given us. But what's interesting is that post-COVID, a lot of restaurants, quick service restaurants, have increased their revenue share from deliveries. For Subway, how is this dine-in versus delivery proposition? How do you see this changing going forward?
Yeah, I would say I don't think Subway's really any different than some of our other global competitors, meaning, third-party delivery continues to increase. And as you noted, part of that is, due to COVID. I think people got used to it and they found it to be convenient. And I think the key thing in today's world is you have to go where the consumer wants you to go. And I think that's just one of many options as digital apps and our digital app, continues to improve and loyalty programs and things like that. So whether it's people that are, again, ordering on that app and just coming in and picking up the food and take it out, or whether it's third party, or whether people want to come and dine in, again, I think you have to have all options available, and you have to meet the guests where they want to be for you to, ultimately be successful in the long run in any market. India, obviously, we're talking about here, but I think that would be true around the globe.
John, for running a business like Subway in India, what are the unique challenges that you face?
Well, as you know, when you have a country as vast as India, really, I think you even have micro taste within a country. So I think for us to be successful, what works in the north of the country might not be the same in the south from a menu innovation standpoint. Maybe perhaps, how the food is delivered or where you're going to meet the consumer through those different avenues we discussed. So I think the key is remaining nimble and flexible and not thinking that one size fits all in India, and really working to make sure you're maximizing those regional differences within the country is what's going to allow you to maximize your growth opportunities.
I guess we can't let you go without this most important question. You have signed a master franchise agreement with the Everstone Group, which also runs the Restaurant Brands Asia stock, which runs Burger King in India. Are we looking at Subway India listing anytime soon? Could there be a merger? Can we see the public play this growth story via the stock markets?
That you'd have to talk to Everstone about that. I think it's ultimately up to them. I know they view this as a very long-term investment. They, like Subway, corporate, view India as a massive opportunity over the coming decades. And, whether they want to keep that in their portfolio longer term, whether they want to monetize it, 10 years from now, 15 years from now, I don't know. I know they're as excited about the opportunity as we are. And I think a lot of the learnings that they get from Burger King, it can help us as we grow, and vice versa. So I actually like signing up master franchisees that run multiple brands, because I think they have generally speaking, a much better feel for the consumer, the marketplace, et cetera, just given that, they're representing different brands and different taste profiles.
All right, John, thank you so much for joining in and sharing with us your thoughts on the road ahead for Subway India, and of course, answering our question on a potential listing as well. Time for a short break here on Halftime Report. Up next, as the market is heading towards the highest point of the day, good time to get in a chart check. Sudeep Shah of SBI Securities joins us with that.
A year after the FBI had reached out to Sagar Adani, served those search warrants, we find that there was a letter that was written by Adani Green to the Bombay Stock Exchange, to the National Stock Exchange, claiming that they had no knowledge of any ongoing investigation by the Department of Justice in the United States. And that is despite a year had transpired since they received the notice by the FBI, the search warrant by the FBI, which had very clearly listed out all those allegations and concerns with respect to bribery. And that, the US court concludes, is in fact making false as well as misleading claims. And what is important is that there are detailed obligations listed out under the SEBI norms for listing, for disclosures under the SEBI Act itself. And the apprehension is, we've spoken to very many legal lawyers, what they tell us, the apprehension is that this could very well be a fit case for SEBI, the market regulator, to take action for these misleading claims.
in America that Mr. Adani
company. Well, it's a big up move that we're seeing on the market right now. Nearly 300 points for the Nifty, almost 900 points for the Sensex, doing well for the Nifty Bank as well. So if you just take a look at the key contributors on the way up today, we have the Nifty Bank and the Nifty IT Index. So both guns firing, unlike our top batters in Australia. Right now, we have the top order doing extremely well for the market. The Adani Group, after a big drubbing yesterday, has recovered in today's trading session. All of them sitting with gains of anywhere between 4 to 5% Names like ACC Ambuja doing extremely well too. The mid-cap index, now if you look at just the index, you would see it up just around 0.7% as against the frontline indices, which are up 1.2, 1.3%. But if you look at the broader markets, you have nearly 3 stocks advancing for 1 stock which is losing, which tells you that there is inherent strength in the market. With this up move that we're seeing right now, the 23,500 put writers are fairly active. They're telling you that, maybe at lower levels, we will see a solid support for the market coming in at around 23,350 to 23,400 odd levels. But most important to see the 23,500 call. That still has a high premium of 300 rupees, telling you levels around 23,700, 23,800, which is coinciding with the Tuesday's high of 23,781, could be a bit of a resistance. The only imponderable between this move and what we see next Monday would be the Maharashtra election outcome. The Nifty is above the 200-day moving average, so holding and closing above that would be extremely crucial because we failed to do so on Tuesday's trading session as well. A lot of stocks in focus. MGL is seeing a fair amount of long positions being built up. ABFRL is one of them, which may actually exit FNO ban with the kind of option open interest unwinding that we're seeing. It's closer to 80% right now. If it falls below that 80% mark, then we may see the stock exit the FNO ban.
It's very strong up move on the index, but the question is that sustainable as we move into the final few hours of the trading session? Let's ask that question to Sudeep Shah of SBI Securities, who is joining us now. Sudeep, good afternoon. Thank you for joining in. We have a 300-point up move on the Nifty. On a normal day, we would be very happy about it, but now we are only skeptical about whether this move would last. What's your call on the index? Do you use this up move to reduce your long positions, or do you build on to this?
Good afternoon, Hormaz. I feel this looking at today's move and the kind of sustainability that we have seen, at least in the past 2.5 hours, I feel it is that day that we need to build up on the long positions. And after this big fall that we have seen in the last couple of weeks now, this is the first sign of a credible reversal that we are seeing. And it has rebounded from an important support zone, which was closer to 23,350, 23,400 zone. So for me, there are 2 things that have stood out today. One is a rebound in Reliance, and the second thing is Bank Nifty crossing 50,800, which is the 10-day exponential moving average. So if I put both together, then I feel yes, today we could head into a strong closing, and now 23,450, 23,500 zone would act as a strong support on the downside, and the first level that we should be watching out on the upside would be 23,750 to 23,780. That is precisely the high of Tuesday. And one more important point would be that it is the 10-day exponential moving average. So for me, 23,450 now would be the all the more the key support zone, and we could head up to 23,750, 770 zone. And once that crosses, 23,900 also could be in sight.
Oh wow, 23,900 is what you're looking at right now. Individual stocks, how are you playing them? I presume you're playing them via long positions.
Yeah, Mangalam. See, the first stock that I like in this rebound is from the IT space. Now, IT, we all know that has performed well and it's continuing to perform well. The first pick would be HCL Tech. The stock was consolidating in the last few sessions, and today we are seeing signs of a breakout. And from the current levels, 1840 could hold as a stop loss, and on the upside, 1910 to 1930 levels are what we are eyeing on the upside as a target. The second stock is from the cement pack. Now, Ultratech Cement is that stock. The kind of pullback that the stock has seen in the last 2 days gives us confidence that it has rebounded from an important support zone on the weekly charts. And once again, the stock is now heading on the upside closer to 11,700, 11,800. And this could be bought with a stop loss of 11,000 on the downside.
All right, so Deep, thanks a lot for joining in, getting us your views on the index and on specific stocks as well. Time for a short break. Up next, we get you exclusive excerpts from our conversation with the CEO and co-founder of Zepto as the company raises $350 million domestically in the largest ever for an Indian startup. Stay tuned.
Both American law and Indian law. He's been indicted in the United States, and I'm wondering why Mr. Adani is still running around a free man in this country. Chief ministers have been arrested. Jharkhand chief minister was arrested. Many people have been arrested, and Mr. Adani has done apparently 2,000 crore scam, multiple others probably, but he's scot free. He's running around. There's no problem. There's no investigation. Adani जी को एकदम अरेस्ट किया जाए, और हम जानते हैं और हम देश को दिखाना चाहते हैं कि अदानी जी की अरेस्ट नहीं होगी, और इसलिए नहीं होगी क्योंकि हिंदुस्तान के प्रधानमंत्री अदानी जी के पीछे खड़े हुए हैं और उनके प्रोटेक्टर हैं। आप लोग हिंदुस्तान के युवा, आप लोगों को रोजगार नहीं मिलता, महंगाई बढ़ती जाती है, छोटा सा कोई क्राइम करता है जेल चला जाता है, एंड इट्स ए टेस्टमेंट टू द वर्क बीइंग डन दैट द यूनाइटेड स्टेट्स हैज डन व्हाट इट्स डूइंग. This is not, don't think that nothing is happening. This is flawed. We have completely obliterated Mr. Narendra Modi's image. और हिंदुस्तान का हर रिटेल इन्वेस्टर जानता है कि माधवी बुच इज करप्ट एंड माधवी बुच इज प्रोटेक्टिंग मिस्टर अदानी. बट शुरुआत तो वहीं होगी ना, अदानी से शुरुआत होगी. तो अदानी को पकड़िए, अंदर डालिए, इंटेरोगेशन शुरू कीजिए और इन्वेस्टिगेशन शुरू कीजिए. और ये जो माधवी बुच ही हैं, जो इनके स्टॉक प्राइस को प्रोटेक्ट करती हैं, इनको वहां से हटाइए और क्रेडिबल व्यक्ति को वहां डालिए, क्योंकि अगर आप नहीं करेंगे तो हिंदुस्तान के जो रिटेल इन्वेस्टर्स हैं उनका जबरदस्त नुकसान होने वाला है. अदानी जी का अरेस्ट होना चाहिए, और जो भी इस मामले में इन्वॉल्व है उस पर कार्रवाई होनी चाहिए, चाहे वो कहीं का भी हो, कोई भी हो. जहां भी करप्शन है वहां पे इन्वेस्टिगेशन होनी चाहिए, मगर इन्वेस्टिगेशन अदानी जी से शुरू होगी, और जब तक अदानी जी अरेस्ट नहीं होंगे तब तक क्रेडिबल बात नहीं बनेगी. तो शुरुआत वहां से है. अदानी जी को अरेस्ट कीजिए, उनका इंटेरोगेशन कीजिए.
राष्ट्रपति बटन आप इस पुरस्कार को देने के लिए स्वयं गयाना आई है. इस स्पेशल जेस्चर के लिए मैं आपको बहुत बहुत धन्यवाद देता हूं. फ्रेंड्स, भारत और डोमिनिका दो डेमोक्रेसीज हैं. साथ साथ हम दोनों पूरे विश्व के लिए महिला सशक्तिकरण के भी रोल मॉडल है. दोनों ही देशों में महिला राष्ट्रपति हैं. भारत.
Welcome back. On to an exclusive now. Zepto has raised $350 million in what is the largest 100% domestic fundraise for a private startup in Indian history. Now, the quick commerce delivery platform's co-founder Adit Palicha spoke to Shireen Bhan about the rationale behind the company's fundraising and why quick commerce should be celebrated. Listen in.
When we spoke in August, you said you're not looking at raising any more money. What's changed?
So yeah, we raised over $300 million. It's the largest 100% Indian fundraise for a private startup. in the history of this country, right? And we are proud of it. The reason why, when we started this financing, we had over $1 billion of net cash in bank, no debt, right? We're growing well. And the reason why we raised this capital, candidly, is because, throughout the entire life cycle of Zepto, we've always wanted to bring on board domestic capital. Both, Keval and I are excited about the fact that we can build like an Indian company that people can be proud of. But there never really has been risk capital of that scale available to private startups. And so, we pushed, I remember from the Series A onwards, Series B, Series C, Series D, we tried to get domestic investors on board, but it wasn't the right time. We saw an opportunity here with Motilal Oswal and their team. And, we went into it not really with many high expectations, but we were able to put it off, and we're quite excited about it. And the rationale behind, doing a domestic fundraise is fairly simple. We had over $1 billion of cash in bank. Now we've got over $1.3 billion of cash in bank.
Yeah.
But this domestic financing just helps us increase Indian ownership going into an IPO. We think that benefits the company long term. One, just public trust and shareholder trust going into a public company. It's better to be owned by high quality Indian names, right? And historically we've been limited to Silicon Valley VCs that are not very familiar, or that Indian institutional investors and Indian retail shareholders as well are not familiar with. And B, even just from a regulatory and government lens, we think being an Indian company is favorable. And lastly, it's the ambition that Keval and I have always had to build like an exciting Indian company.
I bet you were looking at the Swiggy IPO very, very closely. What was going on in your head as you saw the listing, which got off to a slow start and then sort of shot through the roof on day one?
Yeah, I think it's great. It's huge kudos to what Harsha and the team have pulled off, and I think it's great for the ecosystem. I think we should, one of the last things I mentioned, Shireen, is that we should be celebrating this. This is Indian technology, like quick commerce, and Swiggy's IPO, I think it's fair to say, largely powered by excitement about quick commerce, right? Zomato's performance, largely powered by excitement in quick commerce. I think that's not a controversial thing to say, it's a consensus view. We should be celebrating quick commerce. This is good for the country. This is Indian technology, Indian innovation. This hasn't worked anywhere else in the world. And it's real infrastructure for ordinary people. Like, this is not for like the top 0.1% of India, right? These are people who now realize the scale they were getting to. This is impacting ordinary people's lives at scale, and now going from metro cities to beyond. But the way that I look at it is we should be celebrating the fact that today, because of Indian infrastructure, Indian technology, there's a mom in Noida who's able to take a part-time job because her life has become easier because of quick commerce. It's exactly like setting up a metro station, right? So, we look at this as Indian technology, Indian innovation. Nobody else in the world has been able to do that.
Have you been able to convince the government, though?
Well, I think I think the government is progressive. They support, value creation and job creation at scale, right? And they've been supportive so far. And we are, honestly in a position where we think of them as a partner. We're always open to feedback. And I mentioned this last time as well to you, right? That even with, let's say, gig workers, right? We are, honest to God, good faith, open to feedback and dialogue on how we can improve. Whether it's with gig workers, can we do more? Today we give insurance, right? 1 lakh cover plus 10 lakhs of term insurance for free. Whether it's with, food compliance across the board. So I think they've been helpful. But the last thing I'll say is, next time we're talking to foreigners, next time there's a foreign leader in this country, we should say, hey, not only do we have UPI, Indian innovation there, but in India you can tap a button and your daily essentials will come to you in 10 minutes. That's amazing.
So you're saying quick commerce is like the UPI moment for India?
No, it's world-class infrastructure built in India with Indian technology, and it's making real people, ordinary people, their lives easier every day, and it's improving productivity and the quality of life for tens of millions of people by Indians. It's not some rip-off of some American model or some Chinese model. It is like only in India you get this stuff, which is awesome.
Made in India,
right?
And made for India for now.
Absolutely. No, I mean, we are going to be in India for these next couple of decades. So.
Interesting conversation there, and you remember you can catch excerpts of this exclusive interview all through the day today only on CNBC-TV18. With that, we'll slip into a short break, come back, get you more on the markets and a lot of stock-specific action. Stay with us.
माननीय मुर्मू जी, जनजातीय समाज से आने वाली पहली राष्ट्रपति है। उसी तरह राष्ट्रपति बटन भी डोमिनिका की पहली इंडिजीनियस राष्ट्रपति है। आप दोनों विश्व की सभी महिलाओं के लिए प्रेरणा का स्रोत है। फ्रेंड्स, भारत और डोमिनिका के बीच सदियों पुराने ऐतिहासिक और सांस्कृतिक संबंध है। 19वीं सदी में कई भारतीयों ने डोमिनिका को अपना घर बनाया। उनके द्वारा रखी गई आधारशिला हमारे संबंधों को मजबूत नींव प्रदान करती है। उसी से प्रेरित होकर हम डोमिनिका के विकास कार्यों और कैपेसिटी बिल्डिंग में सक्रिय योगदान दे रहे हैं। भारत के लिए यह गहरे संतोष का विषय रहा है कि हम कोविड जैसी आपदा के समय डोमिनिका के लोगों की सहायता कर सके। कैरिकोम क्षेत्र में डोमिनिका हमारा बहुमूल्य पार्टनर है। आने वाले समय में हम हमारे संबंधों को नई ऊंचाइयों पर ले जाने के लिए प्रतिबद्ध हैं। आज दिए गए सम्मान से हमारी यह जिम्मेदारी और बढ़ जाती है। एक्सेलेंसी, एक बार फिर इस सम्मान के लिए मैं आपका बहुत बहुत धन्यवाद करता हूं।
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership.
Well, the Nifty has done very well to cross past that 300 points in terms of gains and fairly comfortably around that 23,700 mark as well, just about 25 points away from those levels. And among the top contributors on the way up today has to be Reliance Industries, up around 1.5% right now, in focus on the back of a bunch of positive notes coming in from brokerages like JP Morgan and Morgan Stanley. Sudarshan joins in with the details of what those notes contain. Sudarshan.
We have two positive brokerage notes on Reliance Industries. Notes are from JP Morgan and Morgan Stanley. Both the brokerage houses have overweight call in the stock, and JP Morgan has a target price of ₹1468 and Morgan Stanley has a target price of ₹1662 per share, implying an upside up to 34% from current levels. So what does JP Morgan say? It says one of the two drivers of the recent underperformance is weak refining margin, and JP Morgan says that has now started reversing, which is positive. Second, poor retail top-line growth is difficult to anticipate, but expectations after the recent underperformance have compressed. And post-stock correction, implied valuations for retail business are 25 times FY26 estimated EBITDA, and valuations for retail business are now below historical levels, and it's below peer retailers as well. Morgan Stanley says refining margins are starting to recover after 2 tough quarters, and free cash flow engine should pick up pace as 0.6 million barrel per day of refining capacity shuts in 2025 globally. Also, net capacity addition should be half of the demand growth, and new energy is seeing demand improved outlook. So considering all these factors, both JP Morgan and Morgan Stanley have a positive outlook on Reliance Industries.
Sudarshan, thanks a lot for that. One of the key contributors to the Nifty upside today is Reliance Industries. Time for a short break. On the other side, Manisha Gupta joins in with Rajiv Bhutriacha, the Director General of the Automotive Tire Manufacturers Association. Stay tuned. Back on the other side.
Rivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Welcome back, and joining us on the show now is Rajiv Budraja. He is DG at Automotive Tire Manufacturers Association. Mr. Budraja, hi, thank you so much for joining us. I want to start with the prices in case of rubber, which are trading at a one-week highs right now. Of course, the strength in crude oil prices in some sense supports the markets, but it really is about the overall production in the major producing countries. So the numbers that we're looking at from Malaysia and Thailand are quite bullish for the prices. What's your sense on the global production, and how do you see the current prices?
Thank you, Manisha. I think globally, the projections for natural rubber are somewhat of a concern, especially in the major rubber producing countries, that's Thailand, Indonesia, and also Vietnam. And let's not forget, these three countries account for more than 50% of the total rubber production globally. And all these three countries are reporting or likely to report a negative growth in 2024 versus last year, with Thailand and Indonesia reporting double-digit negative growth, because of various factors like the typhoon and the abnormally heavy rains and floods that inflicted these two countries. So I think these are definitely going to mirror or reflect in terms of the overall rubber availability for the current year, as also the prices that you talked about.
Mr. Budraja, what are the kind of prices that we're looking at in for the Indian markets? How has year 2024 been? What is the kind of demand that we're looking at, especially during this time? Because this is festivals, wedding. We do understand that the automotive, consumption also, or buying, purchasing as well, is slightly higher than other quarters.
Yes, in fact, the entire automotive ecosystem, including the tire industry, was very, kind of optimistic on the second half of the current fiscal because of the festive season and a general bounce back post elections and all that, with the increased spend for infra and other major projects. But I think a little bit of a, if I may say, if not a disappointment, but an aberration there, because in the auto eco space, we have seen that the replacement demand is yet to kind of bounce back, especially in the commercial segment, and also a little bit in the passenger car segment. Two-wheelers have done well, and tractors, of course, have done well. Because of overall, incomes and the rural incomes reflecting a positive trend. OEMs, which account for another major chunk of the demand for tires, have also been somewhat sluggish again into these two categories, which is the passenger car and the commercial vehicle. So I think the third quarter has been slightly, if I may say, somewhat sluggish or slower than what was expected. But we hope that fourth quarter would take care of, the growth projections, and hopefully again we will start the next fiscal on a more optimistic and positive note.
Mr. Budraja, what's the kind of production for rubber that we are seeing in India, and what's your sense of prices for the country?
We had seen in the month of August, the domestic rubber prices touched a record high, a 13-year high of almost close to 240 rupees. But they have settled since then to a more range-bound between 185, 190 in that range where it is prevailing now. So I think looking at the overall, the current global as well as domestic production consumption trends of rubber, as well as the demand supply situation, it's likely to stay range bound. And until, we are out of the peak production season. Let's not forget, September until February is the peak production season in India. And though availability in this period this year in particular has been a little on the tighter side. So one would hasten to add that if the demand was as bullish as was expected, then definitely it would have reflected on both the availability and the domestic pricing. But I think that sluggish demand coupled with the sort of being in the peak season has been somewhat of a better situation for the consuming sector.
Point taken.
All right, Mr. Budraja, thank you so much for sparing time and joining us with your thoughts. Manisha, thank you for joining in as well. With that, we call time on this edition of Halftime Report. The Nifty comfortably at the highest point of the day at 23,660. Business Lunch takes the action forward.
A big day, a major setback to the Adani Group because this is the US Department of Justice, a court in the United States which has opened an indictment against Gautam Adani and his nephew Sagar Adani and 7 others. Got the US Securities and Exchange Commission which has also made charges against the Adani Group and members of the Azure Power Corporation. Essentially, they have said that both these companies got together, colluded to gain government contracts for the Solar Energy Corporation of India because they were working with this company for solar energy, and in order to get contracts from different state governments, they tried to bribe Indian officials across the country, primarily in the state of Andhra Pradesh, and offered bribes to the tune of over 2,000 crore rupees. Now, why has this become important? Why did the US courts take cognizance of all of this? This is because the US courts believe, and the US Securities Exchange Commission believe, that they have raised capital from the US markets while bribing officials in India. So this is a major allegation. They have been charged under the Foreign Corrupt Practices Act and the Extortion Prevention Act of the US. Primarily 4 counts against them: conspiracy to violate the Foreign Corrupt Practices Act, securities fraud conspiracy, wire fraud conspiracy, securities fraud relating to 2021 bond offering, and conspiracy to obstruct justice as well, because both these forums in the United States believe, legal forums believe, that the accused have destroyed evidence as well.
Did Gautam Adani, did Sagar Adani mislead the Bombay Stock Exchange, the National Stock Exchange? And if yes, what are the consequences? Well, we'll try to answer this question by using excerpts from the US District Court indictment order against the Adanis. And we'll refer to 4 specific paragraphs which spell out the details, the chronological list of events as to whether or not there was any misleading claims made. First up, paragraph number 103. This paragraph very clearly spells out that the FBI reached out to Sagar Adani on March 17th, 2023. And once that happened, once the FBI had reached out, there were 3 specific things that happened on that day, on March 17th of 2023. Number 1, all his electronic devices of Sagar Adani were seized by the FBI. Number 2, a search warrant was served on Sagar Adani, which very clearly listed out all the offences and the allegations for bribery under the FCPA. All of them were listed out for the benefit of Sagar Adani. And finally, a grand jury subpoena was also served on Sagar Adani, which again contained all these details. What's important is that the same paragraph also points out that this information then became available to Gautam Adani on the very next day, that's March 18th of 2023. All of this information was available. Gautam Adani was in the know of this investigation, was in receipt of that subpoena of...
Stocks trade in the green after a down day on Thursday, with Adani Group finding their feet. The Nifty rises over 23,600. All sectors trade with gains. Mahanagar Gas increases the price of CNG by ₹2 per kg following the recent cut in domestic gas allocation to the company. The stock gains even as the hike is far lower than required to offset the impact. NTPC Green Energy's 10,000 crore rupees IPO gets fully subscribed early on the final day of the offer, with the retail portion seeing strong oversubscription. Bitcoin tops $98,000 within a striking distance of the $1 lakh mark following the reports saying Trump's crypto advisory committee could recommend creating a U.S. crypto reserve. Hello, good afternoon. You've tuned into Business Lunch on CNBC TV18 and I'm Vinny Motiwala. Surely a good afternoon that's shaping up because Nifty is trading near the day's highest point, at the day's highest point as of now as you look at it, because 23,700 is what the Nifty is just touched. 1.5% of gains is what the Nifty is holding on to. Sensex 2 is performing in tandem with that. 1%, more than 1.5% of gains that you're seeing coming in for the Sensex as well, just around that 1.5% mark. Let's pull up the broader markets, what the mid cap and the small cap is doing, right? That's interesting to watch out for. A bit of an underperformance versus the benchmark indices, but still Nifty mid cap holding on to gains of 0.9%, small cap holding on to gains of 0.8%. So an interesting day coming in there. Nifty Bank 2 is seeing some good gains today. Nifty Bank is up 1.3%. So good moves coming in there. PSU Banks is among the top sectoral gainer today that we're watching out for. Yesterday was a different story for PSU Banks, but today surely seeing some gains there. Top contributors in terms of points coming in for the Nifty 50. We had ICICI Bank, SBI, L&T, Infosys and TCS. So some of these IT names, private bank names of ICICI Bank coming in play over there. Nifty 500, a lot of movers and individual stock movers that we're seeing today in trade. We have Spark, that is in focus. That is the Sun Pharma Advanced Research Company. That is the one in focus. Praj Industries on the back of news flow. MRPL, Raymond as well as Paytm, they're seeing some good gains coming in terms of Nifty 500 side. And like we're talking about some of these important movers, and like I've just mentioned, Praj Industries, that's seeing a sharp up move today. The jump is coming in after the company has released its growth plans where it expects to triple its revenue by 2030. Vamakshi is joining with us with more of the details. What is the company eyeing in 2030? Vamakshi, good afternoon.
Well, good afternoon, Vinny. Absolutely, the company has come out with positive growth plans for, up till 2030. They say that they're eyeing opportunities in several sectors, which include sustainable aviation fuel, biopolymers, as well as energy transition and climate actions. Apart from that, they also highlight that overall the global opportunity is expected to be tremendous because the energy majors are expected to invest roughly around 25 lakh crores in the clean energy sector by 2030. On the same hand, traditional oil and gas market is looking to invest 21 lakh crores in the next 10 years. But what does this opportunity mean in terms of Praj? They see significant demand for modularization solutions for setting up plants, and in order to cater to this significant demand that they expect, they're also setting up a manufacturing facility in Karnataka, that is in Mangalore, Karnataka, and they have already made an investment of around 400 crores. From this investment, they expect to generate a revenue of almost 2,000 to 2,500 crores per annum at optimum utilization. In addition to that, they also see opportunity in sustainable aviation fuel, and that is because India has set a 1% blending target by 2027 and 2% by 2028. Additionally, the European Union and USA both have a target of 6% and 10% respectively as far as sustainable aviation fuel is concerned. So largely, given the kind of demand that they're expecting the revenues to triple to 10,000 crores from 3,400 crores currently. They're also expecting the exports mix to rise to 50% as compared to 29% now. And this would bode well for the company in terms of margins. Overall, it's a very robust picture that the company has painted for us, and resultantly the stock is soaring higher.
Okay, thank you so much for that. Vamakshi, Praj Industries as of now trading at the day's highest point. Let's move on. Another stock that is in focus today is Mahanagar Gas, MGL as we know it. And the shares are surging after the company has hiked the CNG prices. Sonal is joining in with us to give us more details on this one. Sonal, is this enough after all the recent cuts in terms of allocation that we've seen? What is the word on this?
Well, yes, it's a price hike which was anticipated, but it's just a 2 rupee price hike that has come by. It takes the total price to 77 rupees a kg. This is applicable from today. And the last time we saw a price hike was back in July, around 1.5 rupees per kg. As we know, this price hike has come on the back of this big cut in APM gas allocation. But as you asked, is it enough? Well, they have taken a 2.5% price hike now. But calculations suggest all these city gas distribution companies have to take a price hike anywhere between 8 to 10% in order to pass on the entire cost to the customers. So it's not enough, but though of course it'll take care of some of the margins, and still there is more price hike which is required, but that could impact volume. So it's again a gamble that the company will have to take, but the stock is higher. IGL will also be in focus because if they follow suit, that would also mean that they'll also go ahead and hike prices.
Okay, Sonal, thank you so much for that. But let's also hear out Gautam Dugar of Motilal Oswal Financial Services giving his call on Zomato and the cement sector. Listen in.
If you look at the next 5 or 10 years, I think it's quite probable that at an industry level itself, we might clock a growth rate CAGR of 20% over 10 years. Of course, today 20% for this segment may look less because they are growing at 40-50%. But if you stretch that out over a 10-year period, at a top line basis for the industry as a whole put together, 20% is a very good number. And as of now, there are only 2 or 3 players with size. So definitely there are going to be a lot of winners in the spaces. Difficult to say who will be the biggest winner. So it makes sense, in our view at least, to put a bet on 2-3 names. As far as our own model portfolio is concerned, we've been holding Zomato and continue to stay positive on it. No, we don't like cement as a space. We don't have any exposure to cement stocks in the model portfolio. The numbers are very bad, actually. And I think the numbers are going to look weak over the next 2 quarters, too. This was incidentally the 5th consecutive quarter of a double-digit profit decline. As we move forward, March typically is the best quarter for the cement sector. We will see how things pan out by then. Definitely not at the moment. We don't have any exposure to cement stock. We are actually playing industrials theme through capital goods. We are playing industrials theme through real estate and all.
Okay, and now it's time to shift focus to the world of cryptocurrencies because that's the one that's on fire since the last few days. And Bitcoin, that's nearing $1,100, I beg your pardon, $100,000 mark that we're watching out for. Everyone is keeping an eye out on that. Manisha is joining in with us. What is the latest update coming in on the Bitcoin front? What are we watching out?
Well, Vinny, you know, we are inches away from that 100,000 mark. We're trading almost at around 99 and 200 and plus kind of levels there, which also is an all-time highs. But the markets are done with all-time highs. It is the 100,000 psychological mark. The 6 figures and 5 zeros is what everybody really seems to be looking at right now. But as we trade at all-time highs for Bitcoin, and the last 24 hours have been nothing short of a party on crypto coin as a segment there, because a lot of cryptocurrencies have surged anywhere between 5 to 15% overnight. We also are looking at the crypto market cap at a record of $3.4 trillion right now. Well, the support has come in 2024, one on the back of, because this is a Bitcoin halving year, so you see a lot of Bitcoins burned out, and that has been supportive. And then it is about hopes of a more stronger, friendlier crypto administration as Trump takes over in January 2025. The markets have seen US spot Bitcoin ETF also get listed on 20th of November. And since its listing, there has been $1 billion of a net inflow that we have seen come in for this very new instrument as well. And then Trump has vowed to introduce crypto-friendly regulations, even introduce Bitcoin within the forex reserves there. So there's lots that the markets are anticipating as 2025 begins. Also, the SEC chair, Gensler, is ready to resign in Jan. Gensler has been a harsh one when it comes to cryptocurrency as a segment. So his going also is seen as a very, very positive there. Industry in past 2 years has seen a lot of strength come in, and this year clearly looking at very strong gains there. If you look at the Bitcoin journey, since the time election has happened, this has been a month, we've seen 40% of gains come in for Bitcoin, 160+% kind of gains coming in this year itself. So we are looking at a very strong run up, but as soon as we see that 100,000 perhaps is what would add to further cheer coming in for this market.
Thank you so much for that, Manisha. But let's just mark the flashes at the bottom of your screen. We have some update coming in. Well, and this is from Bloomberg, where they're saying that SEBI is looking into whether Adani Group has violated the disclosure rules. And they said that if any action is required, that will be taken if the rules are violated. As of now, they're just going to be looking into the matter. So keep an eye out on that. We're keeping an eye out on the Adani Group stocks. Obviously, they have recovered from yesterday and today's low as well. So keeping an eye out on this one. Bloomberg agencies, they said that they will decide on a formal probe if that is warranted. As of now, they're looking into the matter. But on that note, it's time to slip into a very short break. Don't go anywhere, because after the break, we'll get you exclusive excerpts from our conversation that we had with the CEO and co-founder of Zepto, as the company raises $350 million domestically in the largest ever for an Indian startup.
These are the important facts. These are the important dates. Keep that in mind. We now go to paragraph number 105. This paragraph very clearly spells out, the US court spells out, that Gautam Adani as well as Sagar Adani caused other people to make misleading statements on their behalf. Essentially, other people misleading on behalf of Gautam Adani and Sagar Adani, saying that they were simply not aware of this US investigation. Next, we move to paragraph number 117. This paragraph again reiterates that claim that there were misleading comments being made on their behalf of Gautam Adani and Sagar Adani, and that these misleading claims were made to the media, to the stock exchanges, as well as to financial institutions. And then we travel to paragraph number 120, and this is where the beans are sort of spilt. This is where the court in fact spells out in great detail that exactly a year after, on March 19th of 2024 of this year, a year after the FBI had reached out to Sagar Adani, served those search warrants, we find that there was a letter that was written by Adani Green to the Bombay Stock Exchange, to the National Stock Exchange, claiming that they had no knowledge of any ongoing investigation by the Department of Justice in the United States. And that is despite a year had transpired since they received the notice by the FBI, the search warrant by the FBI, which had very clearly listed out all those allegations and concerns with respect to bribery. And that, the US court concludes, is in fact making false as well as misleading claims. And what is important is that there are detailed obligations listed out under the SEBI norms for listing, for disclosures under the SEBI Act itself. And the apprehension is, we've spoken to very many legal lawyers, what they tell us, the apprehension is that this could very well be a fit case for SEBI, the market regulator, to take action for these misleading claims.
Thanks for staying tuned into Business Lunch on CNBC TV18. And let's move on to that exclusive conversation that we'll be playing out for you all through the day. Zepto has raised that $350 million in what is the largest 100% domestic fundraise for a private startup in Indian history. The quick commerce delivery platform co-founder Adit Palicha actually spoke to Shireen Ban about the rationale behind the company's fundraising. Listen in.
You know, when we spoke in August, you said you're not looking at raising any more money. What's changed?
So yeah, we raised over $300 million. It's the largest 100% Indian fundraise for a private startup in the history of this country, right? And we're proud of it. The reason why, you know, when we started this financing, we had over $1 billion of net cash in bank, no debt, right? We're growing well. And the reason why we raised this capital, candidly, is because, you know, throughout the entire life cycle of Zepto, we've always wanted to bring on board domestic capital. Both, you know, Keval and I are excited about the fact that we can build like a, you know, an Indian company that people can be proud of. But there never really has been risk capital of that scale available to private startups. And so, you know, we pushed, I remember from the Series A onwards, Series B, Series C, Series D, we tried to get domestic investors on board, but it wasn't the right time. We saw an opportunity here with Motilal Oswal and their team, and you know, we went into it not really with many high expectations, but we were able to put it off, and we're quite excited about it. And the rationale behind, you know, doing a domestic fundraise is fairly simple. You know, we had over $1 billion of cash in bank. Now we've got over $1.3 billion of cash in bank.
Yeah.
But this domestic financing just helps us increase Indian ownership going into an IPO. We think that benefits the company long term. One, you know, just public trust and shareholder trust going into a public company. It's better to be owned by high quality Indian names, right? And you know, historically we've been limited to Silicon Valley VCs that are not very familiar, or that Indian institutional investors and Indian retail shareholders as well are not familiar with. And B, even just from a, you know, regulatory and government lens, we think being an Indian company is favorable. And lastly, it's the ambition that Keval and I have always had to build like an exciting Indian company.
But is that the real rationale, you know, of being Indian owned, so that the FDI regulations, especially the FDI regulations to deal with retail and e-commerce, don't necessarily constrain you?
So, number one, I mean, you know, even today, we are 100% compliant and respect FDI laws, right? We've, you know, essentially maintained the same successful e-commerce models that have existed in this country for over a decade, right? And you know, we've built a lot of depth, not just in FDI compliance, whether it's, you know, for a fairly young company, having a Big Four statutory auditor, right, with and you know, pulling off a financial year closure with no qualifications. You know, that's one example. Whether it's GST compliance, whether it's income tax compliance, whether it's even, you know, our best efforts on FSSAI compliance. We've worked hard there. So we're not concerned by FDI compliance. We feel confident in the work that we've done, and we're compliant.
Not necessarily compliance. What I mean is that do you feel that the FDI regulations don't give you the flexibility to do the kinds of things that you may want to do? Because we're given to understand that this is what Zomato is looking at as well as it grows out Blinkit, and which is why they did this big fundraise as well.
Yeah, no, look, it's less about the FDI rules opening up more business avenues. It's more about, you know, being an Indian-owned company and putting that debate to rest on, you know, as we get to larger and larger scale, is it an Indian company or a foreign company?
And you can catch the exclusive interview at 4:30 p.m. and 9:30 p.m. only on CNBC TV18. Okay, on that note, we're going to slip into a very short break. After the break, we'll get you more news and updates on the other side.
in America that Mr. Adani has broken both American law and Indian law. He's been indicted in the United States, and I'm wondering why Mr. Adani is still running around a free man in this country. Chief ministers have been arrested. Jharkhand Chief Minister was arrested. Many people have been arrested. And Mr. Adani has done apparently 2,000 crore scam, multiple others probably, but he's scot-free. He's running around. There's no problem. There's no investigation. Adani जी को एकदम अरेस्ट किया जाए. और हम जानते हैं और हम देश को दिखाना चाहते हैं कि अदानी जी की अरेस्ट नहीं होगी. और इसलिए नहीं होगी क्योंकि हिंदुस्तान के प्रधानमंत्री अदानी जी के पीछे खड़े हुए हैं और उनके प्रोटेक्टर हैं. आप लोग हिंदुस्तान के युवा, आप लोगों को रोजगार नहीं मिलता, महंगाई बढ़ती जाती है, छोटा सा कोई क्राइम करता है, जेल चला जाता है. एंड इट्स ए टेस्टमेंट टू द वर्क बीइंग डन दैट द यूनाइटेड स्टेट्स हैज डन व्हाट इट्स डूइंग. This is not, don't think that nothing is happening. This is flawed. We have completely obliterated Mr. Narendra Modi's image. और हिंदुस्तान का हर रिटेल इन्वेस्टर जानता है कि माधवी बुच is corrupt and माधवी बुच is protecting Mr. Adani. But शुरुआत तो वहीं होगी ना, अदानी से शुरुआत होगी. तो अदानी को पकड़िए, अंदर डालिए, इंटेरोगेशन शुरू कीजिए और इन्वेस्टिगेशन शुरू कीजिए. और ये जो माधवी बुच ही हैं, जो इनके स्टॉक प्राइस को प्रोटेक्ट करती हैं, इनको वहां से हटाइए और क्रेडिबल व्यक्ति को वहां डालिए, क्योंकि अगर आप नहीं करेंगे तो हिंदुस्तान के जो रिटेल इन्वेस्टर्स हैं उनका जबरदस्त नुकसान होने वाला है. अदानी जी का अरेस्ट होना चाहिए और जो भी इस मामले में इन्वॉल्व है उस पर कार्रवाई होनी चाहिए, चाहे वो कहीं का भी हो, कोई भी हो. जहां भी करप्शन है वहां पे इन्वेस्टिगेशन होनी चाहिए, मगर इन्वेस्टिगेशन अदानी जी से शुरू होगी. और जब तक अदानी जी अरेस्ट नहीं होंगे तब तक क्रेडिबल बात नहीं बनेगी. तो शुरुआत वहां से है. अदानी जी को अरेस्ट कीजिए, उनका इंटेरोगेशन कीजिए.
Welcome back to Business Lunch on CNBC-TV18, and let's move on to some international news updates. Now, the International Criminal Court has issued warrants against the Israeli Prime Minister Benjamin Netanyahu and the former Defense Minister over the Gaza war. The Israeli Prime Minister has called the arrest warrant anti-Semitic and false. Dan Murphy has filed the report on the same.
The International Criminal Court has issued arrest warrants for Israeli Prime Minister Benjamin Netanyahu and former Defense Minister Yoav Gallant over the Gaza war. The Hamas leader Ibrahim al-Mazri has also been issued with a warrant, with the ICC accusing them of war crimes and crimes against humanity. Netanyahu, in response, is calling the warrants, quote, anti-Semitic.
The decision to issue an arrest warrant against me, the democratically elected Prime Minister of the State of Israel, and our former Defense Minister, was made by a rogue prosecutor who's trying to extricate himself from sexual harassment charges, and by biased judges who are motivated by anti-Semitic sentiments against the one and only Jewish state. It is falsely accusing me, the democratically elected Prime Minister of the State of Israel, and Israel's former Defense Minister, Yoav Gallant, of deliberately targeting civilians. This when we do everything in our power to avoid civilian casualties.
Meanwhile, US President Joe Biden has said the ICC's arrest warrants are, quote, outrageous, and reiterated Israel has the right to defend itself against Hamas.
Okay, that's the update there. But a quick look at what the market is doing, because we have seen that run up coming in. And as of now, Nifty at the day's highest point, 23,712, a 1.5% uptick. Sensex 2 holding on to gains for 1.5%. Mid and small cap 2 have started seeing that run up coming in, and Nifty Bank up 1.3%. But that's all the time that we have on this edition of Business Lunch on CNBC TV18. Thank you so much for tuning in. Don't go anywhere. You have Midcap Radar up next.
Because of the information that has been provided to us by partner nations, I have directed agencies within the Ministry of Transport and the Ministry of Energy and Petroleum to immediately cancel the ongoing procurement process for JKI expansion public-private partnership transaction, as well as the recently concluded Ketrago transmission in public partnership. I have stated in the past and now reiterate today that in the face of undisputed evidence or credible information on corruption,
Good afternoon. Welcome to Midcap Radar. I'm Sonal Putra. With me is Hormaz, and it's a deep shade of green that we are looking at today. 350 points higher on the Nifty. Midcaps are participating, but in a market like this, we are seeing the midcaps are underperforming the benchmark. So that's the kind of moves that we are seeing. But a lot to discuss on the show.
A deep shade is not something that we have associated with green over the last couple of weeks. But yes, if there was an example of ending the week on a high, the markets are surely giving us that example as of now. So let's take a look at the headlines that we have at 1:30 this afternoon. The markets extend their gains to the highest point of the day. The Nifty rises above 23,700, while the Sensex is also up over 1,100 points. All sectoral indices are in the green. The mid-caps, as Sonal just said, are underperformers.
Praj Industries shares jump over 8% as the company aims to triple its revenues by 2030. The company is eyeing annual revenues of 10,000 crore rupees as it bets big on the clean energy opportunity.
Protein eGov is under pressure with the National Stock Exchange set to sell its 20% stake via an offer for sale. The stock is down nearly 9% in a roaring market.
Info Edge shares surge nearly 4.5% after Goldman Sachs upgrades the stock to a buy from a sell rating and raises the target price to 8,600 from 5,700.
And Sobha is up nearly 6.5% after HSBC retained its buy rating with a 2150 price target. The brokerage said that Sobha is poised for strong growth after its recent rights issue and improved cash flow.
Okay, all right. So those are the top headlines. The markets, they are in the Friday mode. Our studio is in the Friday mode. So all of us looking forward to the weekend. Look at that. The Nifty is up 335 points right now. It's a one-way move that we've been able to see today. The mid-caps up around 500 points. There's good contribution coming in from banking names as well. The Sensex sitting with gains of around 1.5%. And I think all the sectoral indices, they are in the green right now, with PSU Banking Index, that taking the charge. Of course, media is in the red. But, you know, if you look at the sectoral moves as well, after especially what we saw yesterday, day before yesterday, where there was a big fall from the highs. So it has come in as a Good Friday cheer and something that was not largely expected today.
You know, fans of Kaun Banega Crorepati would say Pehla Padav, Dusra Padav. The first stage was the fact that they had to cross the 200 DMA. The Nifty has done that. Now the second Padav is the fact that they have to cross Tuesday's high, which is 23,781. And that is the level you'll have to keep an eye out for on the index. But the mid-cap index is up 1%, but still in comparison to the Nifty is a relative underperformer. Plenty of movers in the broader markets, and Vamakshi is here to take us through all of those. Vamakshi, good afternoon.
Well, good afternoon, Hormaz. Yes, the markets are cheering, and when we look at the top gainers, we have MRPL surging in trade. Raymond is another name that is up and away in the trading session today. Paytm has touched an intraday high in the last 11 months. KEI Industries too is seeing a surge of almost 6%. SJVN, there's a news flow out here. They will be developing renewable energy projects in Rajasthan. The stock is up and away in the trading session today. But apart from that, we also have a couple of stocks that are seeing a bit of pressure. Protein eGov Technologies is down nearly 9% on the back of NSE Investment selling nearly 20% stake in the company. Torrent Power too seeing some bit of a pressure, down nearly 5%. Ratnamani Metals, Bharti Hexacom and Honasa has made it to this list on every day of this trading week, and the stock continues to trade lower. In fact, it is at a record low now. But apart from that, there are some IT stocks that are buzzing in trade today. We're looking at Emphasis, Birla Soft as well as Oracle Financials. All of these counters are anywhere up between 2 to 3%. There are a couple of stocks that are gaining momentum on the back of strong volumes as well, and this list includes Sun Pharma, Advanced Research, that is Spark, it's up nearly 8%. Sobha, again on the back of a brokerage note, up nearly 5%. Kansai Nerolac as well as Vijaya Diagnostic are some other stocks that are gaining momentum driven by very strong volumes. And lastly, let's focus on two stocks that are in focus on the back of very strong news flow. Praj Industries, the management has highlighted that they are looking to triple their revenues by 2030. The stock is up nearly 9%, while SCI, the central government has listed 3 new shipping bills for the winter session of the parliament, and that is the reason why the stock is up nearly 4.7%.
Okay, all right. Some interesting names there. Thank you so much, Vamakshi, for joining in. Have a great weekend ahead. I'm sure all of us are looking forward to that. But it's a good time to welcome Himeen Kaparia from DR Choksi FinServ for a technical check on the markets. Himeen, good afternoon. Thank you so much for joining in today. What are the next levels that we are watching out for, and some stock-specific action that you're looking at as well?
A very good afternoon to you, Sonal. Thank you for having me on the show. Such a pleasure. In terms of levels, there was a head and shoulder target of around 23,229, Sonal, which was almost achieved yesterday. Missed it by 30 points. That's okay on the scale. A small intraday swing high comes in at around 23,731. Sonal, that's where we are going to face a little bit of bout of resistance. But to take a slightly bigger move, we peaked at 26,277. We went to 23,263. So that's almost 3,000 points only. So if we were to take one step at a time, like I said, 23,371 is the first headache, the padao that you were mentioning about, then you have 24,000. So there are the couple of the levels. But if you were to retrace this whole fall, which is a possibility, as of now, we are looking at a very short-term view, assuming a small bottom is falling into place. I think we could have seen a short-term bottom yesterday, and there could also be probably onset of a much delayed, deeply oversold rally from a 3,000 point fall. So fingers crossed. It's just baby steps as of now. The VIX is still at 16. Bitcoin is closer to all-time highs. There are a few things need to set in place, but I have a feeling downside does appear limited for the first time in quite some time. And yeah, things are looking good. In terms of individual stocks, Sonal, two stocks which I picked. The first one is Hindustan Unilever, deeply oversold, off from 3,000 plus to sub 2,400. Downside appears limited. Positive divergences, crossover buys. A bounce is what you're playing for. So one can buy HUL at 24.15, stop loss 23.65, target of 25.15, risk reward ratio 1:2. Second stock logic is almost the same, Sonal. A buy on Tata Motors, virtually fallen off a cliff from 1180 to 760, deeply oversold. It's forming a base. A turnaround is clearly around the corner, a shorter term one. All the oscillators have given a buy after multiple rounds of positive divergences. So without getting too technical, a buy on Tata Motors at 784, stop loss of 760, and a target of 832. So
100 points up on the Nifty, limited downside, a buy on an underperforming HUL, possibly everything that the bulls wanted to hear. Hemant, thanks a lot for spending time and joining us today with your views on the index and specific stocks as well. Time for a short break. The management of Cosmo First joins us on the other side to discuss the road ahead. Stay tuned.
I will not hesitate to take decisive action. Accordingly, I now direct, in furtherance of the principles enshrined in Article 10 of the Constitution on transparency and accountability, and based on new information provided by investigative agencies and partner nations, that the procuring agencies within the Ministry of Transport and the Ministry of Energy and Petroleum immediately cancel the ongoing procurement process for the JKIA expansion public-private partnership transaction.
A big day, a major setback to the Adani Group because this is the US Department of Justice, a court in the United States which has opened an indictment against Gautam Adani and his nephew Sagar Adani and 7 others. Got the US Securities and Exchange Commission which has also made charges against the Adani Group and members of the Azure Power Corporation. Essentially, they've said that both these companies got together, colluded to gain government actions.
Welcome back. You're still tuned into Midcap Radar. Let's talk about Cosmo First. Recently reported their Q2 numbers. It was a good set. They saw their revenue rise 14% while EBITDA surged 41% on a YY basis. To discuss this and more, we are joined by Neeraj Jain, Group CFO at Cosmo First. Neeraj, good afternoon. Thank you so much for joining in. Well, is it fair to say now that the cycle is turning into the positive terrain now and there will be a sustainable growth going forward? What are the realizations looking like? Have they seen an uptick on a YY and on a quarter-on-quarter basis? And does this phenomenon continue?
So good afternoon and thank you very much for having me. As you rightly mentioned, of course, there is a uptick in the margins for the BOPP and BOPET, both different. But having said so, what is also working favorable for us is the growth in the specialty film. In the Q2, we have reached 70% of our volume coming from the specialty film, which has grown 13% on a year-on-year basis. So which is working very well for the company. For the BOPP and BOPET spread also, there's an uptick of between 30 to 40% because the demand-supply gap which got created in FY24 is getting breached, and we are optimistic about the margin going forward.
Neeraj, good afternoon. Thank you for joining in. If you're optimistic about the margins going forward, could you share a figure as to where do you expect to year the end with? The first half, your margins stood at around 8.9%. Do you see to end the year by double-digit margins? And also, if you can share a picture on the volume growth going forward.
Well, in principle, although we do not provide any guidance, but overall what I can share is if we look at first half of the financial year, we have already doubled the PAT level compared to last year. And I do not see any reason why it should not replicate in the second half of the year.
Okay, so you will be able to see doubling of PAT even in the second half. So you can say safely that 150 crore rupees of PAT is something which is doable in this year?
Well, no specific number, but yes, broadly, the things are looking positive.
Okay, so was this improvement led just by realization improvement, Neeraj, or did you see volume growth as well? If yes, how much was it in Q2? And as my colleague asked, what is the number that you're looking? If not a specific number, is it high double digits, high single digits? What is it that you're looking at?
So there's a volume growth, of course, beside the margin growth. But having said so, the margin is working more favorably because of the specialty sales growth. Having said so, our new businesses, whether the specialty chemical or the rigid packaging, all are taking shape now. Specialty chemical has reached high teens EBITDA level and more than, in fact, 30% return on capital employed. Beside this, rigid packaging vertical is also doing fairly well. We have reached 100 crore rupee of the run rate of the top line, which we expect to close the year close to 150 crore rupee of the run rate top line.
So was this improvement led only by the specialty sales or was it a mixture of commodity sales and specialty sales? And if you could share a mix, the split between the two, and do you expect to sustain that number in the second half as well?
So 70% of the sales came from the specialty in the Q2, which is working favorably. So beside this also, as you said, from the mix perspective, it is favorable. And beside this, the other businesses are also helping. Having said so, if you look at the part of the growth is coming from the volume, part is coming from the higher specialty sale, and part is coming because of the uptick in the base commodity BOPP from margins.
Got it. Take that point. So that's about your films business. Let's talk about the pet care business because that is something that you're bullish on as well. What was the GMV, the monthly GMV that you saw? Will it improve in the second half? And have you broken even here?
Well, Zigli is taking very well shape. So if you look at the Q2, we have focused on two particular aspects. One is the vet services. We wanted to make Zigli more focused towards the services. And second is we have launched a couple of private labels. So these two factors are helping us a lot. We have already reached close to 4 crore rupee of the monthly GMV. And yes, I mean, although break-even EBITDA is not yet achieved, but we feel that it's not very far off. Between 150 to 200 crore rupee of the top line, we should be able to achieve the break-even EBITDA for the Zigli operation.
Well, and is that possible in the second half of the year, Neeraj? And the last time you spoke to us, you had mentioned that Zigli was growing at the month-on-month rate of 7%. What has been the month-on-month growth rate this time around?
The month-on-month growth definitely remains broadly in the same direction. Having said so, second half of the year, break-even for the Zigli may not be possible, but it should happen in maybe next 2 years' time.
All right, that's about Zigli. Let's talk about the specialty chemical subsidiary. How big is it in terms of size? Because you spoke about it in Q1 that you will be commercializing multiple chemistries, including adhesives, coatings, master batches as well. How much EBITDA is coming just from specialty so far, and how do you look at it contributing going forward?
So specialty chemicals business for us is close to 200 crore rupee of the top line, if I look at the run rate. And it's high teens EBITDA, and as I said, 30% plus return on capital employed. In the medium term, we see this business taking shape close to 500 crore rupee of the top line business. If you look at the Cosmo overall, one is the flexible packaging is growing because we are adding close to 40-45% new capacity, which should commence operation from the next financial year. One is this. And on the second hand, the other new business verticals are growing rapidly. So we are fairly optimistic for the growth of all these verticals. What we are looking at in the medium term is maybe 20% of the top line coming from new business vertical and 80% come from flexible packaging.
You know, Neeraj, since you mentioned Zigli will break even in the next 2 years, it would have grown substantially on the top line front by then as well. So what do you see the business 2 years down the line in terms of its mix? How would you divide that between packaging, specialty chemicals and pet care over the next 2 years? How do you see that going forward?
Well, Zigli, as we said, I mean, break-even should happen close to 150 crore rupee plus of the top line. We are aspiring to reach at that number maybe in 2.5 years or so. The other businesses taken together, as I said, today it's close to 10% of the top line. What we see these businesses to take this shape maybe 2 years down the line, 20 to 25% of the top line should come from the new business verticals, including Zigli, and 80% remains flexible packaging business.
Okay, take that point, Neeraj. Seems the street is liking what you're saying. The stock is spiked to the day's high. It's up 3% right now. So positive commentary coming in and some improvement that we are seeing after some quarters of losses at the EBITDA level because of what was happening in the packaging business. With that, we'll slip into a break now. When we come back, we'll talk about markets and stock-specific action on the other side. Stay tuned for that.
For the Solar Energy Corporation of India, because they were working with this company for solar energy, and in order to get contracts from different state governments, they tried to bribe Indian officials across the country, primarily in the state of Andhra Pradesh, and offered bribes to the tune of over 2,000 crore rupees. Now, why has this become important? Why did the US courts take cognizance of all of this? This is because the US courts believe, and the US Securities Exchange Commission believe, that they have raised capital from the US markets while bribing officials in India. So this is a major allegation. They have been charged under the Foreign Corrupt Practices Act and the Extortion Prevention Act of the US. Primarily 4 counts against them: conspiracy to violate the Foreign Corrupt Practices Act, securities fraud conspiracy, wire fraud conspiracy, securities fraud relating to 2021 bond offering, and conspiracy to obstruct justice as well, because both these forums in the United States believe, legal forums believe, that the accused have destroyed evidence as well.
Did Sagar Adani mislead the Bombay Stock Exchange, the National Stock Exchange? And if yes, what are the consequences? Well, we'll try to answer this question by using excerpts from the US District Court indictment order against the Adanis. And we'll refer to 4 specific paragraphs which spell out the details, the chronological list of events as to whether or not there was any misleading claims made. First up, paragraph number 103. This paragraph very clearly spells out that the FPI reached out to Sagar Adani on March 17th, 2023. And once that happened, once the FPI had reached out, there were 3 specific things that happened on that day, on March 17th of 2023. Number 1, all his electronic devices of Sagar Adani were seized by the FBI. Number 2, a search warrant was served on Sagar Adani, which very clearly listed out all the offences and the allegations for bribery under the FCPA. All of them were listed out for the benefit of Sagar Adani. And finally, a grand jury subpoena was also served on Sagar Adani, which again contained all these details. What's important is that the same paragraph also points out that this information then became available to Gautam Adani on the very next day, that's March 18th of 2023. All of this information was available. Gautam Adani was in the know of this investigation, was in receipt of that subpoena, of that search warrant. These are the important facts. These are the important dates. Keep that in mind. We now go to paragraph number 105. This paragraph very clearly spells out, the US court spells out, that Gautam Adani as well as Sagar Adani caused other people to make misleading statements on their behalf. Essentially, other people misleading on behalf of Gautam Adani and Sagar Adani, saying that they were simply not aware of this US investigation. Next, we move to paragraph number 117. This paragraph again reiterates that claim that there were misleading comments being made on their behalf of Gautam Adani and Sagar Adani, and that these misleading claims were made to the media, to the stock exchanges, as well as to financial institutions. And then we travel to paragraph number 120, and this is where the beans are sort of spilt. This is where the court in fact spells out in great detail that exactly a year after, on March 19th of 2024 of this year, a year after the FBI had reached out to Sagar Adani's son.
Welcome back. Almost 400 points now on the Nifty. 23,735 is where the index is, and now it's 23,745 as we speak. At the highest point of the day for the index, has turned positive for the week as well. And pull up Paytm, and that is now 7% higher at the highest point of the day, and also the 5th straight day of gains for Paytm, nearing a 52-week high of 927 that the stock had made in November of last year. A 20% move in the last 5 days is what Paytm has seen. So good going for that. The PSU Bank Index, which was the top laggard in yesterday's trading session, is the top sectoral gainer in today's trading session, recovering all the losses that it had made in yesterday's trade. Now 3.5% higher for the PSU Bank Index. The Realty Index continues to move from strength to strength, another 3% higher for the Nifty Realty Index, and the IT Index too trading with gains of 2%. But speaking of IT, Info Edge is the other one that's buzzing in today's session after an upgrade that came in from Goldman Sachs. Vamakshi is joining in with more on this. Vamakshi.
Well, Hormaz is a massive upgrade, right, that has come through from Goldman Sachs on Info Edge. They've gone ahead and upgraded their rating from sell to buy, and in fact they've gone ahead and also increased the target price on Info Edge from 5,700 to 8,600 rupees per share. The brokerage highlights that the rationale behind it is that they believe that the demand environment for India's IT sector is incrementally improving. Resultantly, they're expecting the recruitment segment's revenue to grow at a much faster pace as compared to what we've seen in the past. They're expecting 16% CAGR from FY25 to 28 as compared to 8% that they're expecting from FY23 to FY25. As far as some of the company's other segments are concerned, they're expecting 20% revenue growth outlook for 99 acres, and they also believe that the 99 acres could actually break even by calendar year 25 given its scale as well as stable competitive intensity. They are also bullish on Zomato, which accounts for nearly 33% of Info Edge's market cap, and they see upside risk to both the multiples as well as the estimates for the company. So that is the rationale behind Goldman Sachs upgrading their rating on Info Edge, and resultantly the stock is surging in trade today.
Okay, yes, it's up around 6.5%. Thank you so much, Vamakshi, for bringing us all those details. With that, we'll take your leave on this edition of Midcap Radar, but stay tuned, your stocks when we return.
we find that there was a letter that was written by Adani Green to the Bombay Stock Exchange, to the National Stock Exchange, claiming that they had no knowledge of any ongoing investigation by the Department of Justice in the United States. And that is despite a year had transpired since they received the notice by the FBI, the search warrant by the FBI, which had very clearly listed out all those allegations and concerns with respect to bribery. And that, the US court concludes, is in fact making false as well as misleading claims. And what is important is that there are detailed obligations listed out under the SEBI norms for listing, for disclosures under the SEBI Act itself. And the apprehension is, we've spoken to very many legal lawyers, what they tell us, the apprehension is that this could very well be a fit case for SEBI, the market regulator, to take action for these misleading claims.
Hello, good afternoon. You've tuned into your stocks on CNBC-TV18. I'm Vinny Motiwala in the Mumbai News Studio. Markets surely are doing quite well, and we're seeing that market is holding on to gains. Nifty trading at the day's highest point as of now. 2% gain that we're seeing coming in for the Nifty 50. 466 points up is what the Nifty is trading at. Sensex 2 is trading comfortably higher in trade around 2% mark as well. Let's look at what the mid and small cap is doing, because that was a bit of an underperformance versus the benchmark indices. They too are trading in the green, but Nifty mid cap is holding on to gains of almost 1%. Small cap too similarly is holding on to gains of around 1% as well. Nifty Bank, let's look at where that is standing at. Standing on the positive side, Nifty Bank as well, holding on to gains of almost 1.6% in trade. Nifty Media, I want to see that chart as well, because that was the only one which was trading a bit with a negative bias. Want to check if that has also recovered and come back on the positive territory. Let's watch out for Nifty Media if we do have that, because that was the only one which was trading in the red. A lot of individual movers that we are seeing in trade today as well. Praj Industries on the back of news flow, MGL that's in focus on the back of news flow as well, and a lot of of movers that we're seeing coming in on the Nifty 50 front, ICICI Bank, SBI, all of them managing to see very strong gains. But that's how the market setup is looking like as of now. But this is a show where we will be solving all your stock-related queries today. And to solve all those queries, we have our experts joining in with us. We have Shaina Mukaddam, who's joining in with us, as well as Vaishali Parekh, joining in with us from Prabhudas Leeradhar. Thank you so much for joining in with us this afternoon, ladies. And you know, Vaishali, I'm going to start with you because today, look at that recovery and jump that we've seen in the market, right? Let's talk about the market first. Nifty, what are we looking at over there? How is it panning up, shaping up this recovery that we're seeing today? Do you think that will be something that will be sustainable, given that we've seen the fall coming in for the Nifty in the past few days?
Very good afternoon, first of all of you. And yes, this is a much needed recovery that we were looking forward to. So talking about Nifty, we saw a good corrective move, nearly 10.5 to 11% of a corrective move right from its high. And 23,250 was a very prominent support, which we witnessed yesterday. We were expecting a bounce up to 23,500, and well, we witnessed that too. Now I think it's likely to go towards 24,000. So still, I would just call it as a bounce back. But yes, there are many stocks which have come to crucial support levels, and I think maybe in times to come, this should act as a strong support, and we would see a gradual up move coming from here on. Likewise, if we talk about Bank Nifty, well, it held on to the 200-day moving average, 49,800, 50,000. And from there also, we've seen a 1,000-point up move coming in. I guess that should also be a good support levels. So wait and watch, and simultaneously, most of the sectors have corrected. So we are seeing participation coming from almost all sectors.
Okay, participation coming in, hoping that this actually holds on. That's the view on the market. But let's get started with the first query for today. We have Rajesh, who's writing to us from New Delhi. He's holding 8,000 shares of Vodafone Idea at an average price of ₹9 per share. So obviously, he's making a loss right now. The stock is trading at around 6.6 rupees per share. He wants to know, for the long-term prospect, is this a stock that one should continue to hold on to? Shaina, what's your view on Vodafone Idea? And good afternoon.
Yeah, good afternoon. Vodafone, they reported, I would say, a very mixed set of numbers. Second quarter, we saw revenue was higher because tariffs were higher. So they were able to improve revenues. But losses, they continue to make huge losses, slightly lower compared to previous quarter. But at the same time, the losses are huge. So to that extent, I think, it becomes a bit risky to hold it despite the stock having fallen such a lot, because you see the competition intensity is also increasing. We are hearing reports of BSNL coming in a bigger way, and they continue to lose, Vodafone continues to lose, its clients. So to that extent, I think it makes a risky hold. So I would suggest a switch, book the losses.
Switch, book the losses. That's the word on coming in from Shaina on Vodafone. Vaishali, what's your view on Vodafone? Similar to that what Shaina is mentioning?
I definitely agree because the trend is absolutely down, making new lows. So definitely a miss.
Okay, trend is down, better to switch. That's the word coming in from both our experts on Vodafone Idea. Let's move on, talk about the next stock that we have today. And the query is coming in from Prakash, who's writing to us from Karnataka. Holding 1,100 shares of Ola Electric, bought at an average price of 90 rupees per share. Currently making a loss in this one. Stock is trading at 68.71 rupees per share. Wants to know whether you should continue to hold or maybe look to sell. Shaina, what's your view on Ola Electric, right? That's been in the news for a while, continuously since its listing as well. What are we watching out for in terms of Ola Electric?
Well, investors have not made any money on the stock, post IPO. It's lower than the IPO price. If you see the numbers, the deliveries in the last quarter were good. Having said that, they made a huge loss in that last quarter. Now, this is, in my view, putting a strain on the balance sheet. So, and also because of these sort of losses, despite the management coming out and saying that they have streamlined their customer complaints and they are, implementing their their repairs within a very short period of time. Despite all that, I think there is a bit of an overhang of negative sentiment on the stock. So if you're a very long-term investor, I think you can hold, but I would classify it as a very risky holding. And because I see a time correction rather than a price correction from these levels. Having said that, I think in terms of the business that they are talking about going forward, the market share about 39% in the two-wheeler EV. So they've got everything going. They've got new products that are coming out. They're planning, they're doing R&D on engines. So to that extent, there's a lot of work going in, but I think this will put a pressure on the balance sheet and on the profitability. So if you're a very long-term investor, you're looking at a concept stock, hold. Otherwise, you could switch.
Okay, if a very long-term investor, then hold. Otherwise, you can look to switch. Vaishali, I know you don't have enough charts or technicals, to, in terms to understand the stock better. But any view on Ola?
I would say, all I can say, of course, I don't have much of a data, but it's in deep oversold. So if you are holding on, at least hold for a bounce back up to 90. From there on, we can have a relook, because once the stock moves above 90, we can say that, yes, there is a scope of further up move going perhaps towards 120. So not in a hurry, I would say hold on.
Okay, not in a hurry, then hold on. That's the word coming in for Ola. But let's move on to the next query. And this one is an interesting stock, Paytm, because that's seen a very good run up. 17% in the last 5 days, last 1 month, 31% uptick that we're seeing. Now, Divya is writing to us from Kerala, and he's holding 460 shares of Paytm at a price of 690 rupees per share. Wants to know whether, in terms of long term, this is a good stock to continue to hold on to. After that correction, we've seen that run up coming in for Paytm. Shaina, Paytm a good one to hold on to for the long term?
I would say so. And we are seeing a lot of momentum come back into the stock. I mean, after all the negative news that we had, last year, things look like they're turning around. They reported very good Q2 numbers. 2 weeks back, they got approval again to onboard customers. Of course, they had to tie up with banks, which they did. They've tied up with a couple of banks. So to that extent, I think that positive will be there going forward. Also, the sale of the ticketing business is now behind them. And that money that they have raised, which was a good sale price, that money will now be utilized to grow the existing business, expand. So all these things coming together, I think it could be a hold.
Okay, a good one to hold on to over there. Shaina, that was Shaina's view on Paytm. But Vaishali, what's your view? Because last 6 months, when you're looking at the charts, around 150% return, right? At one point of time, no one was expecting Paytm to see such a good run up. But slowly, steadily picked up pace, 150% in 6 months. Still a good time to continue to hold on to, or maybe book out profits?
So, well, depending on what your time horizon is and to what level of a trader are you. So, as a disclaimer, we have recommended the stock right from 600 levels. And seeing the stock going just one way higher, I would say technically 920 is the near-term resistance. So, if you're a short-term trader, do consider these levels to book profit and wait and watch. But if you're wanting to hold for a longer-term perspective, I think once the stock moves above 920 and sustains, we are ready for our next target of 1150 to 1200. These are the levels for the next projected target. So that is how I would look at the stock.
Okay. Let's move on to the next query. Naresh is writing to us from Hyderabad. He wants to know if he can buy Reliance shares at the current level. Reliance is trading at 1,256 rupees per share. Vaishali, your view on Reliance? Good time to buy this one?
I would say accumulate. So because we are still not sure, that we're assuming that yes, market is showing signs of bottoming out. But if there was some more selling coming in and if Nifty was to drag lower, then Reliance, I think the prominent support lies at 1180. And we saw yesterday it did make a low of around 1227 or so. So we are pretty much close to the support levels. I would say accumulate at every dip from here on.
Okay. And Shaina, your view on Reliance?
I would say you can start buying now. A couple of reasons. One is, of course, Jio is doing very well, expected to grow in the longer term by about 20%. Another thing is that they are talking of listing it next year. So that's a positive. Retail business is stable. Margins are stable. You have OTC that was O2C, which was actually a drag. in the last quarter, and with GRM stabilizing, I think that could again come back. And what I do believe is that if there is an issue on the global political space or some sort of tensions, I think oil prices will go up, and that could actually benefit Reliance. So to that extent, I think it is doing well on all parameters. Valuations, in my view, are not expensive. If you look at price to book, it's about 2 times. You look at P, it's about 25 times, which is not expensive. So I would believe that one can start buying, and if it dips further, you can add.
Okay. That's a view on Reliance, surely buzzing away in trade today, and Nifty 2 is about 23,800 mark as of now. So interesting to keep that on your radar as well. But on that note, we're going to slip into a very short break. Don't go anywhere, because after the break, we'll still be taking more of your stock-related queries.
In America, that Mr. Adani has broken both American law and Indian law. He's been indicted in the United States, and I'm wondering why Mr. Adani is still running around a free man in this country. Chief ministers have been arrested. Jharkhand Chief Minister was arrested. Many people have been arrested, and Mr. Adani has done apparently 2,000 crore scam, multiple others probably, but he's scot free. He's running around. There's no problem. There's no investigation. Adani जी को एकदम अरेस्ट किया जाए, और हम जानते हैं और हम देश को दिखाना चाहते हैं कि अदानी जी की अरेस्ट नहीं होगी, और इसलिए नहीं होगी क्योंकि हिंदुस्तान के प्रधानमंत्री अदानी जी के पीछे खड़े हुए हैं और उनके प्रोटेक्टर हैं। आप लोग हिंदुस्तान के युवा, आप लोगों को रोजगार नहीं मिलता, महंगाई बढ़ती जाती है, छोटा सा कोई क्राइम करता है जेल चला जाता है, एंड इट्स ए टेस्टमेंट टू द वर्क बीइंग डन दैट द यूनाइटेड स्टेट्स हैज डन व्हाट इट्स डूइंग. This is not, don't think that nothing is happening. This is flawed. We have completely obliterated Mr. Narendra Modi's image. और हिंदुस्तान का हर रिटेल इन्वेस्टर जानता है कि माधवी बुच is corrupt and माधवी बुच is protecting Mr. Adani. But शुरुआत तो वहीं होगी ना, अदानी से शुरुआत होगी. तो अदानी को पकड़िए, अंदर डालिए, इंटेरोगेशन शुरू कीजिए और इन्वेस्टिगेशन शुरू कीजिए. और ये जो माधवी बुच ही हैं, जो इनके स्टॉक प्राइस को प्रोटेक्ट करती हैं, इनको वहां से हटाइए और क्रेडिबल व्यक्ति को वहां डालिए, क्योंकि अगर आप नहीं करेंगे तो हिंदुस्तान के जो रिटेल इन्वेस्टर्स हैं उनका जबरदस्त नुकसान होने वाला है. अदानी जी का अरेस्ट होना चाहिए, और जो भी इस मामले में इन्वॉल्व है उस पर कार्रवाई होनी चाहिए, चाहे वो कहीं का भी हो, कोई भी हो. जहां भी करप्शन है वहां पे इन्वेस्टिगेशन होनी चाहिए, मगर इन्वेस्टिगेशन अदानी जी से शुरू होगी, और जब तक अदानी जी अरेस्ट नहीं होंगे तब तक क्रेडिबल बात नहीं बनेगी. तो शुरुआत वहां से है. अदानी जी को अरेस्ट कीजिए, उनका इंटेरोगेशन कीजिए.
राष्ट्रपति बटन आप इस पुरस्कार को देने के लिए स्वयं गयाना आई है. इस स्पेशल जेस्चर्स के लिए
Welcome back. You've tuned in to Business Lunch on CNBC-TV18, and we still have our experts with who are Shaina Mukaddam as well as Vaishali Parekh to solve all your stock-related queries. Let's move on to the next one, and this query is on Deepak Nitrite. Now, Kishore is writing to us from Hyderabad, holding 643 shares of Deepak Nitrite. Bought at a price of rupees 3,000 per share, currently making a loss because the stock is trading at 2,680 rupees. Wants to know whether he should continue to hold or maybe just book out his losses from this. Shaina, what's your view on the fundamentals for Deepak Nitrite?
I would suggest he should book his losses because valuations are pretty expensive. If you see on a PE basis, let's take PE basis, it's 40 times, and the growth estimate in terms of earnings for the next 2 years is about 10%. What we saw in the second quarter, in fact, first full half, is that the numbers are stagnant in terms of revenue, profitability. On a consolidated basis, it's more or less flat. China, we have certain problems. Those things are not settled as of now. And now Europe also, we are seeing issues in terms of pickup. So phenols, actually, while they did well, their intermediates, Deepak Nitrates, had issues in the first half. I think these issues likely to continue, and because of expensive valuations, any underperformance sees the price come down. Most of the analysts after the second quarter have actually cut their earnings estimates for the next 2 years. So in such a scenario, I would suggest it's better to either book your loss, switch.
Okay, book your loss or switch in such a scenario. That's on the fundamentals. But on the technicals, Vaishali, Deepak Nitrite, because it's not done anything in the last 6 months, also YTD performance, when you look at that, does it play out to be an exciting bet to continue to hold on to and maybe an up move on the technical level?
If I'm seeing the long-term trend, it is still intact. 2,500 was the crucial support, and that's what we have seen, and the stock is attempting to give a bounce. So I would say at least wait for a resistance of 3,000 levels. This can bounce up to 3,000. At those levels, one can see, if you see resistance, please exit the stock. Else, if it sustains above that, we can expect this to go towards 3,200. So 2,500 would act as a stop loss, and I would expect a bounce coming to 3,000. So that's my view.
Okay, that's a view on Deepak Nitrite on the technicals as well. Let's move on to the next query that we have. Priyanka is writing to us from Tamil Nadu, holding 800 shares of IndusInd Bank, bought at a price of 1,350 rupees per share. Wants to know, whether she should book out her losses or continue to stay invested in this one. Vaishali, let me come to you first for this one. IndusInd Bank.
So I guess yesterday what we saw was quite a significant low that we witnessed, and right now we are seeing a bounce. I think at this level, no hurry to exit. If one needs to buy, this is a good level. But of course, my preference would lie more on the frontline banking stocks as compared to IndusInd. But if holding, continue holding now.
Okay, continue holding. That's on the technicals. Fundamentals, Shaina, what's the word on this one? Do you think IndusInd Bank someone should continue to hold this, the viewer, or they could maybe switch to someone, sell and switch to some other bank, private bank?
Yeah, I think you can switch, in my view, to some other private sector bank, larger banks, even private sector in its similar size. Federal Bank makes a better switch. Larger banks, of course, private sector look good at current levels. See, basically the best thing about the stock as of now, in my view, is the valuations. It's now, after the big price fall that it saw, is about just 1.3 times book, which in my view is not expensive for the size of IndusInd Bank. Having said that, I think everything is deteriorating. You have the asset quality deteriorate, which is likely to continue on for this next couple of quarters. The growth in terms of loan book that actually was expected to be more than 15%, 15 to 17%. Actually, we saw the last quarter came to about 13%. So there is a slowdown. The asset quality, as I mentioned, is deteriorating. So I would say that it is better to switch to some other bank which is performing, giving better numbers. While I don't see any major price correction from here, I see time-wise correction going forward over the next 6 months. So I would say a switch.
Okay, a switch coming in as a word from China for IndusInd Bank. Let's move on to the next query. Suresh is writing to us from Chennai, holding 500 shares of Bajaj Electricals at a price of 238 rupees per share. Currently, Bajaj Electricals trading at 751, so they're making a good amount of profit here. Wants to know the future prospect of his investment, and obviously, should they continue to hold this? How is it looking like for the long term? China?
After that huge fall that we saw in the stock, of course, on back of very poor numbers, we are seeing some stability, I think, in terms of valuations, in terms of profitability going forward. Balance sheet is quite strong. So I would say current levels you can continue to hold, keep a watch, but hold as of now.
Okay, keep a watch, but you can hold as of now. That's the word on the fundamentals and technicals. Vaishali, how is Bajaj Electricals looking like?
It's in an absolute downward trend, but only consolation is that on a weekly chart, 750 was the previous low. From there, it had bounced. So if 750 levels on closing basis, if we see a fall further on, then I would say there could be some more corrective move. Then I would ask to exit.
Okay, that's the word coming in on the technicals as well for Bajaj Electricals. Let's move on and talk about the next query. We have Lokesh, who's writing to us from Mumbai, holding 80 shares of Sula Vineyards at a price of 532 rupees per share. Wants to know whether to hold or exit at current levels. Bought at 532 and obviously currently making a loss. 395 is what the stock price is at. Last 6 months, a sharp fall that we've coming in. Vaishali, what is it looking like for Sula Vineyards? Should the viewer exit?
I guess wait for a bounce because again, deep correction taken place. I think the stock had witnessed a high at around 600 odd and now it's at 395. Deep oversold, so I think this can give a bounce. So better to exit at a better price of around 450 levels. That could at least reduce the loss.
Okay, that was the last query for today. So thank you so much, Vaishali, as well as Shaina, for joining in with us and solving all the viewer-related doubts and queries on stocks. But quick look at the market because that's not stopping its up move that we're seeing coming in. And as of now, all Nifty stocks are trading in the green. Look at the Nifty, 2.25% uptick there, 23,878, so 23,900 just around that corner. That's going to be interesting to watch out for. Top drags, top pullers coming in. So we have top pullers that are there: Reliance, ICICI Bank, SBI, Infosys among those names. So yes, surely pulling up the market. Reliance is holding on to good gains. But yes, that's the end of this edition of Your Stocks on CNBC TV18. Thank you so much for tuning in. And don't go anywhere because, we will be taking you all through the next 1 hour of trade as well. Do not forget, you can always write to us also in terms of your queries on the email ID that will be flashing on your screens.
बहुत बहुत धन्यवाद देता हूं। फ्रेंड्स, भारत और डोमिनिका दो डेमोक्रेसीज हैं। साथ साथ हम दोनों पूरे विश्व के लिए महिला सशक्तिकरण के भी रोल मॉडल है। दोनों ही देशों में महिला राष्ट्रपति हैं। भारतीय राष्ट्रपति माननीय मुर्मू जी जनजातीय समाज से आने वाली पहली राष्ट्रपति हैं। उसी तरह राष्ट्रपति बटन भी डोमिनिका की पहली इंडिजीनियस राष्ट्रपति है। आप दोनों विश्व की सभी महिलाओं के लिए प्रेरणा का स्रोत है। फ्रेंड्स, भारत और डोमिनिका के बीच सदियों पुराने ऐतिहासिक और सांस्कृतिक संबंध है। 19वीं सदी में कई भारतीयों ने डोमिनिका को अपना घर बनाया। उनके द्वारा रखी गई आधारशिला हमारे संबंधों को मजबूत नींव प्रदान करती है। उसी से प्रेरित होकर हम डोमिनिका के विकास कार्यों और कैपेसिटी बिल्डिंग में सक्रिय योगदान दे रहे हैं। भारत के लिए यह गहरे संतोष का विषय रहा है कि हम कोविड जैसी आपदा के समय डोमिनिका के लोगों की सहायता कर सके। कैरिकोम क्षेत्र में डोमिनिका हमारा बहुमूल्य पार्टनर है। आने वाले समय में हम हमारे संबंधों को नई ऊंचाइयों पर ले जाने के लिए प्रतिबद्ध हैं। आज दिए गए सम्मान से हमारी यह जिम्मेदारी और बढ़ जाती है। एक्सेलेंसी, एक बार फिर इस सम्मान के लिए मैं आपका बहुत बहुत धन्यवाद करता हूं।
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards?
Hang Seng is up almost 0.25%. We've seen a positive move coming in across the Asian market.
We are 100% compliant and respect FDI laws.
We should not break below the 23,179 number.
I believe some kind of optimism will play out in today's trading session, and maybe we see a buy on dips market.
Companies have to take a price hike anywhere between 8 to 10% in order to pass on the entire cost to the customers.
23,400 plus, but dithering.
Been holding Zepto since 50 rupees in our model portfolio, and we still like this space.
When they see both upside risk to the estimates as well as multiples for the company.
So after the cuts that we saw yesterday, today there's a gap up opening that we saw, and actually we built on to that.
You know, the company has come out with positive growth plans for up till 2030.
Deep shade of green that we are looking at today. 350 points higher on the Nifty.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Well, that is the day so far. It has been a good day with the market posting a 2% rally on the Nifty. I don't recall the last time we had a 2% plus move on the Nifty. I think you've got to go back at least 2 weeks, maybe more. Lots to talk about, and it doesn't look like it's giving up gains or is the mood of giving up any gains. We're coming to you from the CNBC-TV18 Motilal Oswal Studios. I'm Prashant. With me, my colleagues Nigel and Surabhi. Guys, hi, good afternoon.
And why not, right? The bulls haven't had this opportunity in such a long time. And I'll tell you what, I had a feeling. When I saw Nigel's red tie and, ironically my red attire as well, I think red is a good color, as they say, shubh color. It turned into green for the market.
Today, I think in the first 30 seconds of our morning hello, we said that there are plenty of cues stacked up against the bulls. But on these sort of days, there is a surprise that's in store. So pretty good to see some green on the screen, maybe factoring in some part of a better than expected performance from the BJP in the state elections outcome. But guys, besides the markets, I'm quite keyed up. You know why? Because India is fighting back. We playing against Australia, the test match, and earlier this morning I was quite depressed actually.
I didn't know whether it was a test match or a T20, the rate at which it was going.
Got knocked off at 150 runs, and just take a look at the boys come in there, bending their backs, that lovely Perth pitch. They're putting in a good effort. 38 runs for 4 wickets. I believe my boys have got this. 38 for 5.
He's
38
fired
for 5.
up.
There's one more gone. There's one more gone. You know, my director Shreya's...
Where is the feed?
Yeah, I mean, Shreya's telling me. My director told me there's another wicket down, so I'm even more pumped up now.
All right. Well, I think you'll get the Nifty commentary and the cricket commentary here, so all rolled into one. But it's a good day, and you know, one of those days where it looked like the market is going to have a good session. Despite, of course, I mean, the dollar being above the 107, the dollar index, that is, it just looked like, I mean, it had the makings of a good day, and it's turning out to be actually a pretty trending kind of a day, except the initial hiccup that we had. But even then, I mean, you know, after the market sold off from being up 150 early on in the first 30 minutes, there were those 60, 70 points, even at the day's lowest point. And then, of course, it's just been trending one way. And there's a 2% plus pop on the Nifty. Just 2 or 3 points before we go any further. So it is first up, I mean, let's just look at the levels here. The first big test for both the Nifty and, I mean, the hourly averages and all are all gone, of course. They've been taken out. And we'll most likely close above it. The 20-day for both the Nifty and the Bank Nifty come into focus. For the Nifty, that is 24,030. It's about 200 points away from where we are. For the Nifty Bank, that test is 51,298. And again, I mean, you know, it's much closer percentage-wise for the Nifty Bank as far as the distance to 20-day is concerned. So these are the two levels. I mean, if you're able to, in the next couple of sessions, provided tomorrow the election results are to the market's liking, I mean, it's possible that you have a little bit more steam out here before, you know, doubts start to emerge once again. Now, PSU Bank's real estate, IT, sectorally, these are the three areas where you're seeing maximum gains. PSU Bank index is up 3.5%. Mid caps and small caps, they are actually lagging a little bit. It's not as if they're down or anything. 1% gains, 1% plus gains. But it's really Nifty and the Nifty by large caps, essentially, which are really firing out there. Surbhi.
Absolutely. I mean, it's not a bad screen at all, considering the kind of gainers we're seeing, because today you can't complain in terms of sectors. It's a very wide move, cutting across sectoral lines, IT, you know, PSU stocks, PSU banks, non-PSU banks. Literally, even consumer, for that matter. Even the FMCG index is actually nicely in green territory. So nothing to complain. In terms of stock-specific action, just to take a few names, if you're talking real estate, then stocks like Godrej Properties, Sobha, they're having a pretty good run. Info Edge has been reacting very well to that Goldman Sachs report. Note, 6.5% up on Info Edge. So lots of gainers out there. A stock like NLC India, which won a coal block in the recent auctions that just got concluded. That's up after 8%. It's up another 4% today. And okay, let's also wrap it up with the Adani group of stocks. It's not bad for the Adani group because a lot of them have recovered from the lower levels of the morning, down about 0.5%, 1%. The one that's still deep in negative territory is actually Adani Green. That's still sort of down 7-8%. But otherwise, it's a good-looking screen, you know, and the big boys. They are the ones that are really leading from the front today.
Talking about the big boys, just take a look at the tech index. The IT index is up more than 2%. Yeah. You know, it's got a lot going for it. And if you pull up in this month, we're talking about the Nifty being down 1.5%, 2%. You know, it was down 2.5% at the start of today's trading session. Just take a look at the divergence. That's the last 1 month chart. The Nifty IT index is doing an outperformance to the tune of close to around 7% in comparison to what the Nifty has done. Because the Nifty is down close to 4%, the IT index is up. And the few factors that are playing out here, the first couple of quarters haven't been bad. You know, the second half of the year is expected to be better. And Trump is good for tech. You know, and that's why the bulls are sticking on to tech. The growth rate should pick up from here on. You'll have the rupee, you know, the dollar index that will be stronger, which means the rupee will be relatively weaker. And that's been good for them, net. You know, that's one. The other factor is there's going to be tax cuts that are likely to come about in the United States. It'll help spending and spending on services. You know, we have been seeing a lot of spending on equipment. So put all that together, just pull up that chart once again. If you pull up actually a 1-year chart, you'll see that, you know, they were moving pretty much okay. And then in the last 1 month or so, suddenly the IT space, the Nifty IT index, that's taken off. It's a divergent move in comparison to what the Nifty has done. Just if you could, you know, pull up the last 1-year chart or so, IT index has been the relative outperformer in the last 45 days or thereabouts. Well, let's get in Mitesh Thakur, who joins us. Hi, Mitesh. What are you making of today's bounce? Clearly, the markets are sensing that the BJP is going to come out on top in the state elections, which will be great news from an equity market perspective. Your view, what do you do right now? It's tricky, right? You've got a good bounce, take some money off the table or ride it. I'll tell you why. The Nifty Bank went to that 20 DMA intraday and then it quickly pulled back a quick 200 points or thereabouts. Mitesh, I think you'll have to unmute yourself. We'll want to hear you.
Sorry. So I think earlier in the day I was talking about the fact that one should be leaning towards banks and financials, and I think the financials were the sector which kind of started the movement on the upside. Having said that, I think also what has happened post that is that the IT stocks have joined the up move. Now, for the time being, the Nifty is very close to the supply pivot of 24,000 zone. So, maybe you will see another 80-90 points and you might see some stoppage over there. But the good thing is that most of the indicators have started turning on the upside for the Nifty and the Nifty Bank, which means that despite the fact that there could be some volatility at slightly higher levels, I think the bounce back should extend early into the next week. So I would say positive in that sense. Right now, also, I have buy calls on Infosys. Infy is something which has managed to get past the earlier swing high of 1872 odd levels. So just keep a stop around that. Look for a target of around 1945, 1950 on the upside. And the second call which I have is a buy on Maruti, which made a false breakdown on the downside is recovering. So that's a buy with a stop at about 10,900 for targets of 11,500.
Okay. All right, got that. Mitesh, thanks very much. We'll come back to you for some more strategies in a bit. Let's get the conversation going and look at some of the interesting stocks. Like I pointed out earlier as well, Info Edge is really taking note of some commentary that's come in from Goldman Sachs. Now, Goldman Sachs is suddenly gone extremely bullish on the stock. From a sell, it's an outright buy. And they have they've also increased their price target by a fair bit. Let's go across to Vamakshi to understand what's caused this change in the point of view. Vamakshi, tell us more.
Well, it would be, yes, it's a massive upgrade coming in from Goldman Sachs for Info Edge. They've gone ahead and changed their rating on this counter from sell to buy. They've also upped their target price to 8,600 from 5,700 rupees per share earlier. They say that the demand environment for India's IT sector is looking much better, and resultantly they're expecting the recruitment segment's revenue to grow at a much faster pace of 16% CAGR from FY25 to 28 as compared to a slower pace of almost 8% that they're expecting from FY23 to 25. As far as their other segments are concerned, they're expecting 20% plus robust growth in 99 acres, and out here, in fact, they believe that because of scale as well as stable competitive intensity, 99 acres is expected to break even in calendar year 25. They're also bullish on Zomato, which accounts for nearly 1/3 of their market cap, and they see upside risk to both their estimates as well as multiples for the company. So given that rationale, Goldman Sachs is quite bullish on Info Edge, and resultantly the stock is trading higher.
Okay, all right, got it. Thanks very much for that, Vamakshi. Let's get to our first guest on the show. Prakash Diwan is joining us as always. It's a Friday afternoon. Prakash, good to have you back on. That's a striking shade of blue, but no blues on the street today because the bulls are going with green, right? Okay, let's start with Info Edge. What do you think of the stock? The story is well known, but the question is how much more on the price? And do you expect, apart from their investments in a lot of these new age businesses, do you think the base business itself, Naukri and Jeevan Sathi, etc., do you see better times ahead there too?
Good afternoon, Surbhi. So yeah, thanks for adding that red to the green screen while I did my bit with the blue. But I think Info Edge is a stock that keeps getting revisited in terms of its potential to kind of continue growing and some optionality level disrupt the newer markets or segments that it's trying to get into. My sense is the bullishness just comes to mind because you have the base business of Naukri and Zomato, both, and of course Blinkit along with that Zomato piece. Which imagine if everything starts coming together in terms of the convergence of firing on all cylinders, the ability for this company to invest into areas which have still not grown, given the deepness of its resources that will come about, is what is very attractive. But whether the stock gets into a new range in terms of pricing, I think it's a very difficult. It's still like a startup aggregator. I would believe that it will behave in a bit of a volatile, erratic way for some time. But you would buy this on dips, not on days like this when somebody's turned out with a report and the market's celebrating that. But you will get entry levels, but keep it for the long term, and it will keep on surprising you with these kind of sporadic moves once in a while. But yes, the overall direction is extremely positive, so there's no doubt about that.
Okay, all right. Prakash, stay with us. The other stock we want to discuss is Praj Industries. They put out a release earlier today, and they say that they are going to be focusing on various plans. And the bottom line is the revenues are going to triple by 2030. Vamakshi joins us to fill us in with those details. And then we go back to Prakash for a call. Vamakshi, take it away.
Well, absolutely. For Praj, several new opportunities are emerging. The company says that it is eyeing opportunities in sectors like sustainable aviation fuel, biopolymers, as well as energy transition and climate actions. Overall, they're pegging the global investments to be quite large as well. The energy majors are expected to invest somewhere around 25 lakh crores by 2030 in the clean energy sector. Traditional oil and gas investments are also likely to continue to the tune of almost 21 lakh crores in the next 10 years. But what does all of this mean for Praj? The company says that they see significant demand for modularization solutions for setting up plants. And in order to cater to this significant demand, they're setting up a plant in Mangalore, Karnataka with an investment of almost 400 crores. And they're expecting to generate a revenue anywhere between 2,000 to 2,500 crores per annum at optimum utilization from this particular plant. They also say that the opportunity in sustainable aviation fuel is also quite large, given that India has set the target of blending 1% by 2027 and 2% by 2028. The European Union as well as USA too have very ambitious targets of almost 6% and 10% respectively. Additionally, given the kind of growth and the demand that is coming through for Praj Industries, they're expecting revenue for the company to triple by 2030 from 3,400 crores currently to 10,000 crores. They're also expecting the export share to rise from 29% to 50%, which also aids the margins for the company. So overall, it's a very bullish outlook coming in from the management, and resultantly, the stock is up in trade.
Okay, all right. Thanks a lot for that, Vamakshi. Actually, at the high point of the day, tells you how the street has read this very, very positively. Prakash, your view at around $750?
So if you have a horizon to wait till 2030, Nigel, when the company is very clearly articulated the vision to triple its revenue and at very decent margins. Remember, this growth in revenue is not going to come at the same margins, and that's been an issue with this company. And you know what I like about this new announcement that they made? They have finally accepted the fact that they'll have to diversify into newer geographies as well to service the growing market. So, for example, the CBM market, the compressed biogas market, that is CBG market, is developing so fast in the south. And you have unlisted players like GPS and all, which are going ahead and expanding so much. There's no reason why Praj will not be able to get a piece of that build up. So I think the fact that they have decided to allocate capital and set up a new unit which services a newer geography and go beyond just ethanol, that's a very promising bet. We spoke about this, I don't know if you recall, but I think Surbi and I, we had a brief chat on Praj once when it was about 500 odd a few months back. So it's done so well. But I believe that it will continue to do well in the long term. And now there's more visibility of what it's likely to do after this capital allocation we made. So but then of course a PE multiple of 44, 45 trailing basis, and on a PEG basis probably it could be about 33 is something which you can live with. But yes, you'll have to be ready to keep it for a longer term to actually reap the benefits of what's happening.
I remember the conversation on Praj. I remember the one on M&M. And I also remember the one on Nalco. That was the Diwali Muhurat day. And yesterday, Nigel was talking about, aluminum shortage and how intrinsically there's positivity there. But apart from all the geopolitical factors.
Actually, to be fair, Nigel was talking about it before also.
Oh, Nigel was talking about it before. That's true.
I'll tell you what. Actually, what happened was we had the management, Mr. Patra, who joined us. And he's retired now. It was his last interview before he gave up the reins at Nalco. And he clearly told it out, because there are various ways of tracking the alumina prices, and he spelled it out. There's a shortage now, and there will be a shortage. And I think the stock was 210 or 215 at that point of time. When the management says that it's going to be at that kind of surge what you're seeing. And then global majors as well, irrespective of how their numbers were, all of them had one common point, that alumina is in shortage. Only one way to play it, that is Nalco. And obviously Prakash told us on Diwali day as well, rocket time, it's a rocket.
Okay, all right. So lots of investment ideas and calls there. But Prakash, let me ask you about a sector that's kind of down in the dumps right now, consumer. And the reason I ask this question is that they say buy great businesses when the going is not good, etc., etc. These are companies flush with cash. They have no problem, no corporate governance issues, marquee names, high pedigree, all of that. But there's no growth. Would you stick your neck out here and buy anything?
So, I know it's a tough one, but given the fact that there are some plays where you could get into quasi-consumer names and not just necessarily pure FMCG conventional plays, and I'm referring to ITC, for example. Now, there is some very clear upside from the hotel business that's kind of getting woven in, or is yet to get woven in, but has the potential to be brought in. So the consumer business is doing fairly okay. I'm not saying it's roaring in terms of growth and volumes and pricing and all, but it's at least much easier to sustain that kind of a tepid growth as compared to some of the other majors who could get a knock, while the hotel business kind of gives you that upside potential in the next 6 months or so. So I would, if I had to allocate money to FMCG, it could be an ITC at this point in time. Apart from that, the Britannias and Nestle's of the world would probably have to wait for a bit longer.
Prakash, any thoughts on Castrol? I mean, I was just noticing it was one of those fancy names which actually it was not a fancy name. It became fancy for a brief while, went up to about almost 300. Then it fell from 300 to about 185. It's coming up a little bit, 5-6%. But any thoughts? Do you own it? Have you looked at it?
Oh, we did. Try to understand this, and I know what you're referring to, Prashant. This was this, rara days of data centers getting to use lubricants to cool themselves down and all. But the level of involvement or engagement with that area of work is very limited. It really doesn't impact the company. What's working for the company is a lot of new, potentially new products that it's launching, which could help it de-risk from the ICE market, which is where the stock has not done well. And they are in a very comfortable cash position. You look at how they've been utilizing it to just pay off dividends. So at some point, my sense is there is a consolidation that will happen in this industry. And once that happens, you'll probably be left with just 2 or 3 big names. There are already very few names, but then these names will get bigger, and that's the upside in Castrol. But apart from that, I don't think organically there's anything which really kind of gets very exciting from a price volume action at this levels.
Okay, all right. Prakash, we'll leave it there. Thank you very much for joining us. Have a good weekend. We'll catch up again next week. Thank you. All right, we'll take a quick commercial break here. We're going to come back. Market's up 520 points, so it's a solid going, 23,860 plus. We have Aman Chauhan from Abacus Asset Management on the other side. Stay tuned.
A head start to your trading day. Get ready to profit. Get ready for business with Bajaj at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube.
Investing.
Well, the market's at the high point of the day. We're gunning for the 24,000 odd mark. And I'll tell you what, India's picked up the 6th wicket. There was an appeal out there, but our boys have gone in there and knocked off another Australian batsman. So, we're, I think by stumps today, India will actually be in a dominant position, getting bowled out for 150 runs and still being in a dominant position. I mean, we have to flash the Nifty and the Nifty Bank, but feeling good, guys. Market's at the high point of the day. India's doing well as well.
Okay. All right. All right. Well, Aman Chauhan is now with us. He's fund manager at Abacus Asset Managers. Aman, good to have you with us here. Good afternoon. Thanks very much. Markets are, after a long time, showing some green across the board. So the question simply is the bulk of the fall behind us? And are we now, I mean, I know it's just one day, it's tough to say, and it's going to be tricky and all of that, but are we starting maybe the process of repair? It could be slow. Today it's fast and furious, but are we starting the process of repair from here on? What's your sense?
Very difficult to say. Today seems more like a bounce back. We have seen a sharp fall and more of short covering that has come in today. Plus, there could be some buying also because we have seen very sharp cut in the prices. But with just Maharashtra elections, the outcome just next day, and with the global uncertainty still there, I'm not sure whether we can call it that the bulk of the fall is behind us.
Hi, Aman. Aman, we'll get to stock sectors that you like, but what about what about the clients? How are they behaving? Money is coming in. Have you all deployed almost all the money you all have, or are you all sitting on some cash? Because I think the last time around you indicated that you were sitting on some cushion. So have you all deployed, or are you still sitting on that cushion?
Money is still coming in, though the flow has reduced a bit over the last 2 months or so, but it's still positive. And we would be having, say, high single-digit cash. It's not, cash is yet to be deployed. It's not that we are taking a cash call based on the market view. We don't do that. It's more of incremental money that has come in, waiting to get deployed.
So, hi Aman, great to have you on. I was going through your note, the latest fact sheet November, and the commentary there, where I guess you folks still feel that despite the correction, valuations in some pockets are still a little expensive. But I think you still like the industrials theme, you like select financials. So just run us through the thought process right now. And within industrials, what are the niche areas that you would be comfortable buying now, even in this volatile market?
So what has happened in this market is stocks which have done very well, where valuations are north of 50p, Now they've corrected and they are now maybe 35, 40p. Still high for an entry P, right? So 30, 35p on the absolute number might still be justified, but not to enter. So that's what we are waiting for. It's something that we like when it's still corrected, but not corrected enough for us to look at it. So maybe a 20, 25p would be more appropriate to get into. And that is what we mentioned in our newsletter also, that yes, there has been a correction, but not enough to justify some of the pockets where we feel that stocks are good, but the valuations are not. On the industrials front, we like cap goods, we like engineering companies, we have decent exposure in them. We are also increasing our exposure into EPC companies, both civil as well as industrial infra companies. So that's broadly where bulk of our interest lies in that sector.
Aman, as many who we've spoken with over the last, since the election in the US, generally the view has been that 25 will be a little tricky for emerging markets broadly. So it's not going to be as easy. And the backdrop is, of course, very strong returns over the last couple of years for mid and small caps here in India. Do you think broadly, even if markets were to come back, I mean, the same sectors which have done well will return, or there will be some rotation? I mean, banks and financials, for example, people have been talking about for a long time. NBFCs is another space which has been beaten down, out of shape. Of course, with a lot of regulatory action, etc. What's your sense?
Definitely there will be sector rotations. Sectors that will continue to deliver earnings growth will continue to perform, right? So wherever we see maximum corrections, where sectors where there has been earnings disappointment or where earnings growth has not picked up. So the narrative in the market right now is monsoons have been good, rural demand has been soft, but now it's started to pick up. If that narrative holds true, then next 12 months, rural dependent stocks or sectors will do well. If dollar has to appreciate because of Trump, then obviously IT and pharma will do well. So these are the sectors that have not been in the limelight in the recent past. So if what the consensus view is, if that is to happen, then some of these sectors will do well at the expense of, say, PSU, which was the best performing sector over the last 12 months, or say a defense sector.
Aman, which is the Trump trade? I've been hearing so much about it. People say he's going to lay pipes. Some people are talking about the Bitcoin, and Bitcoin clearly has done 30-35%, just in the last 25 days or so. Then there's tech. So which is the actual Trump trade? Everything seems to be running according to Trump.
For us, the obvious Trump trade would be that the dependence on China, they would like to reduce it, and that throws up export opportunities for countries like India. So that's what, for us, what the trade is, that sectors where India can increase exports, increase its global market share, and that will get accelerated because of Trump, because he'll put in some duties on China, he'll put in some duties on some other countries. So that is something which is interesting. Any Indian companies which have manufacturing facilities in the US or in that region also stands to benefit, because the way we are doing it in India, that we want to reduce our import dependence and be self-reliant, the US also would like to do that. So anybody having a manufacturing there, it will tend to benefit. So for us, that's what it is. Dollar will appreciate, there will be duties. This is all which is known. The details of that will determine which specific sector will do it. But the broader theme remains this, that Trump would like to see more of manufacturing, more of import dependence, reducing in US, and that's what the we can say the big picture trade for Trump is.
We are sounding quite excited, but that dollar index is not stopping. Now it's at around 107.2, and if in case you get a positive outcome from the state elections that the street is going into this weekend, that the BJP is going to come out on top, I think bulk of that state election news could be factored in at around 24,000 odd. And the dollar index needs to cool off to see further follow-through buying from here on as well. So, it's been a good session, but carrying positions will be a little tricky.
But look at it. I mean, the market is
That's
up.
the rocket.
The Nifty is up 600 points.
Yes.
Let's just have the Nifty up. It's actually from the time that we started. We started at 230. I'll tell you where we were at. We were at 23,850. We've added 100 points since that point, since 230, since when we started. So, this is quite incredible. So we basically were trading with a 2% gain, and that is about 2.5% coming through right now. So the institutional flow numbers later today will be very interesting because FIs were short big time. Is it just largely all of that getting covered
and is there some cash buying impetus as well? That'll tell us, and that'll be interesting in that sense. Anything else, Aman, that you're kind of looking at, interested in, beaten down names, sectors where you're looking for opportunities?
Financial is something that we're still very excited upon. More of private banks versus PSU banks, and within that, the larger private banks is something that is looking very exciting. Chemicals also as a sector where, though the recovery is delayed, but there are clear signs of bottoming out. So that is also something which is interesting. This can also be a good export opportunity for us. If China's exports were to reduce, then countries like India tend to benefit on the chemicals front. So these two sectors are something that are looking interesting to us, where we are working towards getting new ideas, getting something where we can deploy further capital.
Aman, also in most of your strategies, commodities find a reasonably big positioning, right? Most of the strategies are either 8 to 10%, some of them, in terms of contribution from commodities. So what part of it are you bullish on? Is it, metals? Is it oil and gas? Something else? Just take us through the thought process there.
So metals would be high single-digit exposure for us across our strategies. It is predominantly ferrous metals, and there's no oil and gas in that. And say we like stainless steel as a sector. We have an aluminium company in our portfolio. We have ferrous steel also in our portfolio. So it's predominantly towards the metal basket than oil and gas.
Steel, just to sort of take up a question again, because Nigel's been telling us about this whole, business of too much of steel in China, and they're going out and dumping in all markets. And over here, obviously, steelmakers are crying out for protection. So, how do you see this? Irrespective, do you see better spreads ahead? Why the bullish call on steel?
So the bullish call on steel is that the way there's stimulus happening in China, there is a fairly high chance that the prices of metals will go up. So we understand there's overcapacity in China, and that is the case with not just metal, with most of the other products also. But they would also like to sustain a higher price so that even at underutilized capacity, they can make some money, right, instead of burning cash. So that's broadly what the call is, that the way China is focusing its economy, they would also like volumes to pick up, if not at least profitability to pick up for the sector. And that's where we feel that the commodity prices can further move up, predominantly based on the moves by China.
The ferrous space, it'll be what? The long guys or the flat guys? I mean, which one is it? And you mentioned an aluminium player. Are you also playing the ferrochrome theme?
Not ferrochrome. So we have the largest metals company in our portfolio. We have the largest stainless steel company in our portfolio. We have some normal steel companies also in our portfolio. It's a combination of these, but not mineral companies or ferrous companies.
Okay, and the large metal conglomerate is the one that's going through restructuring, is going through a corporate action in the coming months. You'll have that one as well?
Yeah, so we have the larger metal companies or commodity companies in the portfolio.
Okay, all right, Aman, always good speaking to you. Well, before we let you go, the other big sector that's got a lot of attention has been the likes of Zomato, Swiggy, Zepto. Clearly there is... all of us have been using all of these apps, and it's making life much better. We don't mind paying the little more to have some comfort. Your view on this theme, and have you played it?
We like these companies. We like the business. It's something which is sustainable. It is something which is high growth, which is going to go on. But the valuation is something that is still not comforting to us. So it's not part of the portfolio. We continue to like them, but yet to own them.
All right, Aman, we leave it there. Thank you very much for joining us. Appreciate you taking out the time and being with us here. Have a good weekend. Actually, we were talking about the quick commerce players, and Zepto is, of course, the one which has raised $350 million in what is the largest 100% domestic fundraise for a private startup in Indian history. The quick commerce delivery platform co-founder Adit Palicha spoke with my colleague Shireen Ban on the business and why quick commerce should be celebrated. Listen in.
I bet you were looking at the Swiggy IPO very, very closely. What was going on in your head as you saw the listing, which got off to a slow start and then sort of shot through the roof on day one?
Yeah, I think it's great. It's huge kudos to, what Harsha and the team have pulled off. And I think it's great for the ecosystem. I mean, I think we should, one of the last things I mentioned, Shireen, is that we should be celebrating this. This is Indian technology, like quick commerce. And, Swiggy's IPO, I think it's fair to say, largely powered by excitement about quick commerce, right? Zomato's performance, largely powered by excitement in quick commerce. I think that's not a controversial thing to say. It's a consensus view. We should be celebrating quick commerce. This is good for the country. This is Indian technology, Indian innovation. This hasn't worked anywhere else in the world. And it's real infrastructure for ordinary people. Like, this is not for like the top 0.1% of India, right? These are people who now realize the scale they were getting to. This is impacting ordinary people's lives at scale and now going from metro cities to beyond. But the way that I look at it is we should be celebrating the fact that today, because of Indian infrastructure, Indian technology, there's a mom in Noida who's able to take a part-time job because her life has become easier because of quick commerce. It's exactly like setting up a metro station, right? So, we look at this as Indian technology, Indian innovation. Nobody else in the world has been able to do that.
Have you been able to convince the government, though?
Well, I think I think the government is progressive. They support, value creation and job creation at scale, right? And they've been supportive so far. And we are, honestly in a position where we think of them as a partner. We're always open to feedback. And I mentioned this last time as well to you, right? That even with, let's say, gig workers, right? We are, honest to God, good faith, open to feedback and dialogue on how we can improve. Whether it's with gig workers, can we do more? Today we give insurance, right? 1 lakh cover plus 10 lakhs of term insurance for free. Whether it's with, food compliance across the board. So I think they've been helpful. But, the last thing I'll say is, next time, we're talking to, foreigners, next time there's a foreign, leader in this country, we should say, hey, not only do we have UPI, Indian innovation there, but in India, you can tap a button and your daily essentials will come to you in 10 minutes. That's amazing.
So you're saying quick commerce is like the UPI moment for India?
No, it's world-class infrastructure built in India with Indian technology. And it's making real people, ordinary people, their lives easier every day, and it's improving productivity and the quality of life for tens of millions of people. By Indians. It's not some rip-off of, some American model or some, Chinese model. It is like only in India you get this stuff, which is awesome.
Made in India, right, and made for India for now.
Absolutely. No, I mean, we are going to be in India for these next couple of decades. So.
Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Because of the information that has been provided to us by partner nations, I have directed agencies within the Ministry of Transport and the Ministry of Energy and Petroleum to immediately cancel the ongoing procurement process for JKI expansion public-private partnership transaction, as well as the recently concluded Ketrago transmission in public partnership contract.
Welcome back. It looks like the Bulls want to go with a flourish. India is doing well as well in the test match. 7 wickets are down as we speak. So both going, step by step together. The Bulls charging ahead. The bowlers as well doing well for India. And I'll tell you what, Adani Enterprises, just pull up the intraday chart of this one. That stock, in fact, from the lows of the day, it's seen a massive recovery. And Adani ports as well. So both of them should come up for you on the screen. But the reason that the markets are holding strong is because the pillars of the market are doing well. What are they? The Nifty Bank is moving towards that 20 DMA mark that we are talking about. It defended the 200 DMA yesterday. Now it's moved very swiftly to around the 20 DMA. So it's around 100 points away from there. Tech is up nearly around 2.5%, which is great. And the other relative underperformer of the recent past have been the Reliance stock. And that's up 3.5%. I think bulk of the contribution, bulk of today's gains is because of big boy Reliance Industries, which is trying to find its form, up 3.5%. Middesh is back with us. Middesh, what are the trading calls you have for us? We're on the verge of moving towards 24,000. Wow, who would have thought?
So, Nigel, I think I have revised the upside possibility to about 24,250. And while, the market is under no obligation to possibly follow what we recommend, but I think it does look like that this bounce back still has strength. So while there could be volatility with the numbers coming out, the election numbers coming out tomorrow, I think broadly the short-term texture has changed from sell and rallies to buy and decline. I think that's the positive thing which has happened, the way the charts are shaping up. And on the stock side, I have a BTST on Coal India with a stop at about 410 for targets of around 420, 421. And the other one is a BTST, which I would take on X side if it crosses 425, 426. So buy above 426, keep a 3-4 point kind of a stop loss, look for a 435 as a target.
Okay, all right, got that, Mitesh. Thank you very much for the trading calls today and through the week. You have a good weekend and we will see you again soon. Let's move on. One more stock that's been a really strong pillar for the market today is actually Reliance Industries. It's seen a steady 3% up move throughout the day. It's retaining a bulk of those gains as well. And it's after a long time that Reliance is seeing a good day. A couple of positive brokerage notes came in. JP Morgan and Morgan Stanley are sounding more upbeat on the stock. Let's go across to Sudarshan to figure out why. Sudarshan, what's the rationale?
So before I go to those two notes, talking about the stock move, today's stock move, stock is up almost 4% and is contributing nearly 70 points to Nifty's gains, and it's set to post biggest single day gain in nearly 5 months. Now coming to those two notes, JP Morgan and Morgan Stanley both have overweight call in the stock. JP Morgan has a target price of $1,468 per share and Morgan Stanley has a target of $1,662 per share, implying upside up to 30% from current levels. So what does JP Morgan say? It says one of the drivers of recent underperformance has been weak refining margin, and as per JP Morgan, that has now started reversing. Another reason as per JP Morgan is poor retail top-line growth is difficult to anticipate, but expectations have now compressed, and post the stock correction, implied valuations for the retail businesses are 25 times FY26 estimated EBITDA, and now the valuations are below historical levels, and it's below peer retailers as well. And as far as talking about the modest near-term catalyst, one, they are saying that start of the solar panel plants also can be the near-term catalyst too. Morgan Stanley says, like JP Morgan, it says refining margins are starting to recover after 2 tough quarters, and free cash flow engine should pick up pace as 0.6 million barrel per day of refining capacity shuts in 2025 globally. So considering all these factors, both JP Morgan and Morgan Stanley have positive outlook on Reliance Industries.
You know, Sudarshan, before you started this update, you told us just, before that, I want to tell you something. I thought you were going to give me an analysis on the match as well. I'm wondering whether, do you think that we can knock them off today? I think we have still 10 overs. Do you think India can knock off Australia before the end of today?
So we still have almost 15 overs to go, and I think it won't be that tough to take 3 wickets.
Amazing. I love that. That's why I went in with 10. I was thinking of going with 12, but I know Sud will have the exact number, so 15. Let's hope, Sud. Chuck the India. Survey.
Okay, all right, guys. Yes, the cricketing action is on, but for the time being, coming back to a couple of stocks and companies in focus. The next one on our radar is actually matrimony.com. Now, Matrimony is looking to matching the right candidate with the right job as well. The company has made a foray into the online job search market with its website, manyjobs.com. Our colleague Jude Sanis actually caught up with the company's CEO, Murugavel Janki Raman, to understand how this new business will play out, how it will contribute to the company's P&L, and what's the reason behind getting into it in the first place.
I don't know whether you recall or not, we had another job portal a long time back, okay, which was shut down. Post Lehman Brothers crisis, we had to focus on only few verticals. That point we let go of many verticals. One of the vertical was job vertical. This time we have not launched yet another job portal because the India dynamics have changed. You know, the matrimony.com is almost 2 decades in the matchmaking space. We understand the platform business very well. So we saw an opportunity in the grey collar job portion. We have not launched yet another job portal. So what is many jobs that you have launched is an exclusive job portal for the grey collar workforce, which constitutes almost 45% of the workforce in India. You look at the way that the dynamics are getting changed in India, 20 years ago things were different. The lack of job openings, today is not the case. Today a lot of jobs are available. The challenge is that, matching the exclusive portal to bridge the gap of the grey collar job portal is something where we see an opportunity.
Okay.
Whether obviously Naukri is there, other job portals are there. There are job portal for all the job openings. So we thought there's an opportunity to address the exclusive, the frontline and entry-level job openings. That's why the many jobs attempt to do.
Right. So when you say grey collar jobs, you're specifically referring to frontline jobs, entry-level jobs. If you could just elaborate on exactly what kind of demographic you are looking at in terms of job searchers and how this will essentially be a differentiator for you, I would assume.
Yeah. So many job is an exclusive job portal for fresh, entry-level and the freshers. That's what this attempt to do. So what is that entry level and the frontline job means? Like you're talking to BPOs, customer service, sales, retail jobs, healthcare jobs. That's where we see that a good opportunity.
I have stated in the past and now reiterate today that in the face of undisputed evidence or credible information on corruption, I will not hesitate to take decisive action. Accordingly, I now direct, in furtherance of the principles enshrined in Article 10 of the Constitution on transparency and accountability, and based on new information provided by investigative agencies and partner nations, that the procuring agencies within the Ministry of Transport and the Ministry of Energy and Petroleum immediately cancel the ongoing procurement process for the JKIA expansion public-private partnership transaction.
Welcome back. Well, a few stocks in the broader markets as well are doing well. So actually the mid-cap index today has done a relative underperformance, but you have Jubilant Food that's at the high point of the day. NCC as well has bounced back. So I think a couple of these stocks that were Astis up 3.5%. Now they've gone up close to around 4.5% or thereabouts. Let's get in Hemang Jani, who joins us on the show. Hi Hemang, we have discussed quite a few stocks, but I wanted your view on Supriya Life. You know, I recall the stock had a fantastic listing. Everyone was talking a big opportunity. It, went up. And from the highs, the stock halved actually. It went below 300 rupees. But off late, they've been getting their act together. As we speak, Supriya Life is up more than 10%. What's your view at around this 800 levels?
So good afternoon, Nigel. Thanks for having me. I think CDMO as a theme is catching up, more so, around this US elections and Trump's victory. And if you look at this company, they are doing pretty well. And last quarter, they have, in the con call given a guidance of about 22-23% in terms of revenue growth and about 39% in terms of margins. And if things play out well in US, the CDMO, space, then there can be some positive surprise in terms of the order inflow. So I think, you have a bunch of companies in the space, Laurus, DVs, and in the small cap category, this one fits in. So we do have a positive view. We think that, this is a good theme, and we have a price target of about 22%, upside from current levels.
Okay, so still looking at more upsides on Laurus. Got that, Hemang. By the way, the market's continuing to move higher, 23,900. I mean, it's turned out to be a really, really good afternoon. And look at the way the large cap stocks are moving. SBI is up 4.5%. TCS is up over 4%. Titan is up over 4%. It'll be really interesting to note the FPI number today. Let's see. Finally, we've moved from the sell to the buy side, or maybe at least the selling has come down. It'll be an interesting trend to track for sure. Big moves coming through on some of these large caps. Hemang, let's actually take up SBI. The stock reacted quite negatively yesterday, knee-jerk reaction to a lot of the Adani headlines. But in the large cap banking space, how would you rate and rank it? I mean, would you go in for an SBI or say an HDFC, ICICI? What's the order?
SBI post numbers had corrected sharply yesterday also when this Adani news came in. There was a knee-jerk reaction, but I think when you look at the numbers and the performance, not just this quarter but last about 3 or 4 quarters, it's been pretty steady mover. More so the guidance has been very good, about 14-15% kind of a loan growth. And most of the parameters it's ticking the right boxes. So SBI will be clearly the top of the list, and of course ICICI Bank and Axis both I think delivered a good set of numbers. And more so, if you have seen, banking as a sector is kind of outperforming for the last, let's say, about 2 months or so, and for the right reasons. So I would certainly go with them. In the smaller bank, I think Federal Bank really stood out for us. So I think these are some of the names that we go with.
Okay, all right. Any view on Jubilant Foodworks?
So Jubilant, Nigel, the numbers were pretty decent. More part of that was because of the delivery cost waiver, but there is a possibility of some strategic investor coming in, and which is what is actually creating some price action in the stock. And within the consumption basket, when most companies were struggling, Jubilant actually delivered good set of numbers.
Okay, all right, got it. Hemang, stay on. We'll take some final thoughts and stock ideas with you. In the meantime, another set of views coming in on the market. Hear out what Gautam Duggar of Motilal Oswal had to say on the Q2 earnings season that wrapped up, the trajectory ahead, and his specific calls on areas like cement as well as Zomato.
If you look at the next 5 or 10 years, I think it's quite probable that at an industry level itself, we might clock a growth rate CAGR of 20% over 10 years. Of course, today 20% for this segment may look less because they are growing at 40-50%. But if you stretch that out over a 10-year period, at a top line basis for the industry as a whole put together, 20% is a very good number. And as of now, there are only 2 or 3 players with size. So definitely there are going to be a lot of winners in the spaces. Difficult to say who will be the biggest winner. So it makes sense in our view at least to put a bet on 2-3 names. As far as our own model portfolio is concerned, we've been holding Zomato and continue to stay positive on it. No, we don't like cement as a space. We don't have any exposure to cement stocks in the model portfolio. The numbers are very bad, actually. And I think the numbers are going to look weak over the next 2 quarters, too. This was incidentally the 5th consecutive quarter of a double-digit profit decline. As we move forward, March typically is the best quarter for the cement sector. We will see how things pan out by then. Definitely not at the moment. We don't have any exposure to cement stock. We are actually playing industrials theme through capital goods. We are playing industrials theme through real estate and all.
Okay, all right. That was Gautam. Hemang, finally, tossing it to you as the week wraps up. Buying ideas, anything fresh?
I think real estate as a pack should do well. I think DLF and Prestige are the two names that we like. Numbers were very good. Concall's management was sounding pretty good, both on the residential side as well as DLF on the lease rental side. And Prestige also had corrected quite a bit despite decent set of numbers. So I think this being a high beta sector, we think that the risk reward at current level is extremely good.
All right, you want to give us any one pick? Hemang, we discussed Supriya, we've discussed the real estate theme. Open-ended question, that one stock that you think it's corrected or valuations are decent and it has a good runway, if you want to discuss with us.
Well, I think neither protein, which is having that protein e-governance, which is having this FPO, that looks to be a very interesting company to us, given its positioning in the entire ecosystem around the government e-infra. So I think at a steep discount of almost about 15 to 18%, this looks like a very good theme for medium to long term kind of an investor. And, I think even from current level today, it is down about 7-8%. But my sense is that around, 1600 or thereabouts is a compelling buy.
Okay, all right. Hemang, thanks a lot for joining in. It's that sort of a day when the markets are ending up and India's action as well against Australia, that as well has wound up. Australia going home at around 67 for 7. But it was a good day for the markets. You had all the big names that were firing. Just one stock from the Nifty pack that ended in the red, which was Bajaj Auto. That was mildly down close on 0.4%. But SBI, Titan, Bajaj Finance, TCS, ITC, all of them blazing all cylinders, and big boy Reliance Industries as well. Most of the contribution in today's trading session on the upside came in for Reliance Industries that finally found its form. But from the broader markets as well, there were quite a few stocks that move around. MRPL was up close to 9%. Swan Energy was up close to around 12%. Castrol came back into the buy list. Remember, it went all the way to around 260, then it corrected big time. Today as well, that stock was up. Paytm Karo, that one was up close to around 6%. PFC bounced back in today's trading session, made up all of its losses in yesterday's trade. But there were a few losers. Some of those Adani stocks, they continue to lose out. Adani Green, Adani Energy Solutions, and Adani Power, down between 3 to around 8%, though they came off the low point of the day. So to sum things up, it was a solid trading session. Tech did well, banks did well. The Nifty goes home with a gain of close to around 500 points. Breadth of the market as well, firmly in favor of the number of stocks that are advancing, close to around 3:1. So we're gearing up for the state elections over the weekend. Let's see whether or not there is some follow-through that's left in Monday's trading session. For the time being, we wrap up on this edition of Closing Bell. You stay with us. Editor's Roundtable comes up next.
A big day, a major setback to the Adani Group because this is the US Department of Justice, a court in the United States which has opened an indictment against Gautam Adani and his nephew Sagar Adani and 7 others. Got the US Securities and Exchange Commission which has also made charges against the Adani Group and members of the Azure Power Corporation. Essentially, they have said that both these companies got together, colluded to gain government contracts for the Solar Energy Corporation of India because they were working with this company for solar energy, and in order to get contracts from different state governments, they tried to bribe Indian officials across the country, primarily in the state of Andhra Pradesh, and offered bribes to the tune of over 2,000 crore rupees. Now, why has this become important? Why did the US courts take cognizance of all of this? This is because the US courts believe, and the US Securities Exchange Commission believe, that they have raised capital from the US markets while bribing officials in India. So this is a major allegation. They have been charged under the Foreign Corrupt Practices Act and the Extortion Prevention Act of the US. Primarily 4 counts against them: conspiracy to violate the Foreign Corrupt Practices Act, securities fraud conspiracy, wire fraud conspiracy, securities fraud relating to 2021 bond offering, and conspiracy to obstruct justice as well, because both these forums in the United States believe, legal forums believe, that the accused have destroyed evidence as well.
Did Gautam Adani, did Sagar Adani mislead the Bombay Stock Exchange, the National Stock Exchange? And if yes, what are the consequences? Well, we'll try to answer this question by using excerpts from the US District Court indictment order against the Adanis, and we'll refer to 4 specific paragraphs which spell out the details, the chronological list of events as to whether or not there was any misleading claims made. First up, paragraph number 103. This paragraph very clearly spells out that the FBI reached out to Sagar Adani on March 17th, 2023. And once that happened, once the FBI had reached out, there were 3 specific things that happened on that day, on March 17th of 2023. Number 1, all his electronic devices of Sagar Adani were seized by the FBI. Number 2, a search warrant was served on Sagar Adani, which very clearly listed out all the offences and the allegations for bribery under the FCPA. All of them were listed out for the benefit of Sagar Adani. And finally, a grand jury subpoena was also served on Sagar Adani, which again contained all these details. What's important is that the same paragraph also points out that this information then became available to Gautam Adani on the very next day, that's March 18th of 2023. All of this information was available. Gautam Adani was in the know of this investigation, was in receipt of that subpoena, of that search warrant. These are the important facts. These are the important dates. Keep that in mind.
Well, Friday's gains have helped Dalal Street turn positive for the week. The Nifty and the Sensex have snapped the 2-week losing streak, regaining half of last week's losses. Over the next 30 minutes, we decode this week's market action, tell you why tech stocks are still outperforming in this market, and also put the spotlight on the big debate around the consumption slowdown. Hello and welcome to Editors Roundtable. I'm Surabhi Upadhyay, and with me are Nigel D'Souza and Prashant Nair as always. And joining us in the studios this afternoon is Rahul Arora, CEO of Nirmal Bang Institutional Equities. Gentlemen, great to be here with all of you, and there's plenty to discuss today.
You know, generally there are 4 of us and 1 guest, Rahul, so you have to make up for 2. 2 of us.
I'll try my best.
But I think markets came back in style, right?
Yeah.
And I think when they're back, they're back.
Yeah.
I don't know if they're really back.
We'll know on
but-
Monday, once the political stuff is out of the way.
Yeah, so tomorrow, Saturday, we'll have the Maharashtra elections, etc. But I think it was getting to a point where, I mean, this morning, Friday morning, for example, this morning, dollar was up back above 107. But generally, things had, it was looking like the market wanted to bounce a little bit. We finally got that bounce.
Yeah.
But there's still too many variables, too many balls up in the air, especially from the global side, which I think make it harder to say whether this is it. I think flows and positioning, etc., we'll get a better sense when we get those numbers later today. And we'll have to pick up from there.
I guess for Nigel, it was markets along with cricket.
Absolutely.
And the momentum was, I don't know, where was it stronger, in the market or on the field?
Both, actually. You know, the boys are doing well out there. So hopefully, you know, things end up well on the cricket ground as well as in the markets. But Rahul, how are you feeling? the last quarter's earnings numbers were the, I don't know how many quarters in terms of it was the biggest disappointment we've seen in the last 6 or the 8 quarters or whatever. But now looking ahead, if I was looking at the capex spent from the government, the first 5 months, I think it was around 3 trillion. And in the month of September itself, it was 1 trillion. And the benefits of that will flow through in the second half of the year. So we're counting on that big booster shot to help earnings as well. What is your sense in the markets? We went down to around 23,200. We ended closer to around 24,000 odd. How do you think you're placed?
So first off, thank you for having me on the show. And just to start off on a lighter note, you brought back some childhood memories when you said the boys played well. It was almost felt like Azhar was speaking.
The boys really.
But
oh
no.
God, you remind us how old we've become.
No, but that's just on a lighter note. But I think you raise a valid point, Nigel. I think before we went into the result season, when the Nifty was at about 26,500, I think most of the stocks in our coverage where valuations had become excessive were trading anywhere around 1.5 to 2.5 standard deviation over mean. In fact, if you looked at most of these sectors, whether they were consumer durables, electricals, defense, chemicals, the price to earnings multiples were almost 2x on the return on capital employed. Now, these things are generally not sustainable. To your point about whether government capex can sort of push, things going forward. So if you look at the quintessential formula of GDP, which is C plus I plus G plus X minus M, the X and M, I think, will evolve over a period of time because now Donald Trump is coming in and we don't know how the tariff situation will work. And China has just issued a stimulus, to its own economy not too long back. So, how the export-import works, we'll have to see. Now you're left with CING, consumption, as Surbi mentioned, and even as we saw in the results, has not been too good. In fact, we just had our conference, about 10 days back at Taj Santa Cruz, and we had a lot of representation from the FMCG sector, and nobody was sounding extremely gung-ho. So you're basically down to ING, which are the two engines on which you're looking to support. I think as far as corporate India's capex is concerned, Nigel, a lot of that was announced post-COVID, because if you see one of the biggest things that came out of COVID was the deleveraging of balance sheet of corporate India, and a lot of capex was announced. I think we're sort of at the top end of corporate India announcing capex. So it basically falls back to the central and the state governments to announce that. Now, obviously, a lot of these may be linked to state elections, but I think my sense is we need to moderate our growth expectations dramatically on earnings, because if you look at corporate India by and large over a period of time, the earnings growth has been driven by margin expansion or by deleveraging of balance sheet. So either you delevered balance sheet, interest costs came down, EPS went up, or you expanded your margins and your EPS went up. I think now the challenge is going to be top line driven from here, and I think that's why it's been a little more severe in this result season than it has been in many others, even though this has, as you rightly pointed out, been one of the worst result seasons in recent memories. But I think from here, the onus is purely going to be on top line growth. And you may find that companies that are growing at 13-15% get disproportionately higher valuations, as opposed to companies that will probably grow at, say, between 5 to 10%. That's the way I look at the next 2 years, because I don't think there is too much by way of deleveraging or margin expansion that can happen from here on.
All right, just to follow up.
Can I just summarize
please.
the markets?
Let's do that first.
By the way, heavy stuff. When you're talking about how Nigel reminded you of Azhar, you reminded me of my economics professor, GDP formula and whatnot. I mean, anyway, very near term, right? I mean, just a few things that I think markets will pay attention to. One, of course, is the Maharashtra elections. And I think the only reason the Maharashtra elections will matter if the exit polls are wrong. And that's the worry, right? I mean, the exit polls have showed something. If they are, if the actual results are in line, I think, today's rally stays and maybe we're able to build on it. If they are not, then, of course, Monday becomes a bit more tricky, at least in the very near term. Headlines, Russia, Ukraine. You saw what happened this week on Tuesday when the market were cruising along nicely and these headlines came, markets fell. I think they're still very relevant and what happens. Strength in the dollar, past 107. I mean, it's classic. Dollar higher, it's essentially negative for emerging markets and the dollar is heading higher. I think over the weekend, will we get a US Treasury Secretary announcement? The last we heard is a gentleman called Kevin Warsh is the leading candidate for the next US Treasury Secretary. Why is that important? He, by his own admission, is openly hostile to what he calls those who disfavor US interests. So, I mean, generally a sort of hawkish gentleman in that respect. And by the way, he's also been tapped, these are reports, to be the next Fed chair after Powell retires in 2026. So that's the other one. By the way, one thing which went unnoticed on Friday was that China was down 3%. I think we didn't talk about that at all. And this is interesting. The Texas governor has directed Texas state businesses and state agencies to divest their portfolios out of China. Right? I mean, I think that is that's a indication. And I mean, if this flows moving from one to the other, that is India and China. I mean, I think this is one signal, and this is all happening in the build-up to, of course, the 20th of January when the Trump presidency will be inaugurated. And I'll just leave you with some levels here for both the Nifty and the Bank Nifty. It's the 20-day moving average. Simply put, for the Nifty, it's 24,030. For the Nifty Bank, that level comes in at about 51,298. So, I mean, that's, as they say, the Lakshman Rekha between, at least in the very near term, and it matters. Let's see if we've got it in us for the market, in the indices, to sort of, in this leg higher across these levels, so as to speak. I'm not mentioning the Adani-related news flow, and we'll talk maybe more about that with Rahul and whether there are any implications thereof. Surabhi.
Yeah, absolutely. I mean, there's plenty to digest for the market. But Rahul, what I was trying to ask is that one thing that we've heard almost from all managements in this earnings season, wherever they've not had a great quarter, is that second half is going to be better. You hear it from consumer companies, you hear it from cement companies, you hear it from every company. Do you believe second half will indeed be much better for earnings recovery?
It's a tough call to take, and I'll tell you why from a consumption standpoint. I think because you had a general election earlier this year, and I think if that was not able to give you a high single-digit sort of volume growth, I don't see how it's going to happen. Obviously, for a lot of consumer discretionary companies, this quarter was good. So air conditioners were good, so on and so forth. I think, that's a case-to-case sort of basis. I think, we recently interacted with a very large electronics retailer who was talking about iPhones and television selling, but unfortunately, there's no direct way to play it through the stock market. So my sense is that consumer discretionary will still continue to perform consumer staples. As far as cement is concerned, it's a direct proxy to the infra spending that's going to be happening. So the point Nigel was raising a little earlier about government spending happening, this is a second-order derivative. But I think if you take a 10-year sort of, a chart of cement volume growth, it averages about 6-8%. And I think a lot of the delta is, sort of hinged on pricing. Now, I don't know how much pricing power these companies are going to have. So it's all right to say the second half is going to be better. But like I said, I think the visibility of that is not so strong today in some of these sectors as it probably was anticipated to be, say, 6 months.
Okay. Since you brought up consumer, and I just have a follow-up question before that, just presenting some data points and some commentary that I picked up across different brokerages and management commentary as well. Now, what is the consumer up to and what are the trends telling us? So it's very divergent between FMCG, what's happening with autos, and let's say what's happening with consumer durables. Now, on FMCG, we know the numbers have been bad across the board. So some highlights from what CLSA is saying in its latest commentary. They're saying that this has been the biggest earnings miss in recent memory. Of course, everybody's noticing the rapid worsening of demand, particularly in urban metro centers, tier 1 cities. And the other trend is the rising GOV numbers when it comes to quick commerce. Quick commerce has taken off in a big way, but that also means disruption in the delivery channel. I'll come back to that. Just some numbers. So Motilal Oswal, I was looking at the set of consumer companies they cover. That's 19 companies in all. Sales are up 6.5%. EBITDA is nearly flat, just about 1% growth. And the profit is actually down marginally, 0.2% lower. Now, their rationale behind the slowdown, adverse weather conditions, lots of flooding, extra monsoon, etc., persistent inflation, again, urban demand issues, and then they're also noting this quick commerce element and what that is doing. Blue Star this morning, however, look at what Blue Star is saying. This is a company that's saying that we've grown 30% in the festive season. There is no slowdown in AC sales. Look at what the auto numbers are saying. Initially, when we got into the festive season, there was a lot of worry on demand. But finally, if you look at FADA numbers, festive season this year over last year, it's not that bad. You're clocking about 12% growth in terms of volume. So mixed trends, trying to understand the mind of the consumer right now. So to go back to this question, Rahul, and you've tracked this space really closely, I want to go to the question on quick commerce. And some of what, let's say, what Dabur said, and I don't know what's happening with Honasa. That was another major casualty this season. How much of it can we blame to strategy changes because of quick commerce, and how much is real demand concern, and is it going to be a prolonged concern?
I think this calls for a much bigger discussion, because my sense is that India as a consumption basket is actually skipping some levels of consumption, the way I look at it. And I think if you're looking at, say, let's let's talk about disposable income and how much of that may actually be even coming into the stock markets from tier 3, tier 4, tier 5 cities. That which was otherwise going into consumer staples or otherwise, if this is coming into or going into far more productive assets and you're making money, you're probably skipping levels of consumption, and which is why you're seeing. Now, that doesn't mean that consumer discretionary will keep doing well as well. I mean, I'm sure you guys would have seen the recent Indian Hotels analyst meet. Puneet is actually talking about doubling his turnover over the next 6 to 7 years. That's about a 13-14% CAGR. That's all right. You know, it sounds all right for a headline, oh, doubling of turnover, but it's a 13-14%. So I think somewhere across the board, obviously quick commerce has made a dent. It has got a lot of unorganized people into the organized foray. They are able to reach out. Distribution as a moat has been destroyed completely, and I think that's where, you know, if a Lever or a Colgate are finding it difficult for volume growth. So I think that the entire, you know, sort of thought process earlier of having 6 million or 8 million or 10 million out, you know, distribution touch points, that's gone out of the window. I think it could, you know, on certain aspects it could be a little more relevant, like say P&G, because of the product that they cater to, but otherwise I don't think that. I just think it's a change in consumption pattern as opposed to another mode of you know, delivery coming in. And I'll give you an example. Domino's even today does more sales on the Domino's app than it does through Swiggy and Zomato. 98% or 99% of the orders are through the Domino's app. So something like that where you've already established, you know, competition cannot come and break it. But yeah, I can understand, you know, from the point of view of the point here should be is that people are not buying soap shampoos.
That's what I'm saying.
That is the issue. It's not
are a secondary matter,
exactly.
whether it's
so
online or direct or quick commerce
absolutely.
or whatever.
And it could be that, you know, people are moving from showering with, you know, the box soaps to shower gels or things. So we may be skipping levels of consumption, and maybe the traditional consumer companies are not equipped to deliver that. And this could be true of IT services as well. I mean, just look at what Tier 2 IT companies are doing, the Persistences of the world, the Coforges, and so on and so forth, the kind of growth rates they have vis-a-vis an Infi, TCS, Wipro, HCL Tech, Tech Mahindra. These guys are growing in that 5-8% range. These guys are going at a different tangent altogether. So it's about how you're innovating, new companies coming in, what is your product offering, and are you appealing to the next-gen customer?
Yeah.
That, I think, is the most important thing.
Absolutely. Speaking of IT, Nigel here has been looking at some numbers there.
Well, that's right. You know, DAM Capital, they put out a note and they said they believe that now it's time to go overweight on the tech space. And I'm putting it as it appears the bulls, well, now they're getting a little bit more tech savvy, or let's call them the tech savvy bulls. And the reason I'm talking about it is, if you look at it in the last 1 year or so, well, those lines are pretty much going in sync, you know, for majority of the time. But in the last 1 month or so, suddenly tech has broken away. And in the last 1 month, the tech index is up close to around 6.5%, while the Nifty is down close to around a percent or thereabouts. So what has changed, you know, in terms of why have you seen such a big move? Let's pull up first the last couple of years. You know, in FY24, if you're looking at the Nifty 50 earnings growth, well, that was pretty good. And the tech space, the Nifty IT index, you know, if you look at the Nifty IT index, the growth out there was close to around 6%. We should actually pull up the previous plate up for you on the screen, because in FY24, the tech space actually was lagging in comparison to what the Nifty earnings growth was. So earnings growth comes up for you. But in the next couple of years, actually, the IT index, well, the earnings growth there could be better than what the Nifty 50 will do. So, you know, DAM Capital has put it out at close to around 14%. Why is that? They're expecting better revenue growth, and also they're expecting the rupee to be relatively weaker, which they believe will be good for earnings. Now, the Trump trade. Trump is reportedly good for tech. That's what the DAM Capital note as well mentions. And they have mentioned 3 big points out here. One is in terms of the rupee depreciation. They say that in the last term, the rupee depreciated by nearly around 4% on an average every year, you know, in his last tenure. And they have put up a plate as well, where they say that, in fact, you know, every percentage or point in rupee depreciation will actually be good for earnings as well. So that's point number 1. Point number 2 is he's been talking about potential reduction in the US corporate taxes, which in turn could result in higher spending. And talking about spending, we have seen a lot of focus on spending on equipment. Now they believe that there'll be a lot of spending in the services sector, which in turn will be good for Indian IT companies as well. Moving to growth then, you know, growth for the tier 1 companies, well, it's gradually been in that 3 to around 4% odd. But now the expectations in the next couple of years, things will pick up as the rupee depreciates. You know, you're expecting tech spends as well to go up. So that's what will work in their favor. And just to give you a comparative study, of the previous 2 years, the way some of these tech companies were growing and how they're expected to grow. As you can see, some of them were growing. They'll grow at a faster clip. Some of them were degrowing. They, in fact, will return back to growth. And some of them that were growing, like Persistent was growing at around 16%, it'll continue to keep in step. So growth in the next couple of years will be better than what we saw in the last few years. And also, if you're looking at valuations, and some of them should come up for you on the screen, the better the growth engine, obviously you get a better multiple. Stocks like Persistent are trading at a bit of a premium, while some of these stocks are in that vicinity of around 19 to around 22%. So the few points to note from here on is tech has started outperforming. The rupee could be, relatively weaker, and also growth will come back. So let's see how this plays out. Rahul, how are you all placed on tech-related names? The IT index itself has suddenly come back in a big way. Do you think it's running ahead of itself, or do you think good reason? As I said, earnings will be better than what the Nifty 50 earnings is likely to be after trailing it in the last couple of years.
So I think one of the important things, Nigel, to also note is that there's a technical factor here. I think if you look at the IT index over the last 2 years, it has massively underperformed the Nifty. I think, if I'm not mistaken, 2022 would have been about a 25-30% underperformance to the index, and last year would have been about a 10-15%. So there would have been a technical underweight stance. Now, obviously, as your chart rightly showed, this is sort of coinciding with the US rate cut cycle as well. And now Trump coming in, people think rate cuts will probably get a little more accentuated. You may not have too many 50s, but you probably have maybe 25s. Since you're on the subject of tech, TCS was one of the companies that we hosted at our conference just about 10 days back. They were very bullish on US discretionary spending. And they said these rate cuts will actually spur, I think the word they used was huge modernization programs in the BFSI sector in the United States. So I think if this happens, and so going back to the point that I was making with Surbhi earlier, I think for mature consumer and IT services companies in India, I think 5% is your pivot growth.
Yeah.
In good years, it could probably head to 7 to 9%. In bad years, it probably comes down about 1 to 3%. If you're looking at, say, an 7, 8, 9% kind of growth, coupled with rupee depreciation that you're talking about, and some benefits on subcontracting charges, which gives you a little bit of margin expansion, on that night, and these are cash-rich companies, they'll earn interest income on their investments any which way. So if you look at, say, a 13, 14, 15% kind of earnings growth, this sector will continue to outperform, is my sense. So if you get into within striking distance of a double-digit top-line growth, 8-9%, this sector, I think, will continue to outperform because of the technical factor that I said, where the underperformance under ownership, and the fact that now there is genuine conversation about spending at US banks and discretionary spending, which, along with some of the margin levers I gave you, which could probably result in a 13, 14, 15% earnings growth, this could hold up valuations. Can this significantly re-rate from here? I don't know. But valuations can certainly hold up in technology.
The one is, of course, IT stocks. The other is, I was thinking about consumption. I don't know if you guys saw this. There's a gentleman called James O'Brien. He's professor of computer science at UC Berkeley. He wrote on LinkedIn, I just want to read this, and maybe our viewers can go and check it out. He essentially saying that previously a Berkeley computer science graduate, even if not a top student, would receive multiple appealing job offers in terms of work type, location, salary, and employer. However, outstanding students, like those with 4.0 in major GPA, are now contacting me worried because they have zero offers. I suspect this trend is irreversible and likely part of a broader trend impacting almost every employment sector. Not so much a comment on IT services sector, but I mean, if this is a computer science professor at UC Berkeley, I'm just thinking in terms of, it's just a thought. What happens to a large part of the premium consumption in this country over the last 20 years has been supported by IT work, right? I mean, IT services and IT services employees. It's nothing immediate, but I think it's something which will increasingly come into focus. And I think the connection here, of course, is AI.
I was just going to say, I think it's also about the curriculum, Prashant. I think it obviously branches out into a much bigger discussion about, what you need to be teaching. I think if you're hitting a 4.0 GPA in something that is being taught, but that's not what the market requirement is, it could be very different. I think, I think,
I don't remember the numbers now, but we produce a lot of computer science graduates in India every year.
Don't hit a 4.0 GPA. On a side tangent.
3.5, you should be okay.
I'll tell you one of the things, since you raised it. I had spoken to the CEO of a tech company, one of the largest tech companies in India a few years back, when they had started making acquisitions. And you'll probably know which one I'm talking about, but there were a few acquisitions between $50 to $200 million. And I asked him, I was like, you've made 3 or 4 acquisitions in a matter of 2 years. What's going on? He's like, it's very difficult to reskill people who are north of 40 because their education is in one way. The guys who are 25, 30, and in Silicon Valley, you'll be surprised to note how many companies are coming up with very significant valuations of people who are in that age group of 20 to 25, who are probably just inventing something, selling it out, and these guys are making, bigger bucks on it. And these guys are just taking home the cash up front.
I dare say it's a damning indictment for all of us. Maybe
That's what
except
I'm saying. I think we need to take a break because this conversation is making me very, very glum and making me feel extremely old and outdated.
We'll come back and discuss it. We've been really told to take a break, so let's do that. Rahul, of course, is with us. Perhaps we'll have some time on the other side. Stay with us.
Paragraph number 105. This paragraph very clearly spells out, the US court spells out, that Gautam Adani as well as Sagar Adani caused other people to make misleading statements on their behalf. Essentially, other people misleading on behalf of Gautam Adani and Sagar Adani, saying that they were simply not aware of this US investigation. Next, we move to paragraph number 117. This paragraph again reiterates that claim that there were misleading comments being made on their behalf of Gautam Adani and Sagar Adani, and that these misleading claims were made to the media, to the stock exchanges, as well as to financial institutions. And then we travel to paragraph number 120, and this is where the beans are sort of spilt. This is where the court, in fact, spells out in great detail that exactly a year after, on March 19th of 2024 of this year, a year after the FBI had reached out to Sagar Adani, served those search warrants, we find that there was a letter that was written by Adani Green to the Bombay Stock Exchange, to the National Stock Exchange, claiming that they had no knowledge of any ongoing investigation.
Welcome back. You're with us on Editors Roundtable, and it's a spirited conversation we're having this Friday afternoon. Rahul Arora still in conversation with us. So Rahul, we've discussed, of course, the softer aspects and the harder aspects in terms of numbers, age and so on and so forth. Let's come down to brass tacks. Next 6 months in this market, should you be putting in all of your 100 rupees, 50 of those 100, 25? What's the approach and what to buy?
Oh, you're talking about in terms of just equities or asset allocation?
Equities, and if not equities, what else?
No, I think there is a case for gold. I wouldn't put if I had 100 rupees, I would certainly not put all 100 into equities. I think probably I'd still say 70, 75 into equities, but there is certainly a case for putting in about 15, 20 into gold. The balance you can sort of, you can go back to conventional ways of fixed deposits and so on. Because even if you're sitting on television and saying this and, saying pura equity mein dal do, people are going to invest there. So it's a norm of life. I think within equities, Surbhi, I think large caps is probably going to outperform mid and small caps over the next 6 months, because that was the time horizon you gave. And within that, I think the case would be more towards private sector banks and IT services. I think that's probably in a quick summary, the way I would look at it.
What about Adani Group stocks? They were the most talked about. Suddenly you have negative news flow on the group. But we have spoken about this in the past. I remember 18 months or so ago as well, when this entire fiasco broke out. And ACC, Ambuja, as well as Adani Ports, I recall we discussed, and all of them did well. What's your view on the stocks?
So I think, Nigel, these are obviously the three crown jewels of that group. And I think obviously ACC, Ambuja, even before they took over, these are very cash-rich companies. So there's nothing wrong with the operations. They've been existing in the business long before, some of these groups even came into existence. So there's no issue as far as the business is concerned. It goes back to what kind of volume growth and so on and so forth. The problem here is when something like this happens is this issue of governance premium and discount.
So don't buy.
So no, I'm not saying don't buy. I'm just saying that as a fund manager today, if I'm looking at large cap cement, I have predominantly three options. I have Ultratech, this group, ACC, Ambuja combined at some stage, and Shree Cement, right? Shree's valuations are not that compelling at this point in time, so it's either Ultratech or this. And you would see, I think the day the news came out and the market was down, Ultratech was up 2%.
Yes.
So I think at this point in time, if you're somebody who can take that 2-3 year view and look at value, it's not a bad time to be looking at Ambuja. But don't expect miracles to happen in the next 3-6 months. If that's your time horizon, I'd probably say you're still safer off being with Ultratech than with this.
But if you have a longer term horizon?
I think ACC, Ambuja, because there is genuine cash on the books, there are genuine assets there. So also for Adani Ports, I think if you have a slightly longer term horizon, certainly buy into these three. The others we don't track and have no view on the other Adani Group stocks.
Got it. Okay.
Okay, all right. That's plenty of food for thought. Rahul, thank you very much for joining. And we're going to take you up one day on that longer discussion on consumer, because it's a very interesting aspect. For now, it's a wrap on this edition of Editors Roundtable. Thank you very much for being with us. More news and updates coming up on the other side.
Department of Justice in the United States, and that is despite a year had transpired since they received the notice by the FBI, the search warrant by the FBI, which had very clearly listed out all those allegations and concerns with respect to bribery. And that, the US court concludes, is in fact making false as well as misleading claims. And what is important is that there are detailed obligations listed out under the SEBI norms for listing, for disclosures under the SEBI Act itself. And the apprehension is, we've spoken to very many legal lawyers, what they tell us, the apprehension is that this could very well be a fit case for SEBI, the market regulator, to take action for these misleading claims.
Hello and welcome to Business 360. I'm Parikshit Luthra and here are the headlines we are tracking this evening. A Friday rally, the biggest 5 months, sees the market ending in the green for the second time in 10 sessions. 35 out of 50 Nifty stocks end gains this week. Rupee recovered slightly after hitting a record low yesterday. Adani Group stocks recover a day after a massive sell-off that wiped off over 2 lakh crore rupees of investor wealth. Reports suggest that SEBI is looking into whether the Adani Group flouted rules by failing to disclose that the US government was investigating bribery allegations against Gautam Adani and other group executives. The White House says relationship between India and US stand on an extremely strong foundation, expresses confidence that both nations can navigate the crisis surrounding the bribery charges against the Adani Group chairman Gautam Adani and 7 others.
$300 million. It's the largest 100% Indian fundraise for a private startup in the history of this country, right? And we're proud of it.
Zepto raises $350 million from a clutch of Indian investors to bolster domestic shareholding. CEO Adit Palicha claims company created 1 lakh jobs and the average monthly salary of delivery partners is more than 23,000 rupees. Denies predatory pricing charges, saying inefficient middlemen have been cut out of the value chain.
This will be one of the most important markets and regions going forward.
The global CEO of semiconductor maker AMD, Lisa Su, says India is one of the most important markets as it houses the company's largest team outside of the US, promises to continue investing as AMD celebrates completing 20 years in India. Mahanagar Gas hikes prices of compressed natural gas in Mumbai and adjoining areas by 2 rupees to 77 rupees a kilogram. This comes weeks after the government slashed cheaper domestic gas allocation to distributors by 20%. NTPC Green's 10,000 crore rupee IPO is successful after a strong appetite from retail investors. The offer is fully subscribed on the final day. Supreme Court expresses dissatisfaction with the compliance of the truck entry ban in Delhi, appoints 13 lawyers as advocate commissioners to examine whether directives are being followed, directs Delhi police and the Delhi government to ensure that checkposts are set up at the 113 entry points. Leaders from Ukraine and NATO to hold talks in Brussels after Russia fires an experimental hypersonic missile. Vladimir Putin threatens Western nations, saying Russia has the right to strike those providing weapons to Ukraine. Bitcoin hovering near the $100,000 mark as the rally continues. Bitcoin has gained over 40% since Donald Trump's victory in the US presidential election. A strong rebound on Friday helps the Sensex and Nifty end the week in the green. Nifty moved closer to the 24,000 mark after gaining over 500 points today. The Sensex gained nearly 2,000 points to cross the 79,000 level. Both the indices gained 2%. This week, mid-cap index gained over 1% today. Prashant Nair is here with the market wrap.
Well, finally, a market which recovered and stayed recovered by close at 3:30. Unlike Tuesday, when you had a big move higher, but then fizzled out towards the last hour of trade. The Nifty went up and sort of kept going through the day. It was a trending day, actually. Last 60 minutes adding about 100 points for the index. Nifty Bank looking very, very strong. Actually, it was largely a large cap day because large cap indices did 2% plus. Mid and small cap indices were up about 1.25% or so. PSU banks were the top gainer. Real estate as a space did well. IT services was another pack which actually did quite well. Large cap stocks on the Nifty. SBI really stood out. Big gains. TCS did well. Titan, JSW Steel, Bajaj Finance and Ultratech were some of the others which did quite well. In the broader market, I mean, and by the way, on the Nifty, very few losers and in the 0.5% to 1% range, so I'm not bothering with those. In the broader market, advances far outnumbered declines. Paytm was a big mover, almost 900. Naukri, there was an upgrade, big gains. PFC, there was a Bernstein note, stock ended 5% higher. Praj was up 10%, Swan Energy. Raymond recovered almost 20% by close. MRPL, Godrej Properties, Castrol, Shipping Corporation of India, Sobha, Phoenix Limited, KEI, Spark, TFCIL and Wockhardt, which was up about 5% as well. I mean, a lot of the gains, of course, coming on the back of sharp corrections that we've seen. Some of these stocks are down 25-30% from their respective highs in late September. What was under pressure? The Adani Group stocks, there was some recovery from the lows, but still, I mean, you had Adani Green, Power and Energy Solutions, which were lower. There were also losses coming through in Honasa. Of course, it's been a catastrophic week for the Honasa share price, down sharply. Torrent Power and Shilpa Medicare were some of the other names which lost in trade today. I mean, as we come back on Monday, there'll of course be the Maharashtra state election results, which the market reacts to. And of course, I mean, the Russia-Ukraine headlines, will we get something by way of an escalation? That's the other thing. Remember, out of the US, we'll get, for the first time, data in terms of how the economy is doing with the PMI numbers. This is going to be, I think a data which markets will watch closely because this is post-Trump, coming to power. Dollar has been very, very strong, not particularly great news for emerging markets. So I think that's something else from a global perspective, which is going to be important. Back to you.
The rupee recovered slightly after hitting a record low yesterday. However, the greenback's steady rise and persistent selling by foreign portfolio investors continue to weigh heavily on the currency. Escalating geopolitical tensions also weighed in on the rupee. The bribery allegations against Gautam Adani and group executives in the United States remain our top focus. Adani stocks recovered a day after a massive sell-off led to the erosion of close to 2.3 lakh crore rupees worth of investor wealth. 6 of the 10 Adani Group stocks ended in the green today. Meanwhile, reports suggest that the market regulator is looking into whether the Adani Group flouted rules by failing to disclose that the US government was investigating bribery allegations against Gautam Adani and other group executives. Here's a quick recap of what transpired. A US court indicted Gautam Adani, his nephew, Sagar Adani, and several other officials for for allegedly bribing Indian government officials to obtain solar energy contracts. According to the indictment, Adani allegedly paid bribes to the tune of over 2,000 crore rupees. This included an alleged bribe of 1,750 crore rupees to a high-ranking official in the Andhra Pradesh government who has not been named. In a separate indictment, the US Securities Market Regulator claims Gautam Adani personally met with the then Andhra Pradesh Chief Minister Jagan Mohan Reddy in August 2021. Jagan Mohan Reddy's YSR Congress said that there was no direct agreement between Andhra Pradesh's power discom companies and any Adani Group firm. The party said that the power sale agreement was signed between Solar Energy Corporation and state discoms. SECI, a central public sector enterprise, is the procurement intermediary between companies and power discoms. Hormuz Fatakia joins us now. Hormuz, a lot happening at the Adani counter.
A lot happening indeed. It was a very volatile day for all the Adani Group companies. They opened lower. There was a bit of a recovery. Then they fell again from the highs of the day. And then around about 10:30, 11 o'clock, we got the news that GQG, which is one of Adani Group's biggest investors at the height of the Hindenburg scandal in 2023, they announced a share buyback, which is of $65 million or 100 million Australian dollars. And in light of that news, GQG shares, which are listed in Australia, they went up 16%. But by the close of trading there, their stock was also off the highs of the day. They also ended around 4% higher. So around 8 Adani Group stocks ended with gains in today's trading session. Energy Solutions, Green were the ones that still continued to end with losses. And S&P came out with a note earlier this morning. They mentioned that they are revising the outlook on Adani Ports and one of the units of Adani Green to negative. And this may restrict a lot of the funding access from the overseas markets for a lot of these entities. And they will need regular access to equity and debt funding simply because they have elaborate growth plans and also to regularly refinance their existing debt. And that's why they mentioned that. But S&P also wrote in their note that the Adani companies, if they are the ones that they cover, are built on long-established infrastructure assets with strong fundamentals and cash flow. But if the allegations are proven to be true, it can have some bearing on the operations. JP Morgan too came out with a note, and they also say some things on similar lines, that the developments can essentially curtail their group's funding access overall in the offshore bond market. And especially for Adani Green Energy, which has near-term maturities of over 9,500 crores in the second half of the financial year. Adani Energy too has around $500 million of a US dollar bond, which is due in August of 2026. And this recent developments may see the exit of some global investors because of this recent judgments. So it was a volatile day for the Adani Group stocks. It was a recovery, but not a recovery at the same time.
Right. Thank you very much, Hormuz, for joining us with that important update. This is a story that we continue to follow very, very closely, and the opposition also asking questions of the government. The US government has also reacted to the charges against the Adani Group. The White House press secretary has said that the US is confident of navigating the crisis given the strong ties between the two nations.
Obviously, we're aware of these allegations, and I would have to refer you to the SEC and DOJ about the specifics of those allegations against the Adani Group. What I will say is on the U.S. and India relationship, we believe that it's stands on an extremely strong foundation, anchored in ties between our people and cooperation across a full range of global issues. And so what we believe and we're confident about is that we'll continue to navigate this issue as we have with other issues that may have come up, as you just stated. And so the specifics of this is something that SEC and DOJ can speak to directly.
Onto a CNBC-TV18 exclusive quick commerce platform, Zepto has raised $350 million from a clutch of investors in a mega domestic funding round. This is India's largest 100% domestic fundraise raised by a startup so far. Speaking exclusively to Shireen Bhan, Zepto CEO Adit Palicha claimed that the company created over 1 lakh jobs and the average monthly salary of delivery partners is more than 23,000 rupees. Palicha also denied predatory pricing charges. He said that the company has cut out inefficient middlemen from its value chain.
We raised over $300 million. It's the largest 100% Indian fundraise for a private startup in the history of this country, right? And we're proud of it. The reason why, when we started this financing, we had over $1 billion of net cash in bank, no debt, right? We're growing well. And the reason why we raised this capital, candidly, is because throughout the entire life cycle of Zepto, we've always wanted to bring on board domestic capital. The first one is comparative pricing. I'll give you an exact data point. So that allegation is false unequivocally by data. If you look at the exact number of units sold on the Zepto platform in FY24 that was below COGS, it was 0.2%. Only 0.2% of our units were sold below cost price of the manufacturer. 99.8% we were making margin on it. 99.8%, right? Even in the stores that we had.
And who's verified this?
This is EY verified. I'm happy to, I'm happy to go, publicly and say anyone that wants to diligence this, please come into our office. Let's look at the books, right? Because we've got data and facts, and there are anecdotes and hyperbole, right? And we're on the side of data and facts. So 0.2% of our units were sold below cost price in FY24. We don't expect the number to change in FY25 much, but we've got book closure numbers for the full year FY24. Even in the markets that we were profitable in, we were meaningfully lower than MRP. So are we predatory pricing? The answer is no. If you look at it, we've created structural deflationary value. We've cut out all the inefficient middlemen that exist in the value chain for grocery, the distributor, the wholesaler. We go straight to the manufacturer. We're procuring millions of products at scale, getting it at a better price. That goes into the platform at a better price for the consumer than MRP, cutting out all the inefficient middlemen that have been sucking out value, and the consumer has had to pay at MRP. So we've structurally reduced the price. We've been able to turn our stores profitable, and that means we're not predatory pricing, we're actually deflationary. So as an industry, to give you a sense, we've gone from 0 to 4.5 lakh jobs in 36 months as an industry, quick commerce. Zepto alone has created over 1 lakh jobs, right? Which is something we should celebrate. If you look at the wages of those jobs, the average wage of all the people that have been in the system that I mentioned, from the delivery partner all the way to a truck driver to the pickers and packers, etc., and the farmers, we've got over 10,000 farmers that are the plurality of their income today in the country. The average wage rate is 23,200 rupees on Zepto. You extrapolate that to the industry, and it's quite a lot of wages. To give you a sense, when we did a survey of our delivery partners, we have this data as well. The most common thing that they were doing before they were on Zepto or Zomato or Swiggy or before gig work? We put a lot of demonization of this. But you know what the most common thing that they were doing before it? Nothing. They were unemployed. This is young, urban males, urban youth, 10th or 12th pass education, no formal history of employment. That was the first thing that they were doing is they were earning zero. They were unemployed. The second most common answer is they were engaged in some form of informal employment where it's factual and it's been covered by credible economic studies that in the informal sector, things like minimum wages are not adhered to as much as we'd like. Right? And so we've got, we've estimated, and from the surveys that we've done at scale, statistically significant, that, even the people that were employed were making 10 to 15,000 rupees per month. And now they're making 23,000 rupees per month, right? So we are a net job creator. We're net wage additive. And, we're not predatory pricing.
And you can catch this exclusive interview at 4:30 p.m. and 9:30 p.m. only on CNBC-TV18. The global CEO of semiconductor maker AMD, Lisa Su, says India is one of the most important markets as it houses the company's largest team outside of the United States. She's on a visit to India as AMD celebrates completing 20 years in the country. Shireen Bhan spoke to Lisa Su, who promised that AMD will continue to invest in the Indian market.
Yes, well, it's a very special week for us this week. I'm here celebrating our 20th anniversary in India. India is such an important part of AMD. When we look across our, all of our, global portfolio, every aspect of our product line goes through our design center here in India. And so I had a great time this morning with our team. And when I look back at the last 10 years, it's kind of interesting that we had met each other 10 years ago. It's been a remarkable experience. I mean, if you think about all of the things that have changed over the last 10 years, I say that, semiconductors have now gone from, something that was, kind of behind the scenes, under the covers, to today, everybody's talking about semiconductors, and semiconductors are essential to every business, every country, every profession. So I think that feels very good. And then from an AMD standpoint, I think we've also had a very good 10 years in terms of taking our business from what was in 2015 we were about a $4 billion company, and this year we'll be north of 25 billion. So there's been a lot of growth in there.
There has been a lot of growth, and I'll address the growth in just a second. But I want to double down on your bet on India. And you have committed $400 million to 2028, and you've just been here to inaugurate the last phase of this campus. Why the decision to make India the home for your largest R&D facility?
Well, we actually look at it in a very logical way. When you think about our business, it's all about having the most talented people around the globe. We run a very global team, and we did make a bet on India. We made a bet that we could build an end-to-end design capability here. So hardware, software, systems. It's an extremely talented team, and with the investments, nothing comes overnight. It comes after literally 20 years. I think 20 years ago we started with maybe 100 people.
Yeah.
Now we have 8,000 people in India across all of our product portfolio, and I think the bet has really paid off. We wanted to have a major site in India, and we wanted to grow that skill set across the board. And I'm very happy to say that this is our largest team outside of the U.S. This is our largest design center here in Bangalore. So it is a very special place.
Well, I'm glad to hear that from you, Disa. I also want to link this to the larger semiconductor story that's now starting to play out in India. You met with the Prime Minister in September when he was in the US for his visit. India is aspiring now to become a manufacturing hub of semiconductors as well. How do you see that playing itself out, and what do you believe will be some of the things that we need to be mindful of as we grow this ecosystem in this industry here?
Well, I have to say, I have a very high regard for Prime Minister Modi and his strong vision on technology across semiconductors, both the Make in India, semiconductor manufacturing, design, as well as all the focus on AI. I think every aspect of that is truly important as we go forward, and especially around semiconductor manufacturing. What I admire is the very concrete, pragmatic steps that have been taken to both attract global companies here, as well as building the local infrastructure and ecosystem. And I think the one thing is these ecosystems take time. They don't come overnight, but I would say lots of very strong progress. And we continue to invest in India because we really believe that this will be one of the most important markets and regions going forward, as well as a wonderful infrastructure and ecosystem for the type of development that we do.
So it's a day of big exclusives, Zepto on one hand and the AMD Global CEO on the other, only on CNBC-TV18. With that, it's a wrap on this edition of Business 360. News and updates continue right here.
In America, that Mr. Adani has broken both American law and Indian law. He's been indicted in the United States, and I'm wondering why Mr. Adani is still running around a free man in this country. Chief ministers have been arrested. Jharkhand chief minister was arrested. Many people have been arrested. And Mr. Adani has done apparently 2,000 crore scam, multiple others probably, but he's scot-free. He's running around. There's no problem. There's no investigation. Adani ji को एकदम अरेस्ट किया जाए. और हम जानते हैं और हम देश को दिखाना चाहते हैं कि अदानी जी की अरेस्ट नहीं होगी. और इसलिए नहीं होगी क्योंकि हिंदुस्तान के प्रधानमंत्री अदानी जी के पीछे खड़े हुए हैं और उनके प्रोटेक्टर हैं. आप लोग हिंदुस्तान के युवा, आप लोगों को रोजगार नहीं मिलता, महंगाई बढ़ती जाती है, छोटा सा कोई क्राइम करता है, जेल चला जाता है. एंड इट्स ए टेस्टमेंट टू द वर्क बीइंग डन दैट द यूनाइटेड स्टेट्स हैज डन व्हाट इट्स डूइंग. This is not, don't think that nothing is happening. This is flawed. We have completely obliterated Mr. Narendra Modi's image. और हिंदुस्तान का हर रिटेल इन्वेस्टर जानता है कि माधवी बुच is corrupt and माधवी बुच is protecting Mr. Adani. But शुरुआत तो वहीं होगी ना, अदानी से शुरुआत होगी. तो अदानी को पकड़िए, अंदर डालिए, इंटेरोगेशन शुरू कीजिए और इन्वेस्टिगेशन शुरू कीजिए. और ये जो माधवी बुच ही हैं, जो इनके स्टॉक प्राइस को प्रोटेक्ट करती हैं, इनको वहां से हटाइए और क्रेडिबल व्यक्ति को वहां डालिए, क्योंकि अगर आप नहीं करेंगे तो हिंदुस्तान की
Well, hello and welcome to this special edition of Young Turks. I'm Shireen Bhan and we're back with Adit Palicha of Zepto. We last had him in August, and the reason why we're talking to him today is because they've raised another fairly significant round of money, about $300 million, and this is all domestic capital led by the likes of Ramdeo Agarwal of Motilal Oswal. Adit, good to have you back. You know, when we spoke in August, you said you're not looking at raising any more money. What's changed?
Well, firstly, thanks again for having me, Shireen. It was wonderful being here in August. It's wonderful being here 3 months later. It feels like a lifetime, right? But you know, I'll start with this fundraise. So yeah, we raised over $300 million. It's the largest 100% Indian fundraise for a private startup in the history of this country, right? And we're proud of it. The reason why, you know, when we started this financing, we had over $1 billion of net cash in bank, no debt, right? We're growing well. And the reason why we raise this capital, candidly, is because, you know, throughout the entire life cycle of Zepto, we've always wanted to bring on board domestic capital. Both, you know, Keval and I are excited about the fact that we can build like a, you know, an Indian company that people can be proud of. But there never really has been risk capital of that scale available to private startups. And so, you know, we pushed, I remember from the Series A onwards, Series B, Series C, Series D, we tried to get domestic investors on board, but it wasn't the right time. We saw an opportunity here with Motilal Oswal and their team, and you know, we went into it not really with many high expectations, but we were able to pull it off, and we're quite excited about it. And the rationale behind, you know, doing a domestic fundraise is fairly simple. You know, we had over $1 billion of cash in bank. Now we've got over $1.3 billion of cash in bank.
Yeah.
But this domestic financing just helps us increase Indian ownership going into an IPO. We think that benefits the company long term. One, you know, just public trust and shareholder trust going into a public company. It's better to be owned by high quality Indian names, right? And you know, historically we've been limited to Silicon Valley VCs that are not very familiar, or that Indian institutional investors and Indian retail shareholders as well are not familiar with. And B, even just from a, you know, regulatory and government lens, we think being an Indian company is favorable. And lastly, it's the ambition that Keval and I have always had to build like an exciting Indian company.
But is that the real rationale, you know, of being Indian owned, so that the FDI regulations, especially the FDI regulations to deal with retail and e-commerce, don't necessarily constrain you?
So, number one, I mean, you know, even today, we are 100% compliant and respect FDI laws, right? We've, you know, essentially maintained the same successful e-commerce models that have existed in this country for over a decade, right? And, you know, we've built a lot of depth, not just in FDI compliance, whether it's for a fairly young company having a Big Four statutory auditor, right, with and pulling off a financial year closure with no qualifications. That's one example. Whether it's GST compliance, whether it's income tax compliance, whether it's even our best efforts on FSSAI compliance. We've worked hard there. So we're not concerned about FDI compliance. We feel confident in the work that we've done, and we're compliant.
Not necessarily compliance. What I mean is that do you feel that the FDI regulations don't give you the flexibility to do the kinds of things that you may want to do? Because we're given to understand that this is what Zomato is looking at as well as it grows out Blinkit, and which is why they did this big fundraise as well.
Yeah, no, look, it's less about the FDI rules opening up more business avenues. It's more about being an Indian-owned company and putting that debate to rest on as we get to larger and larger scale, is this an Indian company or a foreign company? I'll give you a line, Shane, right? We are not Amazon or Walmart, right? This is in spirit an Indian company, Indian entrepreneurs, Indian management team, Indian board, hoping and will get listed in Indian public markets soon, and will by next fiscal year be a fully Indian-owned company, right? In just a little over 3 years since we started this company, right? So in spirit we're an Indian company. There's a debate out there: is this Indian? Is this foreign? We are actually an Indian company. The only reason why we took capital from Americans is because there's not many people that will give 25 crores to two crazy 18-year-olds in India, right? That kind of risk capital doesn't exist in India, frankly speaking. It does exist in a place like Silicon Valley, but it was never our intent. And that's why, there's a big difference between us and, let's say, a Walmart or an Amazon. So it's less about, the specifics of rules.
Yeah.
Even after becoming an Indian-owned company, our business model is not going to change. We're going to continue to be an e-commerce company, right? We're not going, we are going to continue the business model, but just puts that, big-ticket debate to rest, because we feel like we're going to get to good scale. And
is that debate that you speak of impacting operations in any form or fashion? Is it putting you perhaps under more government scrutiny at this point in time?
Yeah, so it has had zero impact on the business, and candidly speaking, other than the media noise, and we're used to a lot of media noise since inception, right? A lot of hyperbolic narratives since inception.
Well, for you, there's mostly been praise so far.
No, you don't remember 2022, 2023 article?
No, that was in general, that whether quick commerce will work, not work, and so on and so forth. It wasn't specific to you.
No, that's generous. There were specific obituaries on our company, which is good, which is part and parcel of building a company, and that's okay, right? And I understand that. But yeah, no, I mean, I think we started with, does anybody even want quick commerce? There was a survey, 90% plus Indian consumers don't want 10-minute delivery. I still remember that. I could cite that, for your viewers after this. There was, 10-minute delivery is killing the delivery drivers, right? It's bad for delivery drivers. Then we actually put out the data and said, guys, our accidents per million kilometers is lower than all the other formats of e-commerce, because most accidents that are fatal happen on highways and freeways, and most of our operations are on artery roads and neighborhood roads, right? And so actually our accidents per million kilometers were lesser. Or let's say quick commerce would not make money. And then we proved, 70% of our dark stores hit profitability. The industry moved towards profitability even while growing. And now this is another narrative, right? So it's that quick commerce is hurting the Kirana store and is not good for India. Just like all the other narratives, right? This is just another anecdotal hyperbolic.
But let's address the narratives with facts, and I want you to put the numbers down on 100%. The table, because Kate, which is the Traders Association, has basically told the government as well as the general public that quick commerce is bad. Quick commerce is going to kill the Kirana stores. That quick commerce is taking away jobs at this point in time. I want you to first. There is discounting. There's a whole plethora of charges that have been made against quick commerce in general, including each one of you. Now, I want you to address each one of those aspects. Let's start with the discounting issue, because that is something that the government also is concerned about.
100%, and let's go through them one by one. We'd love to do it, and we're data-driven guys, right? So we'll make it happen. But the first one is competitor repricing. I'll give you an exact data point. So that allegation is false unequivocally by data. If you look at the exact number of units sold on the Zepto platform in FY24 that was below COGS, it was 0.2%. Only 0.2% of our units were sold below cost price of the manufacturer. 99.8% we were making margin on it. 99.8%, right? Even in the stores that we had.
And who's verified this?
This is EY verified. I'm happy to, I'm happy to go, publicly and say anyone that wants to diligence this, please come into our office. Let's look at the books, right? Because we've got data and facts, and there are anecdotes and hyperbole, right? And we're on the side of data and facts. So 0.2% of our units were sold below cost price in FY24. We don't expect the number to change in FY25 much, but we've got book closure numbers for the full year FY24. That's one, right? Even if you look at the stores that we were profitable in, which we turned hundreds of stores profitable, and it's a well-regarded fact, even the market, the investors that came in here, investors like Ramdevji from Motilal Oswal, or all the Ranjan Pai from Manilal Group, that diligence was done in our stores. Even in the markets that we were profitable in, we were meaningfully lower than MRP. So are we predatory pricing? The answer is no. If you look at it, we've created structural deflationary value. We've cut out all the inefficient middlemen that exist in the value chain for grocery, the distributor, the wholesaler. We go straight to the manufacturer. We're procuring millions of products at scale, getting it at a better price. That goes into the platform at a better price for the consumer than MRP, cutting out all the inefficient middlemen that have been sucking out value, and the consumer has had to pay at MRP. So we've structurally reduced the price. We've been able to turn our stores profitable, and that means we're not predatory pricing. We're actually deflationary, right, for tens of millions of consumers. So that's a headline. With zero predatory pricing, quick commerce is deflationary. We can prove it in the profitability that we have in our store P&Ls. We can prove it with the number of units that were sold below margin, right? We've got all the data. Obviously today, we're expanding on a base of, billions of dollars of scale. We're investing in CapEx. The biggest singular line item today in our P&L is CapEx, directly or indirectly. Right? Not all of it shows up in fixed assets. Some of it is in an OpEx model, to go into the technicalities. But if you look at the capital being deployed, the biggest part is CapEx and working capital. The second biggest part is operational setup. I just mentioned it to you, right before this meeting. We just added 25,000 jobs in the past 90 days since the last time we spoke, right? Which is unbelievable, right? We've gone from 0 to over 100,000.
What kind of jobs are these outside of delivery partners?
So delivery partners are the biggest one. Then you've got pickers and packers in your dark stores. You've got the line haul, the truck drivers, right, that help in the supply chain. You've got the back-end supply chain. Let's say the packagers for the fruits and vegetables that you get. Most of them are women, by the way. You've got the local entrepreneurs that run our stores. Actually, next year, majority of our stores are going to be run by local mom-and-pop entrepreneurs, not some big guy mom-and-pop entrepreneurs. And then you've got the rub-off impacts, the D2C entrepreneurship that we create, all-Indian entrepreneurship, the companies that have been created that have scaled on Zepto, and the people that they hire. So as an industry, to give you a sense, we've gone from 0 to 4.5 lakh jobs in 36 months as an industry, quick commerce. Zepto alone has created over 1 lakh jobs, right? Which is something we should celebrate. And if you look at the wages of these jobs, Shireen, right to your point. So one, the first question you mentioned, are we predatory pricing? Answer is no. Happy to go into the data, happy to go into our books in detail. 0.2% of products below margin.
Okay.
And stores profitable, still below MRP, because we're deflationary. We've created value in the supply chain. That's one. Second piece on jobs, created over 4.5 lakh jobs. If you look at the wages of those jobs, the average wage of all the people that have been in the system that I mentioned, from the delivery partner all the way to a truck driver to the pickers and packers, etc. And the farmers, we've got over 10,000 farmers that are the plurality of their income today in the country. The average wage rate is 23,200 rupees on Zepto. You extrapolate that to the industry, and it's quite a lot of wages. To give you a sense, when we did a survey of our delivery partners, we have the data as well. The most common thing that they were doing before they were on Zepto or Zomato or Swiggy or before gig work? We put a lot of demonization of this. But you know what the most common thing that they were doing before it? Nothing. They were unemployed. This is young, urban males, urban youth, 10th or 12th pass education, no formal history of employment. That was the first thing that they were doing is they were earning zero. They were unemployed. The second most common answer is they were engaged in some form of informal employment where it's factual and it's been covered by credible economic studies that in the informal sector, things like minimum wages are not adhered to as much as we'd like, right? And so we've got, we've estimated, and from the surveys that we've done at scale, statistically significant, that, even the people that were employed were making 10 to 15,000 rupees per month. And now they're making 23,000 rupees per month, right? So we are a net job creator. We're net wage additive. And, we're not predatory pricing. But I'm happy to answer all the other pointers you mentioned.
No, on the specific issue as far as the Kirana store is concerned, because as you pointed out, you've done away with the middleman, so to speak, in your words, which is added to the efficiency. But that's one of the complaints that Kate is making, that this is an unfair playing field. Now, do you envisage a future where you can co-opt or collaborate with the Kirana stores? Will you, in fact, strategically look to do that? You talked about creating these mom-and-pop entrepreneurs, but will you look at co-opting or collaborating with the Kirana store ecosystem, because that then also allays the concerns that are being raised?
So Shireen, one, an unfair practice is predatory pricing, like just selling below your price to source so that you can choke the market. Are we doing that? No. But what is fair is building structural value, building supply chain efficiency, going straight to the manufacturer and giving consumers lower prices and acting as a deflationary force on day-to-day household essentials and goods.
Yeah.
Right?
Their point is that they're not being able to do that. So
I know, but I'm saying that, if you look at that's actually real structural value. Tens of millions of consumers, deflationary, right? So, and the stores were turning out profitable. So is that a net positive? I think it is, right? But to give you a sense, I'll give you two things on the Kirana store. One, are we replacing the Kirana stores? You mentioned, CAIT, Kate, right? The Commission for Traders. Today, if you look at the same reports that Kate white paper cited, right? They cited a data intelligence report. In the data intelligence report, it said quick commerce has taken $1.2 billion of sales from the Kirana store, right? That same report, go to page 6 for the viewers, right? And we've done this research ourselves, go to page 6. That same report says, in the same breath, that between FY23 to FY24, India added $46 billion more grocery consumption year on year. And in the next 5 years, we're going to add $200 billion more consumption. So that report is to be believed, right? The report that Kate is citing, right? And this is consensus view. Look at the Goldman Sachs report on consumption. Look at Invest India. It's a consensus view. The economy is growing, the fastest growing G20 country, G20 economy in the world, or one of the fastest. We added $46 billion of consumption, FY23, FY24. That same report, if you've taken $1.2 billion of sales, but the economy added $46 billion, where is the remaining $44.8 billion going? Where is it going? It's going to mostly the Kirana store. So we're growing, there's no doubt about it. But the Kirana store is not shrinking, they're growing as well, right? And if you look at the incremental $200 billion of consumption that we add from FY24 to FY28, and I don't think, even Kate would make the assumption or make the statement that India is not growing. Clearly we're growing, right? The $200 billion of consumption that we add, even today, quick commerce is $6 billion, broadly, Blinkit, Instamart, Zepto, of top line. Even if we grow 1,500% in the next 4 or 5 years, which would be at a basic, very difficult thing to achieve, even if we grow 1,500% from 6 billion to 90 billion, we will be less than half of the incremental consumption, that 200 billion that's been added to this country. Where is that additional 100 billion going? Mostly to the Kirana stores. So, and I'll answer the question on inclusivity as well, if you give me a minute, right? But the Kirana store is growing. We're also growing. Again, it's just a hyperbolic narrative. It doesn't even fit in the own data that's been cited by the people that are making these arguments, right? And again, like I mentioned, we're used to these narratives. We're used to 10-minute delivery nobody wants, 10-minute delivery doesn't make any money, 10-minute delivery is killing the Kirana store. These are all just narratives that don't have data behind them. And we've proved time and time again that the narrative about quick commerce are wrong. This one is wrong. But to your question, just coming to that, which is on, can we make this inclusive? And genuinely, that's our intent, right? Today we've got 10,000 plus farmers that work with Zepto, whose livelihoods have improved because we give them stable, consistent income with transparent pricing, which they don't get from the local market. I meet these farmers, I've spoken to them myself, right? They don't get those prices from the local market. Because they get stability for multiple years, they're able to take financing and expand their farms and make more income, right? And we're going to put out studies on this as well, so you'll see this. But that's one. On the Kirana store specifically, today, hundreds of our dark stores are run by local mom and pop entrepreneurs, right? And you've got, let's say, an ex-restaurant store owner in Noida, or a person that used to run a small car wash operation in Nasik, right? Or even a Kirana store owner, right? There's one in Andheri, right? People that take a relatively small amount of capital, start a Zepto dark store. We give them the technology, we give them the manpower support. They run the store, they employ people in their local community, right? And they make money, and they're making today. For example, that person I mentioned, one example is a local entrepreneur in Noida, Kiran, whose family was about to go bankrupt. She took a small loan, started a Zepto dark store, and today she makes net of that interest that she has to pay on the loan. She's making 1, 2, 3 lakhs a month, and it's going up. And this is all formal. She's employing 30 people from her home state of Haryana, from her community, right? And it's PFESIC compliant employment. It's above minimum wage. She's making good money as an entrepreneur, and that's inclusive growth. So to give you a sense, we're willing to commit today that the majority of our dark stores within next financial year are going to be run by local entrepreneurs. And this is, again, not some sort of gimmick. These are actual local entrepreneurs.
Yeah.
We give them the technology, they start a Zepto dark store. So that's the way we look at it.
Let me ask you this, Adit. You know, as you pointed out, you raised $1 billion. Before you raised another 300 million. Now, what do you want to do with all of this money at this point in time? And I think the concern also comes from why you guys raising this. You gave the ownership argument, but there is a concern that are you raising all of this money because you fear also having to burn a significant amount of money?
Sure. So, you know, candidly, transparently, and maybe it'll be difficult for some of the cynics to believe, right? But this financing was 100% pure just to increase domestic ownership, right? That's why, you know, we had demand from foreign investors at better prices, right? We didn't take a single drop of it. We took 100% domestic ownership, and these are all quality names, right? Yeah. Some of the names that I mentioned. And so, you know, this one was for domestic financing. And even if you look at the IPO, right, that we're hoping to do, you know, sometime next year, the main objective is so that we can, you know, become that Indian company, right? Become an Indian listed company, tap into capital markets at scale. So that's the primary reason. But what I will say though is that, you know, are we investing capital? Answer is yes. Are we getting the leverage on that capital, right? Where we're seeing disproportionate scale, you know, sustainably all the input metrics on, you know, the curve to profitability for every new store we're launching, how our mature customers are performing on average order values and on margins. All that is going up. For example, our average order value has gone from 450 6 months ago to now about almost 550, and it's expanding, right? It'll be at 550 about next month. And so we are, you know, we're seeing all the right operating leverage metrics, and yeah, we're investing capital. But where's that capital going, like I mentioned? Mainly in the fact that we're launching hundreds of stores a quarter. Most of that is capex and working capital. Not all of it shows up into fixed assets on our balance sheet because we also have OPEX models that we run, like with 3PL partners, third-party logistics partners. But that's where the capital is going. But we are not in a position where even a fraction, like to give you a sense, 60 to 70% of our balance sheet, if not way more, I'm just giving a very conservative number, will remain uninvested, right? And we see the same thing with Zomato, right? Zomato is also raising capital. I don't think they intend to burn $2 billion, right?
Yeah,
I think,
no.
But it's good corporate finance.
Well, as I said, I mean, the speculation is that it comes back to the ownership issue.
Exactly, right? And so I can't comment on that, but this is the same direction it's coming from.
You know, we don't know what the government intends to do, whether the government acts, how it chooses to act, how it chooses to respond to the charges that Kate has put on the table, and whether there's going to be any change in regulation or not. But you're going to be filing your papers at some point, hopefully soon. This is going to be a significant risk factor, is it not? Was this a risk factor when you did this round of fundraise, when you did the domestic financing?
Look, not really. I mean, I think we've got... See,
nobody's asked you these questions?
No, people ask the questions, no doubt about it. But to give you a sense, you know, I think that, you know, it's really not about compliance in like the spirit or letter of the law that we are all trying to get to domestic ownership, right? We're realizing, and this is the first time that large internet companies are getting created at scale in India, which is a good thing, right? We should celebrate, you know, companies like Zomato and Swiggy that have created tens of billions of dollars of value, and most of that, especially in Zomato's case, has accrued to Indian shareholders over the past 2 years, right? There are people that, sorry, on a side note, but there are people that probably can retire earlier or can take care of their parents easier because they own Zomato stock. And that's how you build a middle class, right? You own Boeing stock for 30 years and you build a middle class like that. You don't touch it and you create wealth, right? So it's a good thing. But to give you a sense, what we're all realizing as an internet ecosystem is to build real value at scale, right? You know, tens of billions of dollars without having to, you know, be an Amazon or a Walmart, right? You know, to get to that scale, you want to be an Indian company, and it's looked at very positively, not just by the government, but even by the market, shareholders, and the public at large, right? People trust you more. So, you know, it's not really, to answer your question, it's not really about FDI compliance, FDI regulation, right? We've had a decade of e-commerce that's been built at scale in this country, and, you know, we're just a small part of that today, and so is, you know, so are our competitors in this industry.
Now, I'm just trying to understand why it suddenly becomes such a big issue as far as companies like you, and perhaps, again, as I'm pointing out, we don't know. There's been no official comment from Zomato, but, you know, I mean, HDFC has foreign holding, and it's in the banking space. Why are you guys getting so concerned about this?
There's a difference between financial services and, you know, what we're building, which is commerce, right? We're employing, I mean, obviously, you know, HDFC is one big example. There are obviously lots of examples of large Indian companies, right? Like the Tatas and the Reliances of the world. But I mean, that's the feedback that we've gotten, right? In general, if you look at companies, in the Nifty 50, right, most of them are, Indian owned, and most of them have, that's been the broad example. Obviously, there are exceptions, no doubt about that. But yeah, look, I think, you're right to say that, why has it become an issue suddenly? I think we're expecting that, we will scale, we will create value.
So is this a preemptive move, is my question?
Yeah, look, candidly speaking, I don't think raising this financing is going to change one thing or the other, right? I don't think that it's going to change something for tomorrow morning. It's more a long-term track, right, where over the next 6, 9, 12, 15 months, we keep building Indian ownership.
So what will be the ownership? How much do you dilute with this round? How much do you hold between you and Cavalier? What will the foreign shareholding be, and what will the domestic shareholding be?
Yeah, so, we are, we will own, by the time we go public, we'll own about 20-ish%, right? And there are a couple of, pieces that we're making, a couple of things that we're closing, this flip from Singapore to India, and just, getting ready even just from a legal perspective to go public in a couple of quarters. But yeah, we'll own around 20%, right, which I think is decent, right? So like if you build a large company, that'd be great. But back to answering the key question, right? Is it, I don't really look at it as a risk factor, right? We are today, like, we're not only FDI compliant, but we've got a long precedent of FDI compliance, right? Before us, well before in this industry, in e-commerce. We are anyway moving towards being a domestic company, but that doesn't mean that tomorrow we become a domestic company, business model will suddenly change, we're constrained. No, that's not the thought process. Business model will stay the same, even as a domestic company. But, today these large IPOs, hopefully if you become a large company, what does this preempt, right? This preempts us, I hope, right, and then maybe be optimistic, but in the next 12, 24, 36 months, I think we'll be like a 15, 20, $25 billion company. I don't know when, I don't know if it's 3 years, 2 years, or maybe longer, but it seems like that scale is going to come. And that's what we're preempting, right? We're preempting that, saying that we would like that large-scale value to accrue to Indian shareholders, and now we have an opportunity to do so. So I think that's true for Zomato as well. They started as like a largely foreign-owned company, and over time moved towards Indian ownership. A lot of that value scale happened there. Similar with I'm sure Swiggy over the next couple of quarters. But for the first time, we have that opportunity, and so all of us are taking that option. So yeah.
You brought up Swiggy, so I bet you were looking at the Swiggy IPO very, very closely. What was going on in your head as you saw the listing, which got off to a slow start and then sort of shot through the roof on day one?
Yeah, I think it's great. Like, I mean, it's huge kudos to what Harsha and the team have pulled off, and I think it's great for the ecosystem. I mean, I think we should, one of the last things I mentioned, Shireen, is that we should be celebrating this. This is Indian technology, like quick commerce, and Swiggy's IPO, I think it's fair to say, largely powered by excitement about quick commerce, right? Zomato's performance, largely powered by excitement in quick commerce. I think that's not a controversial thing to say, it's a consensus view. We should be celebrating quick commerce. This is good for the country. This is Indian technology, Indian innovation. This hasn't worked anywhere else in the world. And it's real infrastructure for ordinary people. Like, this is not for like the top 0.1% of India, right? These are people who now realize the scale they were getting to. This is impacting ordinary people's lives at scale, and now going from metro cities to beyond. But the way that I look at it is we should be celebrating the fact that today, because of Indian infrastructure, Indian technology, there's a mom in Noida who's able to take a part-time job because her life has become easier because of quick commerce. It's exactly like setting up a metro station, right? So, we look at this as Indian technology, Indian innovation. Nobody else in the world has been able to do that.
Have you been able to convince the government, though?
Well, I think I think the government is progressive. They support, value creation and job creation at scale, right? And they've been supportive so far. And like, we are, honestly in a position where we think of them as a partner. We're always open to feedback. And I mentioned this last time as well to you, right? That even with, let's say, gig workers, right? We are, honest to God, good faith, open to feedback and dialogue on how we can improve. Whether it's with gig workers, can we do more? Today we give insurance, right? 1 lakh cover plus 10 lakhs of term insurance for free. Whether it's with, food compliance across the board. So I think they've been helpful. But, the last thing I'll say is, next time, we're talking to, foreigners, next time there's a foreign, leader in this country, we should say, hey, not only do we have UPI, Indian innovation there, But in India, you can tap a button and your daily essentials will come to you in 10 minutes. That's amazing.
So you're saying quick commerce is like the UPI moment for India?
No, it's world-class infrastructure built in India with Indian technology. And it's making real people, ordinary people, their lives easier every day, and it's improving productivity and the quality of life for tens of millions of people. By Indians. It's not some rip-off of, some American model or some, Chinese model. It is like only in India you get this stuff, which is awesome.
Made in India, right, and made for India for now.
Absolutely. No, we are going to be in India for these next couple of decades, so that's...
So let me end then by asking you, Adit, give us a quick report card of where things stand now as far as stores are concerned in terms of the money that you're making, cash flows, also market share.
Sure. So look, I'll refrain from commenting on specifics, but I'll give you like a broader understanding. So we've obviously, multiplied meaningfully over the past few quarters, right? And I think the performance has been good. We've scaled from, $1 billion 6-7 months ago when we came out there publicly. We hit $1 billion in top line, fastest internet company in Indian history to do so. We've now multiplied on that base without giving much specifics, but I think we'll continue to get multiplier growth powered by the growth that we're seeing in consumption across the board. In terms of profitability, look, we are investing capital today, aggressively investing stores, but we're pretty confident within the next financial year, right?
So how much are you going to be investing, say, in this financial year?
It's obviously sensitive competitively, so I won't say it publicly, but
ballpark.
Ballpark is is enough to give our friends an insight, right? But look, I can tell you this within the next financial year, not for the full average financial year, not at the beginning, not at the end, but within the next financial year, we will realistically be at break even, right? We will hit that milestone within next financial year, FY26. So at a meaningful scale. So obviously we're investing, but we'll hit that again.
And what's the timeline now for filing?
I'm not allowed to comment on that. I already got a lot of heat from our lawyers, right, to do PR, but it's soon. I think in a handful of months we'll be there.
Okay. Adit, we wish you the very best of luck. Thanks very much for speaking with us, and all the best for your future plans, and congratulations on this latest fundraise.
I appreciate it, Shireen. Thank you so much.
Well, with that, it is time for us to wrap up this edition of Young Turks. From all of us here, for now, goodbye and many thanks for watching.
उनका जबरदस्त नुकसान होने वाला है। अदानी जी का अरेस्ट होना चाहिए और जो भी इस मामले में इन्वॉल्व है उस पर कार्रवाई होनी चाहिए, चाहे वो कहीं का भी हो, कोई भी हो। जहां भी करप्शन है वहां पे इन्वेस्टिगेशन होनी चाहिए, मगर इन्वेस्टिगेशन अदानी जी से शुरू होगी, और जब तक अदानी जी अरेस्ट नहीं होंगे तब तक क्रेडिबल बात नहीं बनेगी। तो शुरुआत वहां से है। अदानी जी को अरेस्ट कीजिए, उनका इंटेरोगेशन कीजिए।
राष्ट्रपति बटन आप इस पुरस्कार को देने के लिए स्वयं गयाना आई है। इस स्पेशल जेस्चर्स के लिए मैं आपको बहुत बहुत धन्यवाद देता हूं। फ्रेंड्स, भारत और डोमिनिका दो डेमोक्रेसीज हैं, साथ साथ हम दोनों पूरे विश्व के लिए महिला सशक्तिकरण के भी रोल मॉडल है। दोनों ही देशों में महिला राष्ट्रपति हैं। भारतीय राष्ट्रपति माननीय मुर्मू जी जनजातीय समाज से आने वाली पहली राष्ट्रपति हैं। उसी तरह राष्ट्रपति बटन भी डोमिनिका की पहली इंडिजीनियस राष्ट्रपति है। आप दोनों विश्व की सभी महिलाओं के लिए प्रेरणा का स्रोत है। Friends,
Hello and welcome to News Centre. I'm Parikshit Luthra. Former French ambassador and World Nuclear Exhibition President Sylvie Berman said India's role in nuclear energy is important, and India has been invited to the World Nuclear Exhibition, the largest nuclear exhibition globally. The exhibition, which is slated for next year, is expected to witness a 20% surge in participation. Berman believes it's a renaissance for nuclear energy, and she expects the role of India to be important. Here's a slice of that conversation.
Be good to have a real Indian national pavilion. We're going to discuss everything, and of course the current nuclear, the big power plants, but also we're going to discuss, well, the future of nuclear, SMRs of course, but also fusion. And in the field of fusion, we have cooperation with India, because India is providing the cryostat for the tokamak of ITER in the south of France, which is a huge project of fusion. And we would like to discuss also nuclear medicine, and I know that India is interested by that, and also the application on space and in agriculture. So there's a lot to be done, and we're going to discuss also the financing of nuclear energy. Now there is a real enthusiasm about nuclear. There is a renaissance of nuclear energy.
Right. Ambassador, the other question that I would like to ask you, what is the current ambition in France when it comes to nuclear cooperation with India? What is it that you're seeking now for a long term?
It is very important. It is important in research, as I mentioned it, but it is important also about the cooperation between supply chains. And we are both experienced nations in nuclear with real capacities. And so it is important. I know that the French companies are interested, and some of them are qualified to cooperate with India. So we would like to do more, of course.
Right. So what would be the level of interest among French companies to possibly set up reactors in India, or invest in India, or have strategic tie-ups, and any kind of issues on the Indian side, on the regulatory side, which you feel that can be eased to attract more investments, more interest from French companies to India?
Well, there is the point of regulation, which is a bit more complex in India than maybe in other countries, but I think this is not a problem. This should be discussed. We already have some investments in India projects. We have these Arabelle solutions providing turbines, and there is already 400 employees in India, and there's a lot of other possibilities.
Right. Now, speaking about the cooperation on the Jetapur nuclear power plant, what do you think are the current bottlenecks, and what will it take for the project to actually take off?
I think it's part of our cooperation, of course, and it's very important for us. It has been discussed also precisely by our heads of state, and they decided to establish a task force to discuss all issues, and including financing issue. And otherwise, we consider that it is an important project, because it will provide 10 gigawatts, and on a single site with 6 unique units, and it's proven and available capabilities. So we think it is an important project, and this task force should continue to work on that.
Well, you definitely want India to be present at a big level.
Yes.
And have a India pavilion there at the World Nuclear Exhibition. Why do you think greater investments and greater focus from India is needed in the nuclear energy sector?
Well, I think it is needed because you have an incredible experience. I visited many industrial facilities in a few days here. I visited L&T, for example, in Azira, but I visited Godrej also, and TPC, and that is interesting because they were not specialists of nuclear, and now they consider that it is the future also. And I know that you have the highest number of engineers in the world, more than 1.5 million, which is incredible, of course, and so we really need India.
With Donald Trump's presidency drawing nearer, the World Trade Organization has planned a special meeting to advance the process of reappointing its Director General. Remember, the WTO chief's current term is slated to last till August 2025. Abhimanyu Sharma is here with more. Abhimanyu, why is the WTO looking to fast-track this re-election, and what are some of the contentious issues here?
WTO's current Director General, Ngozi Okonjo-Iweala, has her term till August 2025 and had already filed her nomination in September this year instead of the time which was available to her till December. Currently, she is the only nominee in the fray, and the General Council's chair of the WTO is slated to convene a meeting on the 28th and 29th of November to advance the process for selection of the next Director General. There are indications that Ngozi Okonjo-Iweala wants to get re-elected as the WTO's DG before Donald Trump assumes presidency in the United States, owing to Trump's hawkish stance as far as global multilateral institutions are concerned. It remains to be seen what is going to be the stand of several other countries. India till now has been largely supportive of the current DG due to India's good relations with the African Union and African countries. However, India remains resolute as far as its demands are concerned with respect to the WTO, in which India wants a permanent solution to the issue of public stock holding and fisheries, and also wants a revival of the dispute settlement mechanism at the WTO.
It's time for a short break. Coming up next, US court indicts Gautam Adani and others for allegedly bribing Indian officials. We speak with David Simon, partner of Foley and Lardner LLP, to understand more about the next way forward.
और डोमिनिका के बीच सदियों पुराने ऐतिहासिक और सांस्कृतिक संबंध है। 19वीं सदी में कई भारतीयों ने डोमिनिका को अपना घर बनाया। उनके द्वारा रखी गई आधारशिला हमारे संबंधों को मजबूत नींव प्रदान करती है। उसी से प्रेरित होकर हम डोमिनिका के विकास कार्यों और कैपेसिटी बिल्डिंग में सक्रिय योगदान दे रहे हैं। भारत के लिए यह गहरे संतोष का विषय रहा है कि हम कोविड जैसी आपदा के समय डोमिनिका के लोगों की सहायता कर सके। कैरिकोम क्षेत्र में डोमिनिका हमारा बहुमूल्य पार्टनर है। आने वाले समय में हम हमारे संबंधों को नई ऊंचाइयों पर ले जाने के लिए प्रतिबद्ध हैं। आज दिए गए सम्मान से हमारी यह जिम्मेदारी और बढ़ जाती है। एक्सेलेंसी, एक बार फिर इस सम्मान के लिए मैं आपका बहुत बहुत धन्यवाद करता हूं।
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times.
India's second richest man and the head of an airports to ports to power conglomerate is facing charges of bribery and securities fraud in the United States. A US court has indicted Gautam Adani, his nephew Sagar Adani and several other officials for allegedly bribing Indian government officials to obtain solar energy contracts. According to the indictment, Adani allegedly paid bribes to the tune of over 2,000 crore rupees. This is the first time that an Indian business leader of this stature is facing such serious charges. The Adani Group has dismissed the allegations as baseless, while the White House insists that the ties between the two nations are strong enough to navigate the crisis. While the US authorities are yet to notify on the next course of action, it is clear that the business tycoon is staring at a protracted legal battle. We're now joined by David W. Simon, partner, Foley and Lardner LLP. Thank you very much, David, for joining us on the program. Let me begin by asking you, this is a securities and wire fraud. In the history of American jurisprudence, how serious is this case, the evidence on the table compared to previous such cases?
It's a very serious case. And I think, as you know, there's also an FCPA bribery component to it, not charged against the Adanis, but some of the other defendants. It's a serious case. It's very hard to tell what the full evidence is in the US system. The indictment just lays out the bare bones allegations. The evidence comes later. So too early to judge that, but the charges themselves are serious.
Right. How does one calculate the fine that they may have to give? Now, as per the indictment, help us understand, is it possible that the US court may now ask them to deposit a certain sum of money, or that will come only at the stage of settlement or at the end of the case?
So there are two aspects to the case. There's an SEC civil case, and then there's a Department of Justice criminal case. These are all charged against individuals, not against the companies, at least so far. And we don't know what the requests are going to be, but typically in the US system, there's no deposit of a fine up front, something that would come later. The criminal case is going to seek imprisonment of any criminal defendant who's convicted. Corporate fines, if there's corporate charges, would come later.
Right. So is it right to say that there is an arrest warrant against them, or not as yet?
That is what the papers say, that there has been, the release says there are arrest warrants that have been issued.
Right. But so you're saying that is there in the indictment papers, that there is an arrest warrant against them?
I believe it's in the DOJ press release that they say that arrest warrants have been issued for the defendants.
Okay. So this means that all the 9 accused, including Gautam Adani and his nephew Sagar Adani, they cannot travel to the United States.
I think that's fair to say without being arrested, yes. And, we don't know whether there are red notices that have been filed with, Interpol or international authorities, but I think they're at risk of being arrested if they travel outside of India.
Can that be in any country, or is it only in the United States where they will be immediately arrested?
I don't know the answer to that, but I think there is risk of traveling internationally.
I would also like to ask you, David, that if $250 million was the bribe amount that the US government has managed to calculate, and they're accusing all 9 of them, including Gautam Adani and Sagar Adani, of making gains in the US markets, raising capital for solar projects at the same time, how would the fine be calculated? I believe that there is a certain formula that is used to calculate a fine, and how high could that be?
So it's very complicated. The fines in the U.S. system typically, back to the point we were discussing before, it's typically for the corporate, not for the individuals. There is a system in place for calculating fines that's for corporates that's a formula based, and it's driven by two factors. One is the value of the bribe paid, and two, it's the benefit received by the company from the bribery scheme. So, I think the allegation in the indictment is it was a $2 billion contract that was being sought through the bribery scheme, and so that is the main driver of the fines. It could get extremely high. I would think hundreds of millions of dollars would be potentially at risk.
Right. And going through the indictment and the SEC documents, prima facie, how strong is the evidence against all of them? Can Gautam Adani, because right now the statement that has come from the Adani Group that all these charges mentioned in the indictment are baseless and are denied completely.
Yeah, very difficult to tell from the indictment itself. It's an outline of allegations. It doesn't. The government is not obliged to outline all of its evidence in support of its allegations in the indictment. I do think it's interesting that the Adanis themselves were not charged in the bribery scheme, that others were. And a lot of the evidence that's cataloged, that is included and cataloged in the indictment, is about the bribery scheme. So I think it's premature to reach any conclusions about the strength of the case. I would say, the Department of Justice in the U.S. Doesn't bring cases lightly, and they don't bring cases that they don't think they can win in court. So, it's something to be taken very, very seriously.
Right. David, what do you see is the exact charge? If you were to break it down for our viewers, you're saying that Gautam Adani and Sagar Adani have not been charged for the bribery case specifically. It is for Azure Power and executives, consultants of Azure Power. But what is the exact charge? Because broadly what we read is that they were involved in a bribery, in orchestrating a bribery scheme. So if you were to explain the exact charge against Gautam Adani and Sagar Adani in both the SEC and the DOJ, what would that be?
So it appears to me to be securities and wire fraud, which are sort of generic, not disclosing, misrepresenting to investors and potential investors, or not disclosing, material facts to investors or prospective investors. My best guess from reading the indictment is that the DOJ believes that these two were participating in the bribery scheme, but they may not have jurisdiction under the FCPA to proceed against them, which is why they're relying on these other charges. That's the best I can tell. I think FCPA jurisdiction, while broad for non-U.S. citizens and non-officers and directors of U.S. issuers, which the Adanis are not, the government would have to show acts in furtherance of the bribery scheme in the United States. And I don't see any allegations of that in the indictment.
So what happens next in this case? The indictment has been opened. The SEC has issued a statement. What happens next?
Yeah, I mean, the question is going to be, I think, whether the defendants will appear in the United States to defend the charges, or whether they will, whether the DOJ will initiate extradition proceedings and they fight extradition from India. To me, that will be the sort of the first big decision and development in the case. If they decide to defend in the U.S., there'll be an appearance before the court, an entry of a plea, presumably a plea of not guilty, and then they'll start, preparing for trial. Typically, a complex case like this in the United States will take at least a couple of years from indictment to trial. So I wouldn't expect any, immediate rapid activity in the case. I suspect it's going to take some time.
Right. What is the route for settlement if they want to settle this either out of court or through a plea bargain?
Yeah, I mean, it would be the DOJ piece would be a plea bargain, that's always an option. In the U.S., a very high percentage of criminal charges are resolved short of trial through a plea bargain. That's the norm, frankly. But it's a question of what individual defendants are prepared to plead guilty to. That's always subject to intense negotiation between the Department of Justice and Defense Counsel. But on the criminal case, it's a plea agreement is the way this gets resolved. SEC more of a civil settlement.
Right, and in both cases, the settlement fine would be very high, I assume.
I think so. Although again, the fines tend to be very high against the corporates, and there aren't corporates involved here. The DOJ proceeding is seeking, incarceration. I mean, it's a criminal case that's the outcome that sort of one should expect.
Right, and it's broadly a negative for them when they try to raise more capital anywhere in the world. Banks would raise questions about these proceedings that are going on. My final question to you, David, would be the change in administration. We've been reading that the Trump administration could actually sign off on some sort of a deal to get this all cleared. Is that possible? How easy or difficult is that?
Yeah, I mean, it's not easy, and a lot of companies that are dealing with DOJ issues are asking themselves that same question. These cases are typically brought by career civil servants that have been working on the case for. I mean, it's clear in this case that they've been investigating for a couple of years at least. These proceedings tend not to be heavily influenced by political developments, but there's a lot of uncertainty in the United States right now about what the Department of Justice is going to look like under the new administration, and the role of politics is going to play in Department of Justice proceedings. A lot of us are wondering that and asking these questions. I don't think anybody knows, but I would tell you the norm is a change of administration tends not to have a material impact on these kinds of cases. The Department of Justice has historically, proceeded independently with their own investigations based on the facts and the law. And historically, there's not been heavy political involvement in cases like this. This is obviously high profile and does rise to a higher level of attention. But I think the short answer to the question is we just don't know at this point how that's likely to play out.
All right, David, thank you so much for joining us with those very important views. It's very interesting to see how things pan out, but clearly a very complicated case for everyone indicted by the U.S. Department of Justice, and the SEC charges also are extremely serious as well. Thank you once again for being with us here on the program.
Thank you.
That's all the time we had on News Center. Thank you for watching. Goodbye.
TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome to Indianomics. Should food be included in the Reserve Bank's inflation targeting framework, or should Reserve Bank only target non-food or core inflation? This debate was seemingly settled in 2016 when the Reserve Bank decided to target the headline inflation, including food. But the debate has resurfaced again this month with Commerce Minister Piyush Goyal asking for a rate cut from the Reserve Bank despite inflation jumping to a high of 6.2% in September entirely because of food. Goyal demanded that policymakers and Reserve Bank sit and discuss if food inflation needs to be part of Reserve Bank's target. Now, the finance minister also seemed to agree with this demand when she told CNBC-TV18 that we need to have more conversation on inflation interest rate dynamics. Just hear them out and we'll continue the conversation.
Global markets don't go by your demand and supply ups and downs. They want a consistent flow of pulses to come into India. So complex issues, but very much affecting the common man. So inflation gets actually very, very volatile because of the supply-demand constraints. The cost of borrowing is really very stressful. And at a time when we want industries to ramp up and move building capacities, bank interest rates will have to be far more affordable.
I certainly believe they should cut interest rates. Growth needs a further impetus. We are the fastest growing economy in the world. We can do even better. And frankly, the largest component of inflation is food inflation. I think it's an absolutely flawed theory that food inflation should be considered while deciding on the interest rate structure. Food inflation has nothing whatsoever to do with managing inflation. That's a demand-supply situation.
Well, more conversation needs to happen on this issue, are what both ministers are saying, and we are going to do just that today. Joining me are Professor Pulapre Balakrishnan of the Center for Development Studies, Thiruvananthapuram, Sonal Verma, Chief Asia Economist at Nomura, and Rupa Rege Nitsure, the economist who was part of the Urjit Patel committee, which authored the flexible inflation targeting framework back in 2015. Ladies and Dr. Balakrishnan, thank you very much indeed for your time. Well, Sonal, let me start with you. In the first place, is this demand got anything to do with the academic debate on whether food should be included in the target? This appears to be that the government is worried. The second quarter was bad. We had poor, IIP numbers, core sector numbers, and even nifty results. Earnings growth was just in single digits. And so they're just passing the buck to the Reserve Bank. Is that what we are witnessing now?
It's possible, Lata, that the current trade-offs are so stark that we are having this debate. But it's good to have this debate because, we could face shocks on both the sides. There could be a scenario where food inflation is actually very low, but core inflation is much high. And then the debate actually would be, do interest rates need to be cut at all, or should we be hiking rates? So I think we do need a fundamental debate about what is the right metric to target. I would also say that, I stand on the side that we cannot just exclude, 40+% of the CPI basket at all. I mean, we know that food impacts, expectations, etc. But I think we also need to have a debate on, food is a very broad, comprehensive basket. Within food, have certain items which are very volatile and other items that are more persistent.
1 minute. Sonal, I will come to the theoretical. I'll come to the theoretical part in just a minute. Okay, let me get first thoughts on what is the immediate issue, because markets are trading and they want to have an idea of what's the immediate impact. That's why. Dr. Balakrishnan, your thoughts. Do you think that we can look through, or the MPC must look through the current food increase? Core inflation has ranged between 3 and 3.7% in the last, in this entire calendar 2024. And it's only food that has taken the headline CPI above 6%. Can the Reserve Bank and the MPC, or should the Reserve Bank and the MPC look through this food inflation?
I would say that you should start, or we should start with an idea of what our inflation index should be, what it should contain, what goods. And from that point of view, there's no question of keeping food out of it, right? The question doesn't arise. And I'd like to make a small point, Lata. You said that in 2016 or whenever the Reserve Bank decided to target headline inflation, i.e. an index with food, I just want to say it was not just the RBI. but RBI in agreement with the government of India. Now, strangely enough, the government of India seems to want food out of it, which is, which I think is not quite correct, since inflation targeting with the existing index of inflation has been renewed in 2021 after 5 years of the first round. And the final thing I want to say now, whether food inflation is in the target or not, or food prices are in the inflation index or not, food inflation will impact growth. There's no question about it. And that's clearly something which the government is worried about, I would think. Just want to conclude by saying something which has not got very much attention is that the industrial growth or manufacturing growth in the last year was down to 5% from about 8 or 9%. And there's every reason to believe that that's due to high food price inflation, which leaves less with households to spend on non-food items. I'll stop here and come back if necessary.
Sure. No, I take your point, sir. In fact, FMCG company after FMCG company said the same thing, that it's taken away so much of the purchasing power that it is directly related to the lower aggregate demand. Rupa, I would know which side you are, since you were one of the authors of the Urjit Patel report. But let me twist the question a little differently, therefore. Has the Reserve Bank used the word flexible very well? It did look through the high food inflation during COVID years. So, where it is entirely supply driven, they are looking through it. And therefore, right now, do you think there is any need to change the system?
No, I fully agree with you that it is flexible inflation targeting, and plus minus 2% gives enough margin or scope for Reserve Bank of India to adjust for stressful episodes. But, Lata, when we are talking about headline inflation, headline CPI inflation as the nominal anchor of monetary policy, almost 43-44% weight comes from food inflation, food articles. And that is very much the part of cost of living. These are linked to wages, labor market costs, and eventually it impacts inflationary expectations through that generalized inflation. So there is no question of removing food inflation from the overall inflation index, which is being used as a nominal anchor for monetary policy.
All right. Now, Sonal Verma, a question which will be very pertinent to you is that there is a slowdown, right? You were the one who were calling the slowdown probably earlier than the others. And now, we've seen that softness in the second quarter. If there is a gentleman's agreement between the government and Reserve Bank, then we will be in charge of food. If the government were to say, we will ensure that the supplies are monitored or made available. You worry about the rest of the economy, and therefore you cut rates. Because after all, there is a problem. There is a softness in industrial growth. Core inflation is down to under 4%, which is the RBI's mandate. Would that be a fair argument? We'll take charge of food, you take charge of the rest.
So I think the arguments that are being made right now by the government are actually fair, in my view. So if you look at 95% of the CPI basket, which is ex-vegetables, it is running below 4%, and it's been below 4% actually for most of 2024. So this is not a broad-based increase. In fact, if you look at the roughly 300-odd items in the CPI basket, about 70% of the items have an inflation rate that is less than or equal to 4%. So if one, it's not broad-based. Second, the entire argument about, it's leading to second-round effects, whether you look at rural wages, urban wage growth, inflation expectations, households, inflation expectations from businesses, none of that actually suggests there's been any spillover. In fact, the trim mean measures of inflation have been, again, below 4% for quite a long time. And third, I think the growth sacrifice is on the rise. Monetary policy needs to be forward-looking. What we've seen so far in the first half of FY25, which is clearly an undershoot on growth, I think the current assumption we are making is that this is transitory and government spending picks up, agriculture is great and second half is going to somehow see a recovery. We need to realize that we are keeping monetary policy tight when the broader inflation is under control, and simultaneously tightening macroprudential policies. So when you have the combination of the tight monetary and credit policy in this inflation backdrop, I think the growth sacrifice is much higher than is being acknowledged right now. So it is, at the end of the day, flexible inflation targeting. Are we being flexible?
Okay. No, well, Dr. Balakrishnan, would you have a different point of view? There is a sizable body of economists who believe that growth has slowed precisely because of these other reasons that Sonal mentions. Extraordinary heat, monsoons being very high in some places, government not spending enough. That is a big reason. And Reserve Bank's earlier liquidity tightening for another reason altogether. Last year, the withdrawal of notes, etc. There is a very clear expectation that now, as the fisc spends and the Reserve Bank has already made liquidity almost surplus in the interbank system, growth will pick up. And therefore, you should not tinker with rates when the mandate given to you is 4% headline inflation. Your thoughts, Dr. Balakrishnan?
Yeah, I would say once again, it is not in the fitness of things that once a mandate has been given to the Reserve Bank. And let me tell you, I say this as somebody who's quite skeptical about the Reserve Bank's ability to control inflation. And I've done quite a bit of work on this. But I believe that once the mandate has been given, that you should allow them to get on with the job. Having said that, I would say that I don't particularly look at the economy quarter to quarter, but I'd just like to say in the last year, the provisional GDP estimate is 8.2%, which is extraordinarily high by historic standards. Government should be more concerned with inflation control now rather than be particularly concerned about growth. And that inflation control will require control of food prices. RBI has a very little role in this. And I just want to say a final thing. When much is said about let the RBI control core inflation, my work basically shows, and this is published, my work shows that RBI's attempt to control even core inflation is not very successful. Okay. And there's a very simple explanation of that. Okay. When you raise interest rates, firms with market power will pass it on as higher costs. Okay. And the impact of interest rates, therefore, on even core inflation is not very high.
Okay. Okay, well, this will become a little academic and I will pursue this line of argument. Give me a monosyllabic answer, three of you, before I take my first break. Sonal Verma, you are for a rate cut in December, right?
I was in favor in October, Lata.
Yeah. Rupa, for a rate cut or no in December?
No.
Dr. Balakrishnan?
I just want to say that I don't think rate cuts really have much of an impact.
No, sir. So, monosyllabic, sir. Monosyllabic. December, rate cut, yes or no? What do you want?
No.
No. Okay, so we have 2 nays to 1 yes. On that note, I take a break and come back to discuss the larger question of whether the flexible inflation targeting framework needs to be tinkered with at all. Back in a minute.
Because of the information that has been provided to us by partner nations, I have directed agencies within the Ministry of Transport and the Ministry of Energy and Petroleum to immediately cancel the ongoing procurement process for JKI expansion public-private partnership transaction, as well as the recently concluded Ketrago transmission in public partnership. I have stated in the past and now reiterate today that in the face of undisputed evidence or credible information on corruption, I will not hesitate to take decisive action. Accordingly, I now direct, in furtherance of the principles enshrined in Article 10 of the Constitution on transparency and accountability, and based on new information provided by investigative agencies and partner nations, that the procuring agencies within the Ministry of Transport and the Ministry of Energy and Petroleum immediately cancel the ongoing procurement process for the JKIA expansion public-private partnership